a war. And that is, I think, one of the central messages that we've sent out, that this is everybody, the whole world knew that if you attack us in this terrible attack which occurred, you can't but not retaliate. What kind of a country would you be if you didn't retaliate? So your own, in terms of, since you're a economic, economy channel, your strength as a country is not just economics. It's also what you do to protect your citizens and your business and everything that you stand for. And we've just today said, we will protect this. We will protect our country, which means you're a much stronger state than you were once. That, I think, is the central message.
Okay. So help us understand the course of action going forward as well, Dr. Tara, because as you've pointed out, this is well within India's rights. This is the correct response to what took place, where a very dastardly act was perpetrated. Civilians were targeted and attacked and killed in India. Here, the forces have not crossed over into that border. There has not been airspace that has been violated. It is a very surgical, precise attack and response. So help us understand the course going forward in terms of how diplomacy might take shape, because already you have international allies of India that have said and not said things very strategically. How do you see that pan out?
As you know, all these things have been, gamed in the National Security Council and elsewhere hundreds of times. Our targets identified, what is the reaction cycle. All this has been gone into hundreds of times. But the final bottom line is this: you have to stand up for yourself. Don't depend on outside actors. What you have to do, you got to do. Number two is, as far as we are concerned, it is something we were forced to do. That is what Pakistan wanted. They did this attack. They knew we would attack them. But we also, the main challenge with the political leadership is how to end this. Getting into a war is easy. Getting out of it is something else altogether, as you can see in Ukraine, in Gaza, elsewhere. Here, I think it's been a very mature, well-calculated decision. Now, I think the political leadership should say the diplomatic message should go out. We are done. We've sent a message. We are done. Now, Pakistan has the option to cooperate with us in ending terrorism across the subcontinent. Because Pakistan is the one who's been saying we are the victim of terrorism. We are the worst victim of terrorism. Okay, then fine. You can, let us together end terrorism, not just between our countries, but in the entire subcontinent. That is the diplomatic message which should go forward, keeping in mind war is an extremely expensive business. We were talking of, I think, 27 crores per hour in 1971. That is 1990 prices. That is expensive for us. For Pakistan, it would ruin them. That would be the end of them.
Important. Thanks so much, Dr. Tara, for joining us this morning. And as you pointed out, this has been planned, this has been strategized multiple times in the past, and this is simply par for the course. Think of it from that perspective as you start trade today. So that's one aspect. And Hiral pointed out earlier today, if you were watching, there are two important updates, very, very important updates that have taken place over the last 24 hours. One, of course, is the precision strike that has taken place, and that is Operation Sindoor. And the second very important update has to do with the free trade agreement between India and the UK. This is something that has been building for 3 years now, but it's important in the context of everybody scrambling to make bilateral agreements. Sajid, why is this important?
It's important from a point of view that, one, UK is the second developed country with whom India will have a bilateral trade agreement. The first being the Australia, which happened a couple of years back. And UK also puts, it's basically 90% of your, industrial products now go into almost, low tariff zone. And that's primarily because India already has agreement between Japan, Korea, and ASEAN for this for the free trade agreement, and which accounts for nearly 85% of those industrial products. So what India has done is given the same thing to UK, and that also becomes a template for the India-US bilateral trade treaty, which is expected, because where we have already in an advanced stage of striking a deal. What is important is that we are striking at two sides, one on the military side and one on the economic side, because we are trying to make sure that we are going about our business in a normal way.
It's a very important statement to make, because in the context of geopolitical tensions domestically, you're still a strong economic power and a growing economy, and everybody wants to make a deal with you.
And kudos to the government that they're looking at two things separately and focusing on them.
So while and what's interesting over here is 99% of your value in terms of Indian exports gets covered, right? I mean, $120 billion is what you're aiming for by 2030. And it also includes provisions on mobility for professionals, your regulatory alignment, your exemption from UK
One of the biggest thing was 14% of India's
contributions.
software exports goes to the UK.
In fact, I think Somit was doing that number crunching in terms of the sectors that land to benefit as well. Somit, if you would want to come in on that front.
So first is textile and garments. Now if you look at the import duties that is there in UK, it's around 8 to 12% on Indian apparels, and this will give them the duty-free access and would boost competitiveness against Bangladesh and Vietnam. For pharmaceuticals, there are regulatory hurdles and tariffs, but post this FTA, they would pharma companies would have better access to UK's NHS procurement, and there could be faster approvals as well. When it comes to auto and auto companies, Tushar will come in with more details, but to sum it up, if you look at UK has tariff on components and finished vehicles. Post this FTA, there would be easier exports of EV components, two-wheelers and precision parts as well. When it comes to gems and jewelry, current duty is around 5 to 12% on polished diamonds and gold jewelry, and post this FTA, there will be zero duty access which can literally double exports as per experts to the UK market. When it comes to IT and professional services, there would be easier work visas and mutual recognitions of qualifications like CA, IT, and law as well. And lastly, when it comes to food and agri products, this will give them enhanced access for products like tea, rice, marine products and spices. Also, shrimp companies would remain in focus on the back of this, and most importantly, alcohol companies that would remain, given the fact that they'll have easier access to scotch, which is one of the key raw materials. 150% was the import duty, which comes down to 75%, and they have a vision to bring it down to 40% over the next 10 years. So United Spirits, Radico Khaitan, definitely would benefit out of it.
But there'll be some alcohol companies that will lose out as well on this, because you will get cheap alcohol that could be coming into the country, right? So taking that into consideration,
the amount of alcohol that we import from UK is very minimal, but it's taking the bigger headline.
But it could increase, right? It could still increase
I would
on that
say
front.
IT companies are the biggest beneficiaries today, because 14% of the revenues or the exports are happening to the UK, and this temporary reprieve for the social security which has been provided for 3 years. Most of the IT companies who are posting their employees there are on short term, 2 to 3 years, and they will save on that cost which is coming in. Which
so
is
important.
There.
We'll pull.
And one more aspect I would add over here is in the auto space. We've spoken about a Tata Motors gaining.
JLR becoming more cheaper in India.
But a Hyundai and Maruti, in terms of the cars that will come into the country, will be way cheaper because of that 10%, right?
So competition for them.
Competition for them will increase, and probably don't be surprised if you see a negative reaction on a Hyundai and Maruti. Good amount of positivity in terms of Tata Motors. Mahindra will be depending on how it pans out, because they are still strategizing in terms of UK and Europe. They have not started, but they have plans to start exporting to UK and Europe. So those have opened up for an M&M. But Maruti Hyundai is what you want to see.
They do have a EV unit, I believe, in UK.
Yeah, so these two,
they're designing and developing unit is in the UK. Yeah.
That's what they've not started
So
exporting, but it's going to be interesting.
is important, though. Where the product is manufactured and exported from is important. All right, we'll get you more details on who benefits. Of course, watch out for the auto ancillary pack as well. That's another one that you should focus on. We've got stock-specific action to talk about, so do stay tuned. We've got India Market Open, or the pre-open session up next, so do stay tuned.
Apollo Tyres, now there's a buzz of a positive corporate development related to one of the related to its European operations of European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and there's dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm.
Welcome back. You're watching India Market Open, and there's so much that we've already spoken about, but we've not really spoken about stocks. So let's address that first before we get to our experts for the day. And there are a few very key updates, of course, on the earnings front that we'll talk about, and there are a few more stocks beyond that as well. But on my list, I've got a few stocks that you should watch out for. Godrej Consumer is the top of my list, and it's a thumbs down from my perspective. Why? Because you have an erosion that is taking place in the margins. There is pressure from palm oil prices that seems to have impacted the earnings in the quarter gone by. The margins have contracted to 9.1% compared with 10.1% in the comparable quarter, and the PAT as a result of which has fallen about 6.5% to 108 crore rupees or thereabouts. And this is below expectations. It's a miss on the PAT number and could have a bearing on the stock price in trade today. Of course, remember that it has moved up in the recent past. The next stock that I want to focus on is Kansai Nerolac, and here too there's another erosion of margins playing through. Of course, the competition in the space has been spoken about, but one would assume that going forward some benefits will play through on the raw material front at least, and so that could be a bit of a tailwind for this company and the other companies in this pack. But Kansai Nerolac seeing its revenue increase only about 3% on a year-on-year basis. The EBITDA is down about 7.4%, and the margins have contracted once again and come in at 9.1%. The PAT is down as well in this case. And finally, you have Radico Khaitan, where this is a thumbs up, and the revenue is up as much as 15% to 1,304 crore rupees. The EBITDA is up as much as 45%, and the margins have come in at 13.6%, and the PAT number is up as much as 56 or 59% or thereabouts, and this looks like a good number. Just a correction on my part, because I was looking at the numbers on my screen. Godrej Consumer, actually the margin is coming at 21.1%, and that is versus 22.3%. The net profit is coming at 412 crore rupees or thereabouts, and that compares with a loss in the previous quarter, 1,893 crore rupees. That is below the expectation. So it is a miss on the PAT front.
Right, so that's with regards to the three stocks that Alex is talking about. Two names that I want to highlight in today's session is also BSE. Again, a mixed set of numbers that have been reported. The top line has been slightly above estimates, operationally weak, and there has been a one-off reversal that has aided profitability this time around with regards to where BSE goes. So watch out for that one in trade today. And you have a Paytm that will be in focus as well. Again, it's a thumbs up, though the numbers have been below what the street was estimating. Revenues have seen an uptick of around 4.5% to 5%. What is interesting is that the loss number has widened to 554 crores versus 178 crores. That was the estimate. If you talk about the EBITDA before ESOP profitability achieved, the revenue has been below expectations, OPEX has been controlled, and a one-time loss has hurt profitability as well this time around. So these two will be something that we should be watching out for pretty closely. Somit, anything that you're tracking?
Well, the first and foremost thing that I don't think anyone has talked about is Manappuram Finance. That is one stock that we need to watch out for, given the fact that their subsidiary Asirvad MFI has reported numbers. Now, the subsidiary has reported a loss of close to 630 crore rupees. Now, this is much ahead than what the street was anticipating. The street was anticipating a loss of 270 crore rupees. As against that, they have reported a loss of 630. Now, what happens here is that because of this higher losses, Manappuram Finance on a consolidated basis might actually report a loss for the fourth quarter of FY25 as against analyst estimates of profit. So keep an eye out for Manappuram Finance in trade. The Asirvad MFI's JNP has also increased to around 8.5% as against 5.8 in the last quarter, while their capital adequacy has come down to 20.9% as against 23% in the previous quarter. Apart from that, it's MGL. The numbers on the face of it might look strong, but if you remove the one-off that is related to reversal of a provision made earlier of 63 crore rupees, the numbers are below street estimates. EBITDA is largely flat at 315 crore rupees as against a growth that was estimated, and the number was expected to come in at around 360. Also, the volume has increased just 11% on a YY basis and 2% on a sequential basis. This is also lower compared to what the street was estimating. As against its peer IGL, also if you look at the numbers, they are not as strong as what the street was expecting from Mahanagar Gas in the fourth quarter. And the last one is United Spirits. We already spoke about that. The company might benefit on the back of the UK FTA which has been signed. This will lead to lower this could actually boost the margins for the company if they decide to not pass on the entire benefit of the lower raw material cost that might come in for the company going forward on the back of the UK FTA.
Okay, so I do want to point out that these are only a few of the stocks. We'll talk about more, of course. Let's get our experts on for the day. We've got Chandan Taparia, who's a head of technical and derivatives research at Motilal Oswal, Mayuresh Joshi, head of research, Markets with India. Gentlemen, apologies for making you wait today. It's that kind of a day where we've had to deal with news as it's come through. Thank you so much for your patience. Chandan, I'll come to you first on the levels. As I know this is a difficult question to ask. Technicals in these kind of scenarios probably go out of the window, but in that context, what levels would you watch out for at the start and how would you trade today?
Yeah, Jai Hind, Jai Bharat. So thanks for having me. We have seen some volatile cues and India VIX is hovering near 18 marks. Higher VIX clearly indicates that some sort of roller coaster ride could be there, but the good part is even after all the volatile swings, the market is holding well about 24,200 marks. However, because of the geopolitical concerns and the weakness from the global market, we might see some profit booking decline. But I believe that till index holds above 23,850, 24,000, again buy on decline stance could continue. We need to keep in mind that index has already seen a rally of more than 2,500 points and completed 61.8% retracement after the corrective leap from 26,277 to 21,743. So this 24,550 zone could act as an immediate hurdle. Above that, only the fresh leg of rally will start to cheer 25,000 marks and above. But till that, we may retest the support of 23,850. So here suggestion is be very selective. VIX has to cool down, then only the stable move could be there. But short-term trend is positive. I believe 1 or 2 day might be there for consolidative move, but after that decline could be bought. So as of now, I'm closely watching 24,050 for immediate and 23,850 for positional as a key support for indices.
Any picks that you would be suggesting in this market right now, Chandan, or would you stay cautious? Would you wait on the sidelines?
So I'll be on sideline because Bank Nifty started to underperform. The major momentum in Nifty and broader market happened due to the 6,000 points rally of Bank Nifty, which rallied from 49,000 to 56,000 marks. But from last 10 days, it has been moving in between 54,000 to 56,000. And it seems that today it can break that support zone. And after breaking that, it might retest to slightly lower marks. So 55,000 is now acting as an immediate hurdle with base shifting to 54,500. And because of that, it can go down below 54,000. And if Bank Nifty witnesses profit booking, then Nifty can also go down to lower level. So either I'll be on sideline or will wait for some more consolidative move or retest of key support zone of 24,050 to again go for buy on decline stance in the broader indices.
Can you come in here? 24,000, do you think it's becoming a strong support for the Nifty here? Mayuresh?
Morning, Sujit. First of all, morning to Chandan as well. Jai Hind. I think very proud moment on what India has probably responded with in the first place. Second, I think there will be a knee-jerk reaction and markets will remain volatile. There are no two ways about it, right? But again, I think as you put out the graphics on the earlier strikes and the responses that the markets have probably given, I think you need to give it a few days for the markets to just settle down, let the nerves probably cool down as well. And therefore, a knee-jerk reaction is not ruled out. But does that mean there is a structural downside for the markets at this juncture? Probably don't think so.
Mayuresh, some of this has gotten sidelined a little bit because of everything that we've discussed since morning, but we've referred to it, the free trade agreement. I'm not sure if you've gotten through the details and what, according to you, are the key beneficiaries. A few stand out. Labor-intensive sectors, IT, for example, would be looked at, or even chemicals, for that matter. So what stocks or what companies would you be focused on?
I think it's, Alex, morning to you. I think it's
Morning.
going to be a mix of a lot of these sectors at play because individually, if you look at the sectoral allocation, textiles has a huge chunk in terms of what UK imports from India at this juncture. And obviously, I think in terms of the free trade agreement, textiles might benefit surely in terms of the quantum of imports that UK probably does. Obviously, there are other sectors as well, including chemicals, including footwear, including apparel makers that might also do well. But my focus would be on textiles. I think they've largely underperformed, Alex, to a large extent. And if you probably understand the context in terms of our positioning vis-a-vis Bangladesh or Pakistan or even China at this juncture, our take in terms of expectations of textile efficiencies getting built into balance sheets, a large part of their operations have become integrated, and therefore integrated players also export. You've got Vardhman, you've got KPR Mills as an example. The integration is world class as we speak. And therefore, I think textile players is something that I'll keep on my radar. They should probably be key beneficiaries of this agreement which has taken place.
Okay. Chandan, and I know that you said stay on the sidelines, but if you have existing positions, how do you deal with them? If you're currently holding on, what is your response to the latest developments?
So, if you look at the market movement, market is just corrected by around 200-300 points from higher levels because recently it made high near 24,589. And if you look at the bank nifty, it has seen corrective move 1500 points from the top. So I don't think that any measure meaningful corrective move has seen in the market in last 2 days. But those who are holding, they can apply the key levels as a support, try to exit in the bank nifty, let it witness a more profit booking decline. If someone is holding the Nifty for positional point of view, follow the support near 23,850, and better to go with very stock specific because at 18 weeks, the volatile swings cannot be ruled out. We need to understand that short-term trend has turned positive. FIs are continuously buying from last few days, but due to the couple of concerns and due to the higher volatile swings, the up and down move cannot be ruled out. So I think better to stay cool and calm, and those who are holding the position, they can go for some protective put or can initiate some bear put spread. But again, I want to be very clear that view is not negative. View is slightly decline, and we have to utilize the decline as a buying opportunity in next 2-3 days.
Right. Mayuresh, coming to you on one stock, Indigo is definitely going to lose out because of the conflict or the tensions that is there between India and Pakistan. That is one stock that we definitely know would lose out because of this. How are you looking at this stock? Would you advise your clients to buy the fall that we would see in Indigo? It's at least showing a downtick of 2% currently.
Well, again, I think there will be a sentimental reaction, right? Because what we're probably now looking at is longer routes, which we've already heard about, right? And the Pakistan airspace is probably closed. So I think a lot of the routes which happen from North India are probably getting diverted to a large extent, which probably adds to the cost. And the uncertainty specifically in this Fed might linger on in terms of how the performance of the stock might be. Having said that, I think the benefits that aviation companies will probably have is lower crude prices. So ATF prices are lower. 45% of their input costs are largely from ATF prices itself. And therefore, with lower prices and expectations of crude prices expected to stay in a range, will probably benefit aviation companies to a large extent. Again, I think the market share gains that Indigo probably has, because the fleet additions by competitors is still going to take time. And therefore, if one probably talks about competition intensity with more fleet being added by Air India, Vistara, and other players as well, I think it's going to take some while before the new fleet probably comes in, and therefore how pricing will get affected. And let's not forget demand. I think demand still remains strong all through the year as we speak. So there's going to be a sentimental reaction on the stock. But I'm not too overly perturbed. Whether I go in and buy in at this juncture, I think the move has been pretty strong for Indigo. But anybody holding Indigo should probably keep on with it.
Okay. All right. So I'm just also going to ask about crude oil prices. Mayuresh, if you have an opinion on this, we've seen a slight up move overnight, though that is, not ranking very high in the list of things that we've spoken about today. 63 though, dollars to the barrel for Brent crude. You've seen a reaction by oil marketing companies, and HPCL results came through as well. What did you make of that? And would you be buying into the oil marketing companies right now? Or would you hold your horses?
No, so Alex, I mean, we've always believed that OMCs as a player are always tactical momentum bets because there are too many variables to contend with. How prices will move, how crude prices will move, what happens to refining margins, what about demand supply dynamics, what happens to the downstream delta spreads, and therefore what happens to downstream product pricing in general. How do volumes play out? What is the pricing in terms of transmission volumes? I think all these variables are beyond control. And let's not forget the expectations in terms of regulatory controls that were expected to come out. That might not come up at all. And therefore, that creates an even huger risk as we speak. There are positives as well. I think the investments that they probably got in cross holdings, the dividend yield that stocks mete out, IOC in excess of 6.5%, the BPCL in excess of 4.5%. But is that the only factor that you probably go there and make them portfolio bets? I probably don't think so. I think so it's more tactical or momentum bets as I see it, and not portfolio bets.
Coming to you on Bank of Baroda, yesterday we saw a 10% downtick post the company reported its Q4 numbers. The verdict that is coming out is that the numbers were not as bad as what the street feared yesterday, which led to this 10% downtick. How are you looking at Bank of Baroda numbers, and do you expect a rebound in the stock to happen?
That's a possibility. And again, I think it's similar to what State Bank delivered in terms of numbers. I think the prima facie consensus on State Bank was that it's a soft set. But one must understand that the base that these banks are working on is pretty large. Also, let's not forget that the asset quality pressures have come off quite significantly. The NIM spreads contraction is something that one was really contending with. But if you're probably looking at a scenario that over the next few quarters, the interest rate cut cycle will be well and truly on, NIM spread should bounce back pretty smartly. The provisioning that they've done on their balance sheet remains extremely strong. And therefore, I think in the context of risk-weighted assets to balance sheets, cost-to-income ratios, restructured asset, the slippages ratios that these banks have reported, specifically in the last year, in 9 months, and the quarter gone by as well, we're probably expected to see that the parameters of the dynamics from the financial strength have largely improved and remain stable. Again, a lot of these banks have been very, very cautious in terms of credit underwriting. And as demand comes back, I think credit underwriting will improve. CASA deterioration is largely behind us. And therefore, I'm not too perturbed. I think numbers have been reasonable, both for State Bank, Bank of India, as you asked me. Ratings, rankings look fine. And therefore, I think as we head into the next few quarters, the recovery on all these parameters should support valuation and pricing.
Okay. All right. Chandan, I know that you said stay on the sidelines, but anything that you're seeing in the market that gives you reason to believe that there is a trade here?
Yeah, so I'll mix stock-specific trade with positive and the negative bias. First trade will be buy on Bharti Airtel. We have noticed that stock has been holding well, heading towards the new lifetime high territory, making high tops, high bottom from last 4-5 days. Even on the weekly chart, it has given a narrow range breakout. So first trade will be buy on Bharti Airtel with support of 1855. It can head towards 1970. The good part is that stock has margin of safety with lower beta, which also suggests the bullish stance of the counter from current level even after the market volatility. One idea that is on the sell on Union Bank with the view that selective PSU banks are witnessing profit booking. So Union Bank, we suggest to sell. The stock has seen a breakdown. A surpass is falling supply trend line and broken the key support zone. So recommending to sell on Union Bank with a stop loss of 121. It can drip down to us 112. So one buy. one sell idea
Right.
on Bharat.
Chandan, we're just 10 seconds away, but we'll come back to you on that topic. But banking is the space that everyone is betting big on. It's going to be interesting to see the kind of moves that we see in terms of today's session. Nifty 50 there on the screens right now. You are seeing cuts of almost 150 points coming in there. 24,240 is what you're tracking in terms of Nifty 50. Bank Nifty as well. We are pretty much at that 54,100 mark right now, but there is pressure, but not to that extent. Very similar to what implied open was indicating. Let's quickly look at the sectoral space as well. It's IT which is seeing cuts of around 0.8 to 0.9%. But before that, broader markets are going to be important. Mid cap index and the small cap index seeming to be slightly resilient. Small cap though is down almost around 0.6 to 0.7%. But the kind of cuts, that recovery is coming back. If you go to see Bank Nifty pretty much on the borderline, Nifty 50 as well, around 0.2% lower. In fact, Bank Nifty has come back into the green on the borderline as we speak. So I think markets don't seem to be nervous right now. That's what the indication, what we are picking up so far. Let's quickly pull up the heat map in terms of Nifty 50 to understand in terms of stock specific action. If you see the breadth is in favor of the declines. Names like Asian Paints, HCL Tech, Titan, HUL, Nestle. So it's the consumption pack that is seeing some bit of a hit. And again, that's what usually happens in a situation like this. When you're looking at geopolitical tensions, it's always the consumption pack which reacts negatively. Nestle also under pressure. ITC again down to the tune of 0.6%. What's leading? Tata Motors on the back of the India-UK FTA, one of the beneficiaries seeing gains of around 2%. Bharat Electronics on the front foot. IndusInd on the front foot as well. Hindalco, Shriram Finance, HDFC Bank. Coal India will be reporting numbers today, so that's a stock that you're watching out for. But clearly an interesting move that you're seeing overall. VIX is going to be important. 1.5% up move coming in on India VIX, 19.3. So yes, that cautiousness that continues to prevail. There is going to be heightened volatility because there are two important events that you're tracking today. The geopolitical situation, the strikes that India has made in terms of the 9 locations, that is what is causing this volatility. What is causing and giving you support today is the India-UK FTA, Alex, and that is what is absolutely getting translated because consumption seeing pressure. You have names which are benefiting out of the FTA, seeing some good moves today.
Yeah, and we're maybe trending into positive territory.
It's already come back into
it's already come back into the green. So let's focus on a few more stocks. You've hit the nail on the head, Hiral, about what is moving and what is not today. Of course, that FTA, the beneficiaries are going to be reacting in trade, but a lot of stocks also reacting to earnings. Let's pull up some of those stocks. First on the list is BSE. It is a strong growth that they've displayed despite the headwinds that they've seen in the quarter gone by and a few reactions to earnings there. You have Paytm as well, which is looked at as a positive number, all things considered. It is a narrowing of the loss that has taken place. Of course, there is a one-off, but the loss being less than anticipated is being seen as a significant positive for Paytm. Aarti Drugs also reacting positively, 5.5% higher on the back of strong global demand, which has led to revenue growth in the quarter gone by. Avalon Tech, let's pull up that one. The revenue is up as much as 58%. And the profit has tripled. It's a stock that is in the news on account of earnings, and several of those stocks, of course, reacting to earnings and strongly so in trade today. But Avalon, not one of them. It's down about 1% or thereabouts. Let's pull up something like a Prestige Estates Projects. Its project has seen sales of about 3,000 crore rupees or over that mark. It is reacting, but not very significant gains of about 1/3% or so. GMDC has signed a supply agreement with City Gold Pipes, also not moving too much today, up about 0.4% or so. And Polycab, there's a brokerage note that has come through. Jefferies has hiked its target price on this particular stock, and the stock is up about 0.75%. On the other side of the spectrum, on the downside, look at something like a United Spirits, because if there are beneficiaries to the trade agreement between the UK and India, there are also companies that stand to lose. However, the stock is gaining about 1% or so. We're talking about the implications of cheaper alcohol coming into India and the likelihood of it getting even cheaper down the line over the course of the next 10 years. Clearly, the street not too worried about it. Of course, the stock is a little volatile, a little choppy in trade. Manappuram as well. Somit told you about the key developments here earlier on in the show if you were tuning in, but the stock is not doing too much, just about flat in trade right now. Ashirvad has reported its numbers. It's a loss of 630 crore rupees. That pressure in the MFI space continues. Let's pull up the stock and see where it's going today at the start. But I wouldn't be surprised if there's a negative move here on Ashirvad. Avenue Supermarts, HSBC has downgraded and cut targets here. Let's see what it's doing in trade. It's just about 0.5% or so. And Interglobe Aviation, we're talking with Mayuresh about this. There are headwinds and tailwinds coming through. Headwinds in the form of air travel being affected by geopolitical concerns, tickets being cancelled or flights being cancelled, so that's a negative. But tailwind in the way of input costs going down, where crude oil prices have been benign and are likely to remain so in the near term, and that certainly is looked at as a positive. I'm sure that there are more stocks, Hiral and Somit. Somit, anything that you're seeing in the broader markets?
Right, one stock that stands out here is CG Power. Yesterday we had seen a sharp downfall after the numbers were reported. Mayuresh, what was your key takeaway that came in from the CG Power numbers and the con call? The stock is reacting positively. It's up 3% in trade today.
Actually, too many numbers, could not track it. So let me just have a look at those numbers.
Okay, no issues. I'll just take up another Piramal Enterprises. If you have looked at, it's up 4% post the company reported some kind of recovery that is coming in their financials, right?
So I think we still prefer the larger NBFCs, very honestly. I think our own take is that when the interest rate cycle starts going down, obviously I think the larger NBFCs are going to benefit a tad bit more for two reasons. One, I think in terms of their cost of borrowing matrix, I think that is well diversified, and that gives them the optionality in terms of ensuring that the cost of borrowing remains lower, and therefore the NIMs and spreads relatively start improving as we head into the next few quarters. The second aspect, obviously, is that with better rated NBFCs or corporates, the kind of expectation that one really has, specifically in terms of advances growth, and specifically, I think the kind of diversification that they've got on their advances as well, which is very well spread out. I think that gives them the additional advantage that most of the second-rung NBFCs might not have. So I think our focus might largely be depending on all these aspects put together, and therefore the leadership stocks in the NBFC space is something that we look at.
Right. One stock that we need to watch out for is Tata Motors, the top gainer in terms of Nifty 50 today, and that is on the back of the India-UK FTA. Very quickly, Chandan, what are charts indicating with regards to Tata Motors? And with this, if you can also pull up a Hyundai as well as a Maruti, because these two probably could be losing in terms of the incoming, cars that could be cheaper. So how would you look at these three counters?
Yeah, so looking at Tata Motors, after a long time, the stock is finding some buying interest. It has given a consolidative move, but now it seems for a consolidation breakout by forming a bullish candle on the daily scale. So because of that, some recovery could be seen, but one need to keep in mind that this is one of the volatile counter in the entire market in the auto space. So as of now, 652 could act as a key support to drive the swing towards 700 marks. Looking at Maruti and other name, so Maruti has seen the positive stance. In fact, Maruti looks quite promising. Positive price pattern clearly indicates some up move could be seen. However, it has been consolidating in a range from last 4 days, but multiple supports are visible at 12,250. So with the support of 12,250, Maruti has potential to rally towards 13,000 and beyond. And if we talk about the Hyundai and other name, I believe buying interest could continue. And Mahindra is also one name which has seen buying interest. Supports are gradually shifting higher. M&M has support near 29.90. With the support, it can head towards 31.50 kind of level. So Maruti and Mahindra are likely to be two preferred pick, apart from some morning surge in Tata Motors.
Right, so that's with regards to the auto pack. But thank you, Mayuresh and Chandan, so much for joining us on the show and sharing your views, your commentary, and your top stocks for the day. But let's also now welcome in Gautam Shah, founder at Goldilocks Global Research. Gautam, good morning and welcome to the show. And what a day to speak to you once again in this week itself. How are you looking at levels? Do you think they hold any water, taking into consideration two aspects? One, in terms of Operation Sindoor, and two, in terms of the India-UK FTA. What are markets telling you?
Hi, good morning. So I think more than the levels, the screen I think is most important, and I think the screen has looked incredibly resilient in the recent past. Yes, the market has been a little nervous in the last 1 week, and we've seen weakness in the mid cap and the small caps. But I think the way the Nifty, the Bank Nifty and the top 100 has stood out in these last 7-8 days, where the market was a little nervous, I think it's quite commendable. And I've always believed that the price action is the best judge of geopolitics. And with what has happened overnight, I think from a market's perspective, it's always good to live out of fear than live in fear. So I think keeping that in mind, we will need to keep a watch on India VIX. And I think it's still very early days, so let's go through the press briefing at 10 a.m. and then probably we can take a better call. But I think from a market's point of view, I think sticking to quality, sticking to investment, sticking to SIP, I think is the key message for your viewers. I don't think this is the time to panic in any which way. The markets are anyway not panicking. And since we've already rallied about 2,700 points from the recent lows, even if we were to correct 2-3-4%, I think it's quite normal in the overall scheme of things. And the UK treaty, I think, is definitely the step in the right direction. That should give the markets a lot more confidence.
Right. Gautam, an important point that you made with regards to investors, or, we should not be looking at any panic situation. But do you think this should be the opportunity to buy and start nibbling in?
Every single geopolitical factor in the last couple of years, whether local or global, has been an opportunity. And I think this is a fear which we've been living with for the last couple of decades, since the time at least I've been watching markets. So I think if you're sticking to quality, if you're sticking to the top financials, the PSUs, the metals names, the real estate names, I think the market is quite internally strong, because when I look at many of the sectors, and the global market steady. I mean, look at what the US is doing. European markets are back close to lifetime highs. I think the markets are looking quite safe and not as worried as the news flow might sound.
Gautam, hi, morning. Alex here. The point that you made on resilience is it's pretty clear on the screen as we look at it. You've had the benchmark that has moved into positive territory as well. Would you say that the up move that we witnessed over the last month or so, some people have said, okay, on the fundamentals, on the valuations perspective, 25,000 on the Nifty 50 is not overvalued. It's baking in future earnings and the slight improvement that we've seen in certain pockets. On the technicals though, are we in a situation where a consolidation at this point is not something that would be too surprising?
I think the comeback of the markets in the last 1 month is a mirror image of the comeback in the economy. The fact that we now have global stability, we've gone through the Trump tariff news flow, I think that's done and dusted. And the fact that domestic liquidity remains quite strong. We went through a terrible bear market in the broader markets in the last 6 months. And despite that, the SIP figure continues to stand at 25,000 crores. And despite the recent correction, you have the Nifty valuation still at about 22 PE. So I think we are far, far away from overbought valuations. And that's probably the reason Indian markets have come back so strongly. So I think there is definitely more to come. And once this geopolitical situation stabilizes, I believe that the markets are actually heading towards levels of 25,500. Yes, you could have, all kinds of things happening over the next 1 week. So you can't be the best judge for the short term. But I think the medium term, long term for the India story remains sorted.
Gautam, if you look at the FMCG basket in the last couple of months, it has outperformed the market in a big way. Obviously, this is after an underperformance that we had seen earlier. But do you expect this outperformance of the FMCG basket to continue even going forward? And any top picks are there?
See, the FMCG index lost about 25% in 6 months. Now, that's probably the worst correction FMCG has seen in a long, long time. And I think, again, that was a mirror image of the possible slowdown in the economy. And in the last couple of weeks, we've seen some rebound, no doubt about it. But I still don't call it an opportunity because the valuations are extremely high. And we need to go through the complete result season before we can take a call that the economy is actually back on track. So I'm still a big fan of financials. I think I've said this on your channel every time I've appeared. And I still believe that at 55,000 on the bank Nifty, there is room for a move towards 60,000. And many of these top banks are looking very well placed. So in terms of risk reward, I'm still batting for financials and the PSU basket.
Banking names, where would your preference lie, within private banks or PSU banks?
I'll stick to the private banks. I think they've stood out beautifully in terms of relative strength. The earnings visibility is there. Obviously, smart money seems to be hiding there. And, the top 3 or 4 names, HDFC, ICICI, Kotak Bank, and even the top PSU, which is SBI, I think all 4 for me stand out and I think should deliver supernormal returns over the next 6 to 12 months.
Gautam, how would you look to play the defense pack at this moment? If you can just pull up the Nifty defense index as well to understand the kind of reaction, because in times of uncertainties like this, that's what reacts. There you go. 1% up move coming in on that front. Anything that you would like from this space?
I think it was just a seasonal play, at least in the last couple of weeks, and that's probably the reason defense stocks did very well, BDL, BEL, and some of these stocks. And today also we are seeing an uptake, but I think this will die down gradually. So I don't see defense as a big opportunity right now. Hopefully the event is done and dusted. I mean, that's what we would like to believe in and want to hope. And if that is the case, I don't think event is an opportunity.
Okay. Any stocks that you are focused on that are reacting to the latest update on the free trade agreement? And of course, this is a very, very topical thing. Reactions taking place right now. Gautam, I'm talking about something like a Tata Motors, where it's the top performer at this juncture on the Nifty 50. It's moving from levels that it has plumbed. I think a lot of people anticipating that there would be continued pressure, but this is a shot in the arm, at least fundamentally. It's up about 4%. Would you trade this at all?
Absolutely. I think the auto index went through a very large correction. For the last 1 month, the entire space has been basing out beautifully. So the price correction ended, the time correction started. And I think a couple of days back, the time correction ended. And now with this news flow, I think this is a catalyst for the entire auto sector to come back. So Tata Motors, M&M, Maruti, I think they all look very interesting from a medium-term standpoint.
What about, so I'm just wondering, do you also track oil and the price movement that you've seen in the recent past? Of course, there's quite a bit that is playing out in that oil production block as well, in terms of supply and the way that some of those oil-producing nations are moving, Saudi Arabia in particular. But oil prices have been under a little bit of pressure. Either a view on the oil companies or the oil marketing companies and the potential upside there, or oil as well?
See, I think there are 3 external mega trends that seem to have started in the recent past. Number 1, NYMEX crude sustaining below 67 only means that the 2-year-long breakdown has finally taken place. And there is a possibility of NYMEX crude actually going down to levels as low as 53, maybe even a 47. Now, that's a very big development which the world markets need to assess. Secondly, I think the appreciation of the Indian rupee. After a long, long time, we seem to have confirmed a large reversal, and it looks like this appreciation is here to stay. And thirdly, I think the fall in the dollar index, which is at levels around 9,900, and that index also seems to have topped out. And I think all these 3 external factors are actually positive for India. And that's probably the reason we remain very bullish on the OMC pack, and I think OMCs could be returning after almost 2 years of underperformance.
Gautam, thanks so much for joining us this morning, and the points that you've raised, stock specific and otherwise, well made. Thank you so much once again for taking the time. All right, we have to slip into a very quick break, but take a look at the screens. You have the equity markets in India that have moved into positive territory across the board, not just for the benchmark Nifty 50, but even the broader markets have moved into the positive. The Nifty 50 also benefiting from an up move in the Nifty Bank, which is trending higher. It's about 0.8%, if I'm not mistaken. Let's pull up that. Okay, 0.7% higher for the Nifty Bank. We have to slip into a very quick break. We've got more market action on the other side, so do stay tuned.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Apollo Tyres, now there's a buzz of a positive corporate development related to one of the related to its European operations or European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and there's dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm.
India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system.
Okay, there's been quite a lot to unpack over the course of the last couple of hours, and we've brought you the updates as and when we've gotten them. So in case you're tuning in for the first time right now this morning, you will of course know about the operation that took place by the Indian Armed Forces at 1:44 a.m. This is a targeted attack on terrorist establishments in Pakistan and in Pakistan occupied Kashmir. 9 locations were hit, and this is very clearly specified by the armed forces that this was non-escalatory in nature. We've spoken to former officers of the armed forces, and they have informed us and through us you that the equipment that was used was in order to ensure the most precise attack possible. And the attempt was to not have an escalation in any form or fashion. Very clearly, they have targeted terrorist establishments and not military bases. Now, in that context, you have had a reaction in the Indian stock market, but the Indian stock market also reacting to other developments. We've been speaking about the free trade agreement that has been signed between the UK as well as India. This is something that was coming for a while. It's been worked on for a period of 3 years. And in that context, you had an initial down move for the benchmark Nifty 50. We've moved up to positive territory, and there is strength across the board. We've got Nilesh Shah of Envision Capital joining us this morning. Nilesh, thanks so much for taking the time. And your initial reaction, of course, we've had quite a few people come through and say that this is an important step. It's an important statement that has been made by the Indian Armed Forces, by the Indian establishment, and your reaction to how the markets have taken this.
Well, this is a befitting reply to whatever Pakistan has indulged in. So it's probably the most appropriate response, and maybe there would be probably even stronger measures from India as basically a response or a rebut. So I think honestly a great move by India and by the Indian Army, and hope that we continue to kind of give such hard-hitting responses to them. Clearly, the market too has taken this in its stride. Though this was a bit of a known unknown that yes, India would strike, India would respond. So markets have taken it in its stride, and basically the market is probably having a view that the uncertainty is behind us, the event is behind us, and now let's get back into earnings, liquidity, flows, and some of the other positive macro developments like the free trade agreement. So I think on the whole, the market also seems to have kind of moved on from where it was.
Then the question that arises is that if you have the opinion that you're going to stay invested for the long term and you want to participate in probably the best growth story anywhere in the world. How do you deploy funds, considering that you've seen a considerable up move over the last 1 month, perhaps India playing catch up with certain other markets? But are you comfortable with valuations as they stand right now, or do you say that we've reached perhaps a little uncomfortable zone in a few pockets, and how would you be deploying your money?
I'd probably say that we are in a fair value kind of a zone. And clearly, India has always remained expensive on a relative basis to other emerging markets or to basically world markets as well. And that's because the Indian economy has been growing at a higher pace. Corporate earnings have been growing at a higher pace, and most important of all, the way India has been fiscally responsible. Corporate India too has been fiscally responsible with a deleveraged balance sheet and a very high ROE, return on equity, and return on capital employed versus rest of the world. So clearly, India deserves to kind of trade at a premium valuations. I think what's going to happen going forward is that basically both India's economic growth and corporate India's earnings growth will positively surprise us. And why I say this is because clearly crude, which has been our biggest challenge, clearly has fallen and is in a structural decline. That will lead to lower inflation, lower interest rates, lower cost of capital, which I think will trigger investments and will trigger earnings growth as well. So that I think is clearly the biggest driver. The bunch of free trade agreements that India is on the verge of signing or has just signed, be it the United Kingdom or potentially with the European Union by the end of this year, or with the United States maybe over the course of next 1 or 2 quarters, all of this is going to bolster India's global trade. And these are things which essentially are extremely positive. These are all early and nascent signs of India kind of sustaining a very, very strong growth ahead. So I believe that while the markets have moved up in the last 1 or 2 months, but probably on a 6 months basis, they're still kind of flat. And we are also going to see now a whole bunch of FII flows coming in. With a weaker dollar and stronger growth of India, you would also see that kind of missing link also fall in place. So on the whole, I believe that India's valuations are justified based on higher growth, responsible capital efficiency, and a very, very strong flow of liquidity from both domestic as well as global investors.
Okay. In that context, Nilesh, tell us about the companies and the sectors that you feel, based on the scorecard on earnings that we've seen so far, have surprised you on the positive side, because there have been a few surprises, a few situations where margins have improved, operational efficiencies have come through, and there have been surprises on the bottom line front. So where have you focused your attention?
So clearly financials has been a very, very strong pocket in this earnings season. And when I say financials, it's not just the big banks. I'm also alluding to, say, the mortgage lenders, affordable housing financiers, payment companies. These are all who have done extremely well and have reported a very strong set of numbers for the quarter gone by. Second segment which is done reportedly well is basically alcoholic beverages. That as a segment has done very well. Hospitality has also reported some good numbers for the quarter gone by. And then businesses which are proxy to domestic demand and building materials, like say for example the wires and cables companies have reported again good growth, good revenue growth, good margins. So there have been several sectors which have reported double-digit growth for the quarter gone by, and the outlook still continues to be very, very strong for them.
So, Nilesh, good morning, Hiral on this side. Great time to speak as well. Now, we've spoken about, what or where are the pockets of growth. Taking the India-UK FTA into consideration as well, lot of opportunities that do emerge. How would you look at the sectors with regards to exposure in the UK and any picks that could come in from that space?
Well, on an immediate basis, I clearly believe alcoholic beverages is a sector which is likely to benefit from the trade treaty. Over the medium to long term, textiles could be a potential standout sector. Clearly, the free trade agreement puts basically the Indian textile exporters on a favorable kind of a wicket, and along with the problems that are there in neighboring Bangladesh, clearly India is at a sweet spot. So clearly believe these two sectors are likely to benefit, one from even a short to medium term perspective, and the other from a medium to long term perspective.
Okay. One last question with regard to the auto pack, and you've seen Tata Motors react on the downside when those auto tariffs came through in the US. Of course, since then, the company coming out and saying that it's restarted exports to the US, and this UK trade deal is positive from their perspective, assuming that you are going to be able to bring in vehicles that are going to be cheaper into India. So JLR benefits, I would think. Do you have a specific comment on Tata Motors?
Yeah, they would clearly, I think, yes. I think it basically gives a relatively easier passage to JLR to kind of come in and start to sell. And you're seeing that as basically a positive reaction to the Tata Motors stock price. Obviously, of course, the stock has fallen quite a lot. And that's also because on the domestic side, there is increasing competitive intensity. Pickup in demand for CVs has been relatively muted. So currently, of course, Tata Motors is not just about JLR. It's a combination of several other businesses, a few which are expected to do well. And then there's an impending kind of a demerger as well. So I think clearly on the whole, yes, the Indian auto pack should also be basically overall be fine. Clearly, the price points at which the other peers of Tata Motors operate at, they operate at lower price points. So to that extent, they don't have much to worry from this trade agreement.
Nilesh, thanks so much for joining us this morning. Pleasure speaking with you as always. And, as always, I look forward to the next chat.
Thank you so much.
All right. By the way, so there is chop and churn in the Indian equity market. You have the benchmark indices that are just about treading water at this point, flat in trade in the broader markets, also giving up a little bit of the gains that they had earlier on in the session. The mid-cap index now trading with cuts of about 0.1% or so. The small-cap index down about 0.6%. This is really par for the course. And India VIX, which is the measure of volatility that you should be tracking, it's been trending higher in the recent past. It is now at very close to 20 levels, which you should watch very closely. Of course, we'll talk about all of this and more. We're also building up towards the statement that we're expecting from the Indian Armed Forces. That statement expected to come through at 10 a.m. And before that, or 10:30 a.m. is what I'm hearing right now. But before we get to that, and before we hear from the Armed Forces about the operation that they conducted overnight, we've got a few more voices that will help you understand this move by the Indian Armed Forces and what it means for foreign policy, what it means for the defense forces and India's security and stability going forward. So stay tuned to NDTV Profit. We have to slip into a very quick break. Back on the other side with more.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Apollo Tyres, now there's a buzz of a positive corporate development related to its European operations or European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm.
Welcome back to India Market Open. Interesting day in terms of where markets are concerned as well, along with the geopolitical updates that we have been picking up, because the markets are seeing a good amount of recovery, but pretty much on the tender hooks right now. But let's quickly head across to Lieutenant General Rakesh Sharma, distinguished fellow at VIF, and we have Pramit Pal Chaudhary, head South Asia, Eurasia Group Foreign Policy, joining in. Welcome to the show, gentlemen, and a pleasure to speak to you as well. My first question coming to you, let me come to you, Pramit. We spoke earlier as well in terms of what the updates were. Now that India has striked back, this is a strong message that has gone to Pakistan as well. Your initial comments and what's the kind of follow-up you are expecting?
So India, I think, did exactly what many of us would have expected: a restrained airstrike against terrorist sites. India deliberately avoided going for military sites and avoided using ballistic missiles. And there are a number of reasons for this. One, that the military hitting a military site would have resulted in almost certainly in a degree of escalation, because the Pakistani army would have felt the necessity to hit Indian military sites as well. And ballistic missiles we can't use because you cannot distinguish between whether they are conventional or nuclear. So automatically that leads to another threshold problem. We probably have lost a few aircraft because of our restraint, because we did not suppress air defense systems. Our fighter pilots had to fly into air defense missiles from Pakistan. But ultimately, India has shown one that is prepared to retaliate. It is prepared now to retaliate in inhabited areas. Before, we only used to hit terrorist camps that were isolated, but now we hit the headquarters of Lashkar in Mudke and Jaish-e-Mohammed in Bhawalpur, both of which are towns. But we have done it in a manner that the international community will have absolutely no problems with. Will this stop terrorism from Pakistan? Unfortunately, no, but we can probably win several years of peace as a consequence. You may remember the last time all of this happened was 2019. So in effect, we won 5 years of calm from Pakistan. But I think finally what is really coming out in this is that you also have a situation where everybody's looking at India and saying, okay, you're now 11 times Pakistan's GDP. Your defense budget is 10 times theirs. Pakistan is actually stupid to be sitting there and trying to poke you. There's no real support for Pakistan at this point.
Yeah, Pramit, I'll circle back on that. I want to get Lieutenant General Rakesh Sharma's view on the nature of the attack and the restraint that has been shown. Can you put this in context for us? What Pramit has just mentioned is the lack of the use of ballistic missiles. Of course, I do want to stress here that there is no confirmation from the armed forces or any Indian source of a loss of aircraft. So bear that in mind. But in the context of what could have been done and what has been done, this is an appropriate response in your opinion?
Thank you for inviting me. The fact is that the targets selected, we've been last 20-25 years talking about Muridke and Bahawalpur and maybe even Raiwind, which are the actual headquarters of the major organizations, the terrorist organizations in Pakistan. And, to hitting them is absolutely a legitimate target. Jaish-e-Mohammed and Lashkar-e-Toiba are the fountainheads of terrorism as it pertains to India, has also walked across to Afghanistan and other places. So that's an absolutely legitimate target. The targets in proximity to line of control, which is the targets from Muzaffarabad, which is also an air hit target, and also the targets like Kotli and Bimbar and Chakamru and Sialkot are actually targets which are in the proximity, but they are not exactly like surgical strikes. They are fairly in depth and could have been hit by artillery, except Muzaffarabad, of course. And so the selection of targets was well done. This selection of weapon systems was well sorted out. The one thing that we feel should be proud of is that there is a intensive use of technology in this kind of operation being carried out, which includes loitering ammunition, cruise kamikaze drones, and of course there is missiles being fired from the aircraft. So when you combine it together, there is a tri-service operation being carried out with 3 services, and the coordination is tremendous. It is also heartening to see the message being conveyed that we have even say autonomous ammunition in form of loitering, which was utilized for targeting the adversary. Now, if you add this together to the total grammar of warfare, which includes what happened to IWT, and already the water in Marala headworks in Chenab, just across the border, is fairly scarce, and the headworks are getting dried. So when you add all this together, the grammar of the anguish India have done is great. And I would also like to compliment saying that the name selected, Operation Sindoor, this is not a kind of a name that we in uniformed forces would select. We would must go to Thunderbolt or Thunderstorms. But Sindoor obviously is a political push, and it actually shows that this is what has been carried out is retribution to the families, including those newlyweds who lost their dear husbands in that Pahalgam operation. So Operation Sindoor is also a great message across for retribution. And I'll end by saying just one more issue, that we should not deem it that things are finished here today. There would be a response. Pakistan is a rational armed forces. They are well trained.
Lieutenant General Rakesh Sharma, I will interrupt over here. As you're saying that there will be a response, but if you have to take into consideration Uri 2016 to Pahalgam 2025, India has given a strong response to 3 major terror attacks. Taking this point into consideration, do you think there could be some bit of a shift that could come in terms of stance from Pakistan's side, or do you think nothing can move them?
Look, the 1,000-year war when Zulfikar Ali Bhutto said in 1965, and the war by 1,000 cuts is what's been continuing in so many years. There have been intensive attempts on our part to be diplomatically nice, people-to-people contact, economic trade, and you name it. Every measure has been tried out, including Lahore Yatra and Prime Minister Modi's visit across to Nawaz Sharif. Did anything change the thought and the character of being as Pakistan as an entity? It didn't do so. To say that there will be a dramatic shift after yesterday night's these targeting of 8-9 places, would there be dramatic shift? No. It has been indoctrinated in their culture. It's the way they have changed the history of that country. And anti-Indianism and Jammu and Kashmir are issues that bind Pakistan as a glue. Otherwise, it will split into many countries. In this direst of circumstances in which the Chief General Munir places itself, he found this right excuse to galvanize his own nation, to say that, our nation is threatened by India and we must respond. So, the fact of the matter is that it won't go away. This 1,000-year war and this so-called 1,000 cuts won't go away. We have to be prepared for a long-drawn, protracted conflict and keep the pressure on. We shouldn't relax after what has happened yesterday night.
Prameet, comment a little bit quickly on this, because we're heading into a commercial break. But before we get into that, I want your opinion on the response or lack of it from India's major partners. And an important point was made earlier in the day by one of our panelists, who said that at the same time as a strike is taking place like this, there are trade deals that are being conducted and announced. So there is laser focus on either side.
So I think part of the game for India right now, and I think that's a part of the Modi government's overall strategy in Pakistan for the past 10 years, has been that India has been overly focused on Pakistan, that India is now simply too large to be sitting there and allowing our entire foreign policy, everything we do, our economics, to be focused on Pakistan. Pakistan's GDP is now smaller than that of the city of Mumbai. It's smaller than that of Bangladesh. So we have to show that India will continue to function as a rising power, irrespective of what Pakistan is an irritant. So Modi has not had a summit meeting other than a surprise visit to Nawaz Sharif's family wedding. He's never had a summit meeting with the Pakistanis. He's just said, I'm not even bothering to negotiate with you on Kashmir. What happens in Kashmir will be done unilaterally by India. And you have less and less capacity to do anything about it. Look at the fact that diplomatically, in 2019, after the Balakot strikes, the four traditional supporters of Pakistan, UAE, Saudi Arabia, China, and the US, 3 of them said India has a right of response. And
Absolutely.
China, Pakistan's biggest ally, said we're neutral. You guys work this out yourself. Pakistan is completely isolated, and that continues to be the case today, except for the one nation of Turkey.
Absolutely, I think, and that's the direction that we're seeing since quite some time. But thank you, Lieutenant General Rakesh Sharma and Pramit, for joining us on the show and sharing your views. We'll quickly slip into a short break. Be right back. Stay tuned.
That's huge. That is a biggie. It's out of there.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
Apollo Tyres, now there's a buzz of a positive corporate development related to one of the related to its European operations or European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and there's dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm.
Good morning and welcome back to Earnings Edge right here on NDTV Profit. We're now taking stock of Polycab after the company reported its Q4 earnings. Revenue grew by roughly 25% in this particular quarter, with the overall EBITDA margins coming in at 14.7%. We've also seen over a 30% growth in profits for the company, coming in at 727 crores, beating estimates as well. To talk more about the results as well as how does the outlook for FY26 look, we're now joined by the management of the company, Mr. Inder Jaisinghani, who's the CMD of Polycab India, as well as Mr. Gandharv Tongia, who's the CFO of the company as well. Gentlemen, thanks so much for joining in, and a very good morning to you. Just want to start off first with the results, Mr. Jaisinghani, to you first. The wires and the cables growth in this particular quarter was really strong, and something that we're seeing in the industry as well. If you can just talk us through what's been the market environment as of now, and do you see this kind of growth continuing in this next quarter as well?
Yes, I think so. It will be continued because of the huge infrastructure work is going on, and especially green energy, solar and wind is going full-fledged. Railways expanding huge, and industry is also increasing their capacity because they feel that future demand is going to be good. And main point is what today the people of the world is respecting India because they feel that India will be the best country to import from there. So demand is continuously because of our infra development is huge, so it is going continuously. So today I think so everybody have got a huge orders to feed that infra work and the solar and green work, and the building construction also is going in a big way in the 2-tier and 3-tier cities also.
And Mr. Jaisinghani, do you see in the current market that the cables growth is outpacing the wires growth, or is there anything on that front that you can quantify for us?
No, it is both on both sides. Cable is more demand because of the infra side, but building construction also demand is good, reasonably good.
Mr. Tongia, let me come to you as well on the numbers specifically, because you've seen a very strong expansion in terms of margins as well in this particular quarter. Could you just talk us through first also on the commodity cost side, because we did see some kind of reprieve in terms of copper prices, but if you can just talk us through for Polycab, how was the margin profile in this particular quarter maintained, as well as something on the copper side as well?
Sure. Thank you for having us. You're right, this was the best quarter as well as the best annual performance in the history of the company. We were able to breach 22,000 crore rupees of annual turnover. We are now the largest company in the electrical sector. And profitability wise also, we were able to reach to almost 2,000 crore rupees, again the highest in our sector. On the margins, it's comparable with last year and within the guided range of 11 to 13%, slightly better than the guided range. We believe that this range is maintainable, and as part of Project Spring, which is the next 5 years transformation project, we would be able to grow at a rate 1.5x of the industry growth rate with similar margin profile. As far as commodity prices are concerned, we have a very robust risk management framework wherein we are able to pass on, in general, the movement in prices, whether it's upward or downward, to the end customer, and we don't take any positions as such on the movement of copper or aluminum prices. And to that extent, we believe that we should be able to maintain our EBITDA range of 11 to 13% in years to come.
So, Mr. Tongia, would it be safe to say that because, the quarter three copper prices were really high and that's passed on in this particular quarter, so that's helped the margins, and since some softness has been seen in the copper prices, we should expect at least a decent margin profile to continue in Q1 as well?
So the way our industry works is the movement in metal prices is generally passed on to the end customer on a monthly rest. And we have a hedging framework wherein we need not to price all the material we have. We have a very derivative wherein we can price it at a subsequent rate. And you are right that we should be able to, by and large, maintain the EBITDA profile on an annualized basis, which currently hovering around 13% and within the guided range or about the guided range of 11 to 13% in years to come.
Mr. Jaisinghani, let me just come back to you on the export side, because export as a percentage of revenue for you is roughly 6%. Last year it was 8%. What is the kind of scenario that you're looking for this year specifically? Because you have mentioned your next 5-year guidance to be 10% in terms of export revenue. In this particular year, was it demand side that you saw an issue where we've seen the export revenue come down as a percentage of sales? Anything that you can quantify for us?
Yeah, because of changes in the countries like US, because of duty, what is going to be, nobody knows what. So people have stopped doing stock, but now we are not going to depend on one country. We are already exporting to a number of countries, but now we will focus a separate division of the sales, which is going to look only export. OEM, distributor network, EPC, contractor, and green energy, and all type of. So like how we are doing in India, same kind we want to do in the total world, all countries. So we'll focus on maximum countries this coming 5 years. And I think so we'll cross more than 10% of the revenue for export.
And just I want to take the conversation forward to your second segment as well, which is FMEG, fast moving electrical goods. That has actually seen an EBITDA break even in this particular quarter, and compared to the same time last year, the margins were roughly negative 12%. So it's been a huge jump in EBIT margins. Just talk us through what has led to firstly this, coming into EBITDA break even. It's something that you've guided for over the last couple of quarters, that business is growing. And anything on segmental side as well? Do you see that fans is continuing the growth in that segment, or are you seeing some other products that are taking the leap in FMEG?
No.
So FMEG, you're right, has registered a fair amount of growth over the last few years. We started a particular transformational project Leap in 2021. And in last 2.5 years, we have made a lot of structural changes, both on the GTN side, on product innovation side, internal team organization. And now we have started getting benefits of all those changes which were made between 2 to 3 years in the last 2 to 3 years. This was the first quarter when FMEG registered a growth, which is sizable, as well as the profitability was there. We believe that in the years to come in FMEG, we would be able to grow at 2x of the industry growth rate, and the EBITDA margin would be in the vicinity of 8 to 10%. However, it will take a while. We won't be able to reach there overnight. Perhaps a time frame of 5 years is what we should pencil in when we are thinking of FMEG profitability.
And Mr. Jaisinghani, in terms of product profile as well, has the fan segment taken the leap in FMEG, or is there the other segments that are contributing there in terms of growth as well as margins?
Let me pick that up. On the FMEG, I think it is across all the product categories. We are getting a lot of traction on the solars, where we supply the string inverters. Fan is another business category where there is a fair amount of growth. The important ones are, outside these two, are switch gears, which is very profitable business in general at the industry level, as well as pipe and conduit. So across all the product categories, we have received good traction, and the growth is impressive across all the categories.
Just last couple of questions. One was on capacity utilization. What are the current capacity utilization levels for you? Because we've seen that the capex has continued roughly 950 crores in this year. Last year it was 850 crores. What is the current capacity utilization for you in terms of wires capacity, wires and cables?
So we believe that to support our top line growth, which was in the last year around 25%, and overall, if we were to see last 5 years revenue CAGR, it is in mid-20s, we have to invest more in capex. In last 5 years, we improved our capex rate. It used to be around 200-300 crore rupees 5 years back. Last year, as you rightly mentioned, we did close to 960 crore rupees. Over the next 5 years, we would probably invest anywhere between 6,000 to 8,000 crore rupees in the form of capex, predominantly in the cable and wire facilities, both for domestic business as well as exports business. As Indrabhai alluded a while back, that there is a fair amount of demand on exports, and exports should be able to contribute 10% to the consolidated turnover by 2030, and that is where we have to invest more capacities. As far as the utilization is concerned, it is hovering between 70 to 80%, and it is slightly lower on the wire side and slightly higher on the cable side, but in general between 70 to 80% of capacity utilization.
And is there any kind of outlook to increase the capacity more into cables going forward, because it is of course the high margin business as well? Anything, I'm not sure if you've given this data point out, but is there any kind of outlook on that for the future capex which is coming in? Is that more focused on the cable side?
You are right. We, for example, don't have sizable presence in something called extra high voltage, EHV. So we are setting up that factory that is going to take a significant proportion out of the total outlay of 6 to 8,000 crore rupees. And the balance will be done across cable, wire, and a small proportion will be invested in FMEG as well.
Just one last question to both you gentlemen, and you all can come in on separately as well. You mentioned a 1.5x growth in core segments for wires, almost a 1.5 to 2x in FMEG as well. But recently we've seen a few large corporates enter the wires and cables segment as well. And while that has been caused some concern, but the numbers are also reflecting strong growth parameters for most companies, including yourself as well. How do you both see these entries of potential conglomerates getting into this segment specifically, either for their own use or for as a new business venture? And is there any aspect that you see that this will only expand the market going forward? How are you, both of you guys, seeing this?
So basically, market is expanding, and there's a lot of business is done by the unorganized sector, which is going to be hit by all of the organized sector, and demand is increasing. Any one or two pillar new will come, will not make any difference. I think so. It is a good sign on the country, and market is growing. So we are not worried about. We have to work hard, and little margin will go down because of the competition increasing initially.
And Mr. Tongia, you mentioned in your presentation that you roughly have about 25 to 26% market share now in the organized space. So currently, how much of the wires and cable space is organized, and what are you expecting over the next 2 to 3 years in terms of the organized share to increase to? I'm not sure if you give out this number, but if you could just give us some insight into that aspect.
Yeah. So as Indrabhai mentioned that. Over the period, unorganized proportion to the industry has decreased. To my mind, it would be around 25-27% now, and the balance would be the organized one. And with the players like us as well as the other large players, we believe that over the period, the customers would like to go for better product, good quality product, the products which are more safer, and that is where the customer will end up choosing organized sector output rather than unorganized. And that is where all of us, including the large companies, would continue to gain more market share, predominantly from the unorganized.
Well, that was the management on Polycab talking about the quarter gone by, what they expect for the current fiscal as well as the competition in the space. But moving on, Bank of Baroda's Q4 results failed to cheer the street after its NII missed estimates. Now, we spoke to the MD and CEO, Deobatar Chand, on the quarter gone by and the outlook for the coming quarter. Listen in.
The market seemed to have reacted after your numbers came out. A dip in the net interest income, 3% profit growth. Having said that, a 5,000 crore net profit, which is obviously something that is a milestone for the bank. So I just wanted to get your sense as to what you would highlight in these results, apart from the headline numbers.
So thank you very much for inviting me. And let me say the bank had a very strong, full financial year in terms of both on the top line and bottom line. And one of the key highlights of the performance is that the bank has been consistent both in terms of the growth and also on the profitability. If I look at this year, FY25, the deposit growth 10.3%, the domestic advances at 13.7%. The profitability, the net profit has grown by 10.1%. We achieved almost a standalone net profit of 19,581 crore. This quarter, the profit has been more than 5,000 crore. We have more than 5,000 crore of net profit 2 quarters in the entire 4 quarters. So it has been a very strong profitability. At the same time, we had the growth numbers. And in terms of the margin, last time itself, I revised the margin guidance to 3 to 3.10. And we have come true on the guidance of posting a full year 3.02 for the global NIM.
Okay.
While saying so, the domestic NIM is at 3.18. Since we run a larger book on the international, obviously the impact is on the global NIM, but the domestic NIM is very strong. At the NIM of 3.02, possibly in the large PSP peers, we are maybe one of the top quartile in terms of percentage. So the bank has been very consistent in terms of both how do you again construct the business in terms of growth, whether it is the retail growth or MSME growth or agri growth. At the same time, if you look at the CASA percentage of the bank as on 31st March, we are at 39.97. And that puts us into the top quartile in terms of the CASA percentage across both public and private together. So in that way, I think the bank is driving very strongly in terms of both growth, profitability, and the underlying theme, which is again very, very significant, is that on the one of the best asset quality for the bank that we achieved in this financial year, and more particularly for the last quarter. On the GNP and net NPA trending almost downwards for last 10 quarters. 2 point again I would highlight, the slippage cost has been much lower than the guidance. It is at 0.7. The credit cost is 0.47. The slippages this year has been lower than that of last year. The recovery has been more than the last year. And the slippage also lower than the recovery of this year. So that puts absolutely on a beautiful asset quality as far as the bank is concerned. I think the bank has a very strong profitability, growth, and a strong financial year FY24-25.
Okay, let me break it up into multiple parts. The first one being growth. As far as your deposit growth is concerned, the international book has actually pushed up the overall deposit growth figure. But when it comes to credit growth, the domestic book is the reason why your credit number is overall looking better or better off. I wanted to understand what the dynamics in your international business are at this point in time. Why is the deposit growth higher there? Is it primarily because you're offering a higher interest rate to those customers? And the second part, as far as your domestic and international loan growth is concerned, what does this FY26 look like for you, and where will you grow?
See, in terms of the guidance, both on the deposit advances, we continue to hold the same guidance, 9 to 11% on deposit and 11 to 13 on the advances. Slightly, we'll give a full year guidance once we complete June, but my sense is that as liquidity has back into system, we can upsize on the growth guidance that we had given for last year, and also while articulating now on the growth guidance. In terms of the domestic and international, the domestic advance growth is 13.7%, international at 8.8%. On international market, I think actually the market had good opportunity in the past, and the growth was very significant at that time. But now the international market on the rate cycle, they have moved faster than the domestic market. So at this market, we want to grow aligned to the domestic growth, maybe around 10-11%, because that is what the number we give for corporate advance growth. So the international book would continue to grow in line with the domestic corporate loan growth that we are talking about. On the overall mix of the advances, the corporate would grow at 10%. The retail is growing almost at 20% for the last many quarters, continue to grow at the same level. One of the significant part of the growth story is that both MSME and agri, the growth this year has been 14.2%, which is almost 350 BPS, almost higher than the growth we had in last year. So in overall mix of on the advance book, the RAM book would continue to do faster growth, the corporate would grow at 10%, international to grow at 10%. I think that would put us somewhere into 13.5 or 14% growth for the full year. In terms of the international deposit and the advances that we talked about, The international advance book is almost 2.2 kind of a number lakhs crore. The deposit has been lower, but there is an international investment book therein. So a portion of the borrowing we had in the past we converted to deposit because that was the cost optimization. We wanted that to happen. So because of that, the growth in international deposits slightly higher than the advances.
Understood.
Otherwise, it is fairly balanced out.
Understood. Coming to the broader international sentiment at this point in time, there's a lot of global uncertainty that exists because of the tariff announcements from the US. Are you seeing any impact on that business, and to what extent do you think your wholesale book might get hit because of this?
See, in terms of wholesale book, both in major economies like US, UK, GCC we operate, Singapore we operate. I mean, there are two factors which decide our growth strategy. One is on the underwriting quality, second is on the pricing. So many of these markets, the pricing it has gone down vis-a-vis the earlier rate we used to contract that. So then potentially it has an impact on the international NIM and impacting the domestic NIM, where again we are debating on the 3.02 numbers that we have. So considering that on the underwriting quality, I mean, in spite of all these headwinds, we don't see any change in those quality on the asset side or the offerings happening in the market as on today. So again, on the pricing side, because of that, we started to slightly lower the growth and to grow at around 10-11%, not more than that. So there are global uncertainty, but I don't think the impact is on the assets that we have as on today in the book are going to be on the offering where we participate in those syndicated market. So I think there the asset quality, there is absolutely no challenge on that. But on the rate side, because those markets, the rates have gone down, not giving us much opportunity to get a better spread. So we decided to moderate that.
Is there any demand impact of these uncertainties?
No, there is no demand impact. The syndicated market going to be strong in all these markets. We do participate, but then some of the time because it doesn't give the right name, so we don't consider them sometime. But I'm not seeing any change in demand because of bit of what you can say, both in terms of geopolitical, what is happening globally, at the same time bit of the tariff that we are talking about that impacting some of the economics over there.
Okay. Let me touch on the asset quality front. Now, when we look at the slippages figure for this quarter, you had a higher slippage ratio, about 1%. And most of the slippages are coming in from your MSME and some of it from retail book. I wanted to get a sense as to what the outlook on the slippages is looking like at this point. Yes, the slippages numbers has been trending down overall for Bank of Baroda, but are you seeing any risks probably worth watching out for?
No, absolutely not. The reason being, let me put the context right. On the full year basis, the slippage has been lower than that of last year. And I'm also giving a guidance that the recovery has been higher than that of last year. I mean, that is numbers that we have seen on the numbers there. So if you compare the Q4 only vis-a-vis the sequentially Q3 of this financial year, I mean the 24-25, the slippage is 2,800 crore. And the Q4 of last year, the slippage also was at 2,800 crore. The slippage in Q3 was 2,500 crore. So there is an incremental, increase of only 300 crore vis-a-vis the Q3, although it is flat vis-a-vis the Q4 of last year. If you look at the recovery of Q4 over Q3, the incremental recovery is higher than 300 crore. So even if there is a 300 crore, which is a very, very small number considering my asset book of 11 lakhs crore, that's not giving any direction. On a full year basis, the slippage ratio is 0.7 as compared to 0.99 of last year. And this quarter slippage is also roughly around incremental 300 crore vis-a-vis the Q3. That also being well negated by the higher recovery in Q4 over Q3. There is no underlying challenge therein. These are all very threshold. Even if you look at the MSME, GNPA and the retail GNPA, these are much lower, much below the threshold. That's why the GNPA for the bank as a whole is at 2.3, 2.26. So I think it's not elevated anyway. It's much under the threshold of the bank in terms of how do you operate both on the recovery and slippage.
And what does FY26 look like in terms of, is there a guidance at all that you want to give?
So we continue to have the guidance on the slippage ratio and the credit cost, although we are, outperforming positive side on both the ratio for many quarters now. But we continue to hold the guidance as it is on the slippage 1 to 1.25 and credit cost below 0.75. Our guidance on the GNPA, net NPA, we always say that we are trending downwards. The reason being, almost from 2.9 we have come down to 2.26 in GNPA. So, the level of 2.26 in the market is also one of the very good number that we can, think of for any bank. So, having achieved those kind of number, the incremental further actually very difficult to quantify a number, but the trending would be clearly downwards on that.
Okay. You spoke about the CASA ratio, bringing you to the top quartile of Indian banking system. There has been a general sort of belief that maybe between 30 and 40% CASA ratio is now the ideal number. The times when banks used to have 40% plus CASA is probably now not going to happen because people have found other avenues to put their money in and not necessarily keep it in the bank in their savings account. I wanted to get your view. Is that something that we should expect, that banks will now only report CASA below 40%?
See, there are a couple of underlying change happening in the market, no doubt about it. Particularly pockets which are very strong on CASA, there is a change because people are going towards other markets. But having said so, we as a bank, clearly we maintain at the top quartile. One factor that you can say that there was a bulk deposit market which was growing faster for last many years. And last 2 years we contained significantly on that. If I give numbers around June 2023, the bulk deposit as a percentage of total deposit was 20%, and in spite of the expansion in the book, as on today is also at 20%. If you look at the growth of bulk deposit at 11.1, completely aligned with the growth in retail term deposit. So that is also one factor which define. We are not trying to grow at any cost. We want to be cost tight on the deposit, because we need to, mindful of the margin that we need to maintain. I think there are a couple of, the change of preference in terms of it's not permanent, that is what my sense. The deposit market gives you a certain return, at any point of time. So based on that, I think there would be a bit of pullback that is going to happen depending upon the way the capital market would be here. Yes, maintaining a 40% ratio would be tight, but bank like us should try to be at that range at least for a couple of years from now.
Okay, and the rate cut is likely going to impact your NIM then, at least in the first half.
Actually, you are absolutely right. Actually, this quarter is a inflection point in terms of two changes when you migrate from Q4 to Q1 of this year. One is there is a rate stance change, another is a liquidity change. So it's a very significant way to map it out this quarter, because we need to watch this quarter very carefully. That's why the margin, if you look at the overall full year, be aligned with the current year margin, but the Q1 possibly would take the impact, and it would pick up in Q2, Q3 and Q4.
Okay.
So the overall margin...
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Apollo Tyres, now there's a buzz of a positive corporate development related to one of the related to its European operations of European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and there's dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm.
NDTV Profit. I am Mahima Vachrajani and with me is Alex Matthew. The big news, of course, that we've been tracking today is Operation Sindoor. India has carried out precision strikes overnight at 9 targets in Pakistan-occupied Kashmir as well as Pakistan. We'll be soon cutting into the presser as the Indian Army will be addressing. But before that, let's take a quick look as to how the markets are doing. Well, the markets have recovered from the day's lows. In terms of the Nifty 50, it's trading around 0.14% lower. Right now, let's pull up the Nifty 50 and the Sensex, the benchmarks in fact, and see how they're faring in trade today. Off its day's low point, of course, but down by about 0.15%. There was a sharp recovery in the early trade, but there was then downtake that was seen. But the stock, the markets are again recovering. In terms of the broader markets, the mid-cap 150 in green, it has upheld the kind of gains it had in the morning, up by about 0.2%. In terms of the small cap 250, under pressure and moving in lockstep with the benchmark indices, the small cap 250 is down by about 0.15%. Let's pull up the Nifty heat map and see what counters are buzzing in trade today. There you go. The counters like Tata Motors, which is up 3% in trade as we speak, and this is on the back of the UK FTA. Some stocks under pressure. Asian Paints ahead of its results, down by about 1%. Grasim down by about 1%. Sun Pharma also down by about 1%. Power Grid doing well in trade today, up by about 1%, followed by SBI Life as well. Let's pull up the sectoral heat map and see how sectors are faring in trade today. In fact, let's pull up the entire heat map. There you go. Nifty Media under pressure, down by about 0.9%. Nifty Auto seeing gains of about 0.5%. The entire PSE index seeing gains of about 0.2%. Nifty Metal also seeing gains of about 0.16%, but other counters are under pressure. Nifty Realty down by about 0.8%, Nifty FMCG down by about 0.7%. In fact, in the history also we have seen that whenever there has been conflict between India and Pakistan, defensives have lagged. That is your Nifty FMCG and your Nifty IT is something that have underperformed. Sectors that have done well or outperformed include your banks, your capital goods, your real estate. Let's pull up the BSE 500 and check where which counters are buzzing in trade today. There you go. There's Godfrey Phillips down by about 4%. Chambal Fertilizers down by about 4%. Bombay Bumrah down by about 3%. Aarti Drugs, on the other hand, is gaining 15%. Wellspun Living on the back of again UK FTA trade up by about 11%. Paytm up by about 6.7%. But Alex, you know, like I was saying, it's interesting how to see as to how markets have done previously in the past when there has been India-Pak conflict, and there have been initial drawdowns, but they're followed by a quick or sharper recovery in the markets as well.
But important, and before we get to some of that, important to talk about what has occurred so far. And I'm sure that you've been looking at the screen since morning, so you will be aware of what has taken place. We're going to be listening to the joint briefing by the Indian Armed Forces. There's, as we understand it, going to be a statement that is made about what took place overnight. What we know so far, of course, is that this is called Operation Sindoor, and it's been pointed out to us by former army officers and specialists in the space that the tagging of the name Operation Sindoor is also a strategic move by the Indian Armed Forces and the Indian administration. The messaging is very clear that this is a strong response to what was a dastardly attack by militants, by terrorists in India's region, in the north, and this is a response to that. It's a very targeted military action on specific terrorist establishments in Pakistan and Pakistan-occupied Kashmir. This is the first phase of a response, and everything that you're witnessing right now is related to that. In all probability, you're going to have some clarity that emerges on what was done by the Indian Armed Forces, how this attack took place, how this surgical strike took place. And as Mahima was pointing out, the response to recent attacks, and I say recent, I'm talking about within the last decade or so. If you talk about Pulwama, if you talk about Uri, you talk about the latest attack as well. The response to that is a very targeted strike. And you had a former army officer talk about the fact that there's no ballistic missiles that have been used in this scenario, because it's important to note that when a ballistic missile is fired, it's very difficult to understand whether it's a nuclear warhead or otherwise. So they have used drone strikes, they have used specific targeting equipment to hit targets that were predetermined, and there is no military establishment that was struck across the border. Now, how have markets reacted? Let's take a look at the screen right now just to give you some perspective. There's been quite a bit of chop and churn. What you're seeing on the screen is images that have come through of strikes that have taken place. But we have live visuals from New Delhi where the army is set to give its briefing. This is a joint briefing that is taking place. We're going to hear from them very, very quickly. Of course, you see the name that is being given, Operation Sindoor, the Indian government being very clear in the messaging that it is taking. You've had responses from India's closest allies. You've had the US that has been consulted in this situation. There has been discourse between India and the US. The US administration, including President Donald Trump, has come through and made a statement about it. In fact, what has been evident seemingly to people that are watching this is what has not been said more than what has been said. Of course, Donald Trump saying that it was unfortunate. But let's listen into what is being said at that press briefing.
नमस्कार। इस ब्रीफिंग में शामिल होने के लिए आप सभी का धन्यवाद। जैसा कि आप सभी जानते हैं, 22 अप्रैल 2025 को लश्कर तैयबा से संबंधित पाकिस्तानी और पाकिस्तान प्रशिक्षित आतंकवादियों ने भारत में जम्मू और कश्मीर के पहलगाम में भारतीय पर्यटकों पर बर्बरतापूर्ण हमला किया। 25 भारतीयों और एक नेपाली नागरिक को कायरतापूर्ण मौत के घाट उतार दिया गया। मुंबई के 26 नवंबर 2008 के हमलों के बाद ये भारत में हुई किसी आतंकवादी हमले में मारे गए आम नागरिकों की संख्या की दृष्टि से सबसे गंभीर घटना है। पहलगाम का हमला अत्यधिक बर्बरतापूर्ण था, जिसमें वहां मौजूद लोगों को करीब से और उनके परिवारों के सामने सिर पर गोली मारी गई। हत्या के इस तरीके से परिवार के सदस्यों को जानबूझकर आघात पहुंचाया गया। साथ ही उन्हें यह नसीहत भी दी गई कि वे वापस जाकर इस संदेश को पहुंचा दें। यह हमला स्पष्ट रूप से जम्मू और कश्मीर में बहाल हो रही सामान्य स्थिति को बाधित करने के उद्देश्य से किया गया था। चूंकि पर्यटन फिर से अर्थव्यवस्था का मुख्य आधार बन रहा था, इस हमले का मुख्य उद्देश्य इसे प्रतिकूल रूप से प्रभावित करना था। पिछले वर्ष आप सभी जानते हैं 2.25 करोड़ से अधिक पर्यटक कश्मीर आए थे। इस हमले का मुख्य उद्देश्य इसलिए संभवतः यह था कि इस संघ राज्य क्षेत्र में विकास और प्रगति को नुकसान पहुंचाकर इसे पिछड़ा बनाए रखा जाए और पाकिस्तान से लगातार होने वाले सीमा पार आतंकवाद के लिए उपजाऊ जमीन बनाने में सहायता की जाए। हमले का यह तरीका जम्मू और कश्मीर और शेष राष्ट्र दोनों में सांप्रदायिक दंगे भड़काने के उद्देश्य से भी प्रेरित था। इसका श्रेय सरकार और भारत के सभी नागरिकों को दिया जाना चाहिए कि इन प्रयासों को विफल कर दिया गया। एक समूह ने खुद को रेजिस्टेंस फ्रंट टीआरएफ कहते हुए इस हमले की जिम्मेदारी ली है। यह समूह संयुक्त राष्ट्र द्वारा प्रतिबंधित पाकिस्तानी आतंकवादी समूह लश्कर ए तैयबा से जुड़ा हुआ है। यह उल्लेखनीय है कि भारत ने मई और नवंबर 2024 में संयुक्त राष्ट्र की 1267 कमेटी की सैंक्शंस मॉनिटरिंग टीम को अर्धवार्षिक रिपोर्ट प्रस्तुत की थी, जिसमें टीआरएफ के बारे में साफ इनपुट दिए गए थे। इससे पाकिस्तान स्थित आतंकवादी समूहों के लिए कवर के रूप में टीआरएफ की भूमिका सामने आई थी। इससे पहले भी दिसंबर 2023 में भारत ने इस टीम को लश्कर ए तैयबा और जैश ए मोहम्मद के बारे में सूचित किया था, जो टीआरएफ जैसे छोटे आतंकवादी समूहों के माध्यम से अपनी गतिविधियों को संचालित कर रहे हैं। इस संबंध में 25 अप्रैल को यूएन सिक्योरिटी काउंसिल प्रेस वक्तव्य में टीआरएफ के संदर्भ को हटाने के लिए पाकिस्तान के दबाव पर भी ध्यान दिया जाना चाहिए। पहलगाम आतंकवादी हमले की जांच से पाकिस्तान के साथ आतंकवादियों के संपर्क उजागर हुए हैं। रेजिस्टेंस फ्रंट द्वारा किए गए दावे और लश्कर ए तैयबा से ज्ञात सोशल मीडिया हैंडल द्वारा इसको रीपोस्ट किया जाना इसकी पुष्टि करता है। चश्मदीद गवाहों और विभिन्न जांच एजेंसियों को उपलब्ध अन्य सूचनाओं के आधार पर हमलावरों की पहचान भी हुई है। हमारी इंटेलिजेंस ने इस टीम के योजनाकारों और उनके समर्थकों की जानकारी जुटाई है। इस हमले की रूपरेखा भारत में सीमा पार आतंकवाद को अंजाम देने के पाकिस्तान के लंबे ट्रैक रिकॉर्ड से भी जुड़ी हुई है, जिसके लिखित और स्पष्ट दस्तावेज उपलब्ध हैं। पाकिस्तान दुनिया भर में आतंकवादियों के लिए एक शरण स्थल के रूप में पहचान बना चुका है। यहां अंतर्राष्ट्रीय स्तर पर प्रतिबंधित आतंकवादी सजा पाने से बचे रहते हैं। इसके अलावा पाकिस्तान ने इस मुद्दे पर विश्व और फाइनेंशियल एक्शन टास्क फोर्स जैसे अंतर्राष्ट्रीय मंचों को जानबूझकर गुमराह करने के लिए भी जाना जाता है। साजिद मीर का मामला, जिसमें इस आतंकवादी को पाकिस्तान ने मृत घोषित कर दिया था और फिर अंतर्राष्ट्रीय दबाव के परिणाम स्वरूप वो जीवित पाया गया, इसका सबसे स्पष्ट उदाहरण है। यह स्वाभाविक है कि पहलगाम में हुए इस हमले से जम्मू और कश्मीर के साथ साथ भारत के अन्य भागों में भी आक्रोश देखा गया। हमलों के बाद भारत सरकार ने स्वाभाविक रूप से पाकिस्तान के साथ संबंधों को लेकर कुछ कदम उठाए। आप सभी उन निर्णयों से अवगत हैं जिसकी घोषणा 23 अप्रैल को की गई थी। तथापि यह आवश्यक समझा गया कि 22 अप्रैल के हमले के अपराधियों और उनके योजनाकारों को न्याय के कटघरे में लाया जाए। हमलों के एक पखवाड़े के बाद भी पाकिस्तान द्वारा अपने क्षेत्र या अपने नियंत्रण वाले क्षेत्रों में आतंकवादियों की इंफ्रास्ट्रक्चर के विरुद्ध कार्रवाई करने के लिए कोई स्पष्ट कदम नहीं उठाया गया है। उल्टे वो इनकार करने और आरोप लगाने में ही लिप्त रहा है। पाकिस्तान आधारित आतंकवादी मॉड्यूल्स पर हमारी खुफिया निगरानी ने संकेत दिया है कि भारत के विरुद्ध आगे भी हमले हो सकते हैं। अतः इनको रोकना और इनसे निपटना दोनों को बेहद आवश्यक समझा गया। आज सुबह, जैसा कि आपको ज्ञात होगा, भारत ने इस तरह के सीमा पार हमलों का जवाब देने और उन्हें रोकने तथा उनका प्रतिरोध करने के अपने अधिकार का प्रयोग किया है। यह कार्यवाही नपीतुली, नॉन एस्केलेटरी, आनुपातिक और जिम्मेदारीपूर्ण है। यह आतंकवाद की इंफ्रास्ट्रक्चर को समाप्त करने और भारत में भेजे जाने वाले संभावित आतंकवादियों को अक्षम बनाने पर केंद्रित है। आपको यह भी स्मरण होगा कि 25 अप्रैल 2025 को संयुक्त राष्ट्र सुरक्षा परिषद ने पहलगाम आतंकवादी हमले पर एक प्रेस वक्तव्य जारी किया था, जिसमें आतंकवाद के इस निंदनीय कार्य के अपराधियों, आयोजकों, फाइनेंसरों और प्रायोजकों को जवाबदेह ठहराने और उन्हें न्याय के दायरे में लाने की आवश्यकता पर जोर दिया गया था। भारत की आज की इस कार्रवाई को इसी संदर्भ में देखा जाना चाहिए। Good morning. Thank you all for joining this briefing. As you are all aware, on April 22, 2025, Pakistani and Pakistan-trained terrorists belonging to the Lashkar-e-Taiba carried out a savage attack on Indian tourists at Pahalgam in Jammu and Kashmir in India. They murdered 26 people, including one national of Nepal, causing the largest number of civilian casualties in a terrorist attack in India since the 26 November 2008 attacks in Mumbai. The attack in Pahalgam was marked by extreme barbarity, with the victims mostly killed with headshots from close range and in front of their families. Family members were deliberately traumatized through the manner of the killing, accompanied by the exhortation that they should take back the message. The attack was clearly driven by the objective of undermining the normalcy returning to Jammu and Kashmir. In particular, it was designed to impact the mainstay of the economy, tourism, with a record 23 million tourists visiting the valley last year. The calculation presumably was that harming growth and development in the Union Territory would help keep it backward and create fertile ground for continued cross-border terrorism from Pakistan. The manner of the attack was also driven by an objective of provoking communal discord, both in Jammu and Kashmir and the rest of the nation. It is to the credit of the government and the people of India that these designs were foiled. A group calling itself the Resistance Front claimed responsibility for the attack. This group is a front for the UN-proscribed Pakistani terrorist group Lashkar-e-Taiba. It is notable that India had given inputs about the TRF in the half-yearly report to the monitoring team of the UN's 1267 Sanctions Committee in May and November 2024, bringing out its role as a cover for Pakistan-based terrorist groups. Earlier too, in December 2023, India had informed the monitoring team about Lashkar and Jaish-e-Mohammed operating through small terror groups such as the TRF. Pakistan's pressure to remove references to TRF in the April 25 UN Security Council press statement is notable in this regard. Investigations into the Pahalgam terror attack have brought out the communication notes of terrorists in and to Pakistan. The claims made by the Resistance Front and their reposting by known social media handles of the Lashkar-e-Taiba speak for themselves. Identification of the attackers based on eyewitness accounts as well as other information available to law enforcement agencies has also progressed. Our intelligence has developed an accurate picture of the planners and backers of this team. The features of this attack also tie in with Pakistan's long track record of perpetrating cross-border terror in India, which is well documented and beyond question. Pakistan also has a well-deserved reputation as a haven for terrorists from around the world, with internationally proscribed terrorists enjoying impunity there. In addition, Pakistan has been known to willfully mislead the world and international forums, such as the Financial Action Task Force, on this issue. The Sajid Mir case, in which this terrorist was declared dead and then, in response to international pressure, brought back to life, found alive and arrested, is the most glaring example. The latest attack in Pahalgam has understandably generated deep anger in Jammu and Kashmir and in other parts of India. Following the attacks, the government of India naturally responded with a set of initial measures relating to our engagement with Pakistan. You're all aware of the decisions that were announced on the 23rd of April. However, it was deemed essential that the perpetrators and planners of the 22nd April attack be brought to justice. Despite a fortnight having passed since the attacks, there has been no demonstrable step from Pakistan to take action against the terrorist infrastructure on its territory or on territory under its control. Instead, all it has indulged in are denials and allegations. Our intelligence monitoring of Pakistan-based terrorist modules indicated that further attacks against India were impending. There was thus a compulsion both to deter and to preempt. Earlier this morning, as you would be aware, India exercised its right to respond and preempt as well as deter more such cross-border attacks. These actions were measured, non-escalatory, proportionate, and responsible. They focused on dismantling the terrorist infrastructure and disabling terrorists likely to be sent across to India. You would also recall that the Security Council on 25th April 2025 had issued a press statement on the Pahalgam terror attack, underlining, and I quote, the need to hold perpetrators, organizers, financiers, and sponsors of this reprehensible act of terrorism accountable and bring them to justice, unquote. India's latest actions should be seen in this context. Joining me for this briefing on our actions earlier this morning are Colonel Sophia Qureshi and Wing Commander Vyomika Singh. I will request them to share some details regarding Operation Sindoor with all of you.
सुप्रभात देवियों और सज्जनों, मैं कर्नल सोफिया कुरैशी और मेरे साथ विंग कमांडर व्योमिका सिंह आज आपको 6 से 7 मई 2025 की रात 1:05 से 1:30 बजे के बीच भारतीय सशस्त्र बलों द्वारा अंजाम दिए गए ऑपरेशन सिंदूर के बारे में जानकारी देंगे। ऑपरेशन सिंदूर 22 अप्रैल को पहलगाम में हुए विभत्स आतंकवादी हमले के शिकार मासूम नागरिकों व उनके परिवारों को न्याय देने के लिए लॉन्च किया गया था। इस कार्रवाई में 9 टेररिस्ट कैंप्स को टारगेट किया गया और पूरी तरह से इसे बर्बाद किया गया। पाकिस्तान में पिछले 3 दशकों से टेरर इंफ्रास्ट्रक्चर का निर्माण हो रहा है। इसमें रिक्रूटमेंट, इंडोक्ट्रिनेशन सेंटर्स, ट्रेनिंग एरियाज व लॉन्च पैड शामिल थे, जो पाकिस्तान और पाक अधिकृत जम्मू कश्मीर POJK दोनों में फैले हैं।
Operation Sindoor was launched by Indian Armed Forces to deliver justice to the victims of Pahalgam terror attack and their families. 9 terrorist camps were targeted and successfully destroyed. Over the last 3 decades, Pakistan has systematically built terror infrastructure. It is a complex web of recruitment and indoctrination centers, training areas for initial and refresher courses, and launch pads for handlers. These camps are located both in Pakistan as well as Pakistan-occupied Jammu and Kashmir areas. Some of the well-known training camps are located, as you can see on the screen. They are distributed from Savai Nala in the north, counting to approximately 21, ending at Bhavalpur to the south.
इन लक्ष्यों का चयन विश्वसनीय इंटेलिजेंस सूचनाओं के आधार पर हुआ ताकि आतंक गतिविधियों की रीढ़ तोड़ी जा सके, और यह खास ध्यान दिया गया कि निर्दोष नागरिकों और सिविलियन इंस्टॉलेशन को नुकसान न पहुंचे।
The selection of these targets for Operation Sindoor was based on credible intelligence inputs and role of these facilities in perpetrating the terror activities. The locations were so selected to avoid damage to civilian infrastructures and loss of any civilian lives. This was done with due diligence and the camps selected for targeting and their engagement will now be shown to you one by one.
पीओजेके के टारगेट मैं आपको बताना चाहूँगी। सबसे पहले सवाई नाला कैंप मुजफ्फराबाद, जो कि पीओजेके के लाइन ऑफ कंट्रोल से 30 किलोमीटर दूर है। यह एक लश्कर तोयबा का ट्रेनिंग सेंटर था। 20 अक्टूबर 2024 सोनमर्ग, 24 अक्टूबर 24 गुलमर्ग, 22 अप्रैल 2025 पहलगाम, इन हमलों के आतंकियों ने यहीं से प्रशिक्षण लिया था। सैयदना बिलाल कैंप मुजफ्फराबाद, यह एक जैश ए मोहम्मद का स्टेजिंग एरिया है। यह हथियार, विस्फोटक और जंगल सर्वाइवल ट्रेनिंग का केंद्र भी था। गुलपुर कैंप कोटली, यह एलओसी से 30 किलोमीटर दूर था। लश्कर तोयबा का बेस था जो रजौरी पुंछ में सक्रिय था। 20 अप्रैल 2023 को पुंछ में और 9 जून 2024 को तीर्थ यात्रियों के बस हमले में यहीं से आतंकी को ट्रेन किया गया था। बरनाला कैंप बिम्बर, यह एलओसी से 9 किलोमीटर दूर है। यहाँ पर हथियार, हैंडलिंग, आईडी व जंगल सर्वाइवल का प्रशिक्षण केंद्र था। अब्बास कैंप कोटली, यह एलओसी से 13 किलोमीटर दूर है। लश्कर तोयबा का फिदाइन यहाँ तैयार होता था। इसकी कैपेसिटी 15 टेररिस्ट को ट्रेन करने की थी। अब मैं पाकिस्तान के अंदर के टारगेट से अवगत कराना चाहूंगी। पहला, सर्जल कैंप सियालकोट, यह अंतर्राष्ट्रीय सीमा से 6 किलोमीटर की दूरी पर है, सांबा कटवा के सामने। मार्च 2025 में जम्मू एंड कश्मीर पुलिस के 4 जवानों को की जो हत्या की गई थी, उन आतंकवादियों को इसी जगह पर ट्रेन किया गया था। दूसरा, महमूना जाया कैंप सियालकोट, यह 18 से 12 किलोमीटर आईबी से दूर था। हिजबुल मुजाहिदीन का बहुत बड़ा कैंप था। यह कठुआ जम्मू क्षेत्र में आतंक फैलाने का नियंत्रण केंद्र था। पठानकोट एयरफोर्स बेस पर किया गया हमला भी इसी कैंप से प्लान और डायरेक्ट किया गया था। मरकज ताइबा मुरीद के, यह आईबी से 18 से 25 किलोमीटर दूरी पर है। 2008 के मुंबई हमले के आतंकी भी यहीं से प्रशिक्षित हुए थे। अजमल कसब व डेविड हेडली भी यहां ट्रेन हुए थे।
आगे दूसरा आया। टारगेट 10 हुआ है सर अभी। टारगेट 10 हुआ है, एंक्लोजर सेम ही है। 7 इट इज हिट द टारगेट। हाँ हाँ। आ गया सर, इम्पैक्ट
मरकज सुभान अल्लाह भावलपुर, ये इंटरनेशनल बाउंड्री से 100 किलोमीटर दूर है। जैश ए मोहम्मद का मुख्यालय था। यहाँ पर रिक्रूटमेंट, ट्रेनिंग व इंडॉक्ट्रिनेशन का केंद्र भी था। शीर्ष आतंकी अक्सर यहाँ आते थे। मैं आप सबको बताना चाहती हूँ कि किसी भी सैन्य ठिकाने का निशाना नहीं बनाया गया और अभी तक किसी तरह की नागरिक क्षति की रिपोर्ट नहीं है। धन्यवाद। जय हिंद।
The strike on the terror camps were undertaken through precision capability, as shown to you. A niche technology weapons with careful selection of warheads was ensured so that there will be no collateral damage. The point of impact in each of the target was a specific building or a group of buildings. All the targets were neutralized with clinical efficiency, and the results reiterate the professionalism of the Indian Armed Forces in the planning and execution of their operations. No military establishments were targeted. India has demonstrated considerable restraint in its response. However, it must be said that the Indian Armed Forces are fully prepared to respond to Pakistani misadventures, if any, that will escalate the situation. Jai Hind, and thank you very much.
Ladies and gentlemen, friends in the media, I ask your indulgence today in view of the fact that this is still an evolving situation. We will therefore not be able to take questions and answers today, but we will come back for more updates and more briefings shortly. Thank you all very much for joining us this morning. Thank you. Jai Hind.
All right, so you heard it from Vikram Misri, the representative secretary of External Affairs, including representatives of both the Indian Army and the Air Force. You saw the drone footage, and this is advanced warfare that is being done, and advanced targeting of specific targets. Very, very clear messaging that has come through. In fact, I can't recall the last time there has been such a briefing, and I'm pretty sure that that hasn't taken place in the past, where on a screen there is a display that tells you when an attack has taken place and multiple attacks. It's enumerated, and it's specifically said that buildings or groups of buildings were targeted, and they have gone into the detail as to which establishments perpetrated which attacks on Indian soil over the course of the last several years, going back months and years. So you heard first from Mr. Misri talking about what was perpetrated in Pahalgam. Of course, you had a very clear intent to destabilize the peace in that region and the future economic prosperity of that region. We're joined this morning by G. Parthasarathy, who's a former ambassador to Pakistan. Mr. Parthasarathy, thanks so much for taking the time, and I hope that you were able to listen in to the briefing that we just heard and the messaging that came through both from the armed forces and the administration, that this is a fitting reply to a very dastardly act that was conducted in the manner that it was conducted. It has taken a little time, and I think the time that was taken was in order to have a very clear and targeted response. Your opinion on how this stacks up to previous responses to terror attacks on Indian soil?
Well, I've been handling these things when I was in Pakistan, or after I retired. I've come back and watched this past developments with Pakistan on television. But I must say that I have never seen before such meticulous efforts to ensure that the people of India are precisely told of what happened. And it is particularly, and I think a person who has really been behind the scenes and worked on it is the External Affairs Minister, Mr. Jaishankar. The fact of the matter is that the action taken was proportionate, decisive. Of course, naturally, the credit goes to the primary credit goes to the armed forces. And I would also like to give credit to a Pakistani friend of mine, Pakistan's Foreign Secretary, Asim Munir. We didn't have to do anything. He fought the battle propaganda-wise, international, by the rubbish he talked and the way he spoke. And mark that with the staid, balanced, and factual presentation of both our defense and foreign ministries. So I think, we sort of doing well in a conflict is not enough. It is important, I think, to focus on Pakistan, on the entire instigator and evil man of this crisis. It is the Pakistan Army Chief, Asim Munir. Going through Pakistan politics and knowing both the Sharif brothers, I can say Nawaz Sharif had his lessons after the follies of Kargil. His younger brother, now the Prime Minister, I've known is a very balanced man. And it is this crazy guy, and he doesn't even have the dignity of the upper foreign officers. At the height of Kargil, I met Musharraf. But there was a certain class in the presentation. So we should also thank God that we've got such a half-baked guy as the Pakistan.
So and I think there was a strong effort in this last presentation to counter some of the discourse that has been perpetrated in the international media by spokespeople of the Pakistan administration and the armed forces. We're also joined by retired Captain Anil Gaur, defense expert. Sir, thanks so much for taking the time. This is the first time I'm witnessing. Okay, we'll come back. I believe we've lost that line. The point that I was making is, Mr. Parthasarathy, that this is the first time that I'm witnessing the evidence of drone strikes that is being played out to the public of India so that they know exactly what has been done. The messaging and calling this Operation Sindoor as opposed to anything else. To be very clear that this is a response, and a strong one at that, to what was perpetrated in Pahalgam. Do you think that this very cleanly counters all of the propaganda that was perpetrated by the other side?
First of all, the Sindhu River has always been important to us because its tributaries pass into India. And therefore, it's important that it be dealt with, and dealt with firmly. I think we've all credit to the military. Particular credit needs, I think, also to be paid to the External Affairs Ministry led by Jaishankar.
Yes.
Which has really presented this.
That point is made. That point is made, Mr. Parthasarathy. We're joined, as I mentioned, by retired Captain Anil Gaur this morning. Sir, thanks so much for taking the time. Hope you can hear me, and hope you've also witnessed, as we have, the proof and the evidence of the strikes that were undertaken by the Indian armed forces in a concerted move to counter terrorism across the border and emerging from that country. This is the first time we have witnessed it. Of course, you have probably witnessed similar action in the past. How would you comment on the nature of the response by the Indian armed forces?
Alex, thank you very much. And my namaskar to Parthasarathy ji and your viewers. You see, this action of the armed forces speaks volumes of what is the capability of India. Now, when the armed forces have been given a free hand by the Prime Minister to sit down, plot a strategy, and he has given them his mind that, look, he wants the terror camps destroyed. He wants them finished. But he does not want any civilian casualty. He does not want any other casualties around or any other infrastructure destruction around these camps, what you say, or you say the buildings that are housing this. Now, most of this, like Bahawalpur and this Murdike, they are based in the masjids. So these things had to be taken into account by the armed forces very well. Now we know, because I at least know, that yes, we have precision strike capability, which is now with the public, and you can see that the drones footage that you have seen. And we know how we have been able to, able to dislodge the enemy from the Kargil heights, when the enemy was sitting at such a point, with precision firing from our Bofors and Air Force, when our troops, we were just, my corporals and all who were there, they were just, 10 yards away from the point of where these strikes were taking place. So we knew the capability. What Pakistan does not know, but now it knows the capability of the armed forces. We have that capability to have standoff engagement with Pakistan. We do not even have to enter their airspace or their land space. We have such weapons. We have our BrahMos, we have others, where we can easily take on Pakistan any time of the day or night, whenever they feel like. Now, the point is very clear. The strikes were against these terrorist camps, and no one can dispute that. Pakistan may keep saying, like I was seeing their DGSP, ISPR saying that, look, that in Bahawalpur the attack took place and one small child of 3 years and 2 women were injured and all. But in reality, what is coming from Pakistan, from the social media, we have seen that there were people with long beards and who have been taken to the hospitals. And now what has come out is at least 90 of them have been killed over there. What the total count of all these camps that come out, what I feel, my assessment is, we will have in the end at least 300 to 400 of these terrorists killed. Yes. Because we have attacked 9 of their camps, 9 of their training camps, and those training camps were right from, like what was said in the briefing, right from the indoctrination to their final, what you call the advanced camps. So they had these people everywhere in that. Yeah. And they were thinking very clearly that people are safe over here because they are in Bahawalpur. Yeah. It's not going to be attacked. They are in Murdike. It's not going to be attacked. These things were in the mind of Pakistan, but India has shown its capability, and it has shown its capability to the world that, look, we are now a power which can take on such things very easily and with very precise precision without any collateral damage.
Yes. Yes, it's an important point.
Now, today, yes. I will say...
Please go ahead, sir.
I will say one more thing. Now, Pakistan has to take care of this Mullah Munir. I call him Mullah Munir because he is basically a product of the madrasas. His father was a cleric, and what he spoke to all his Parwasi, this Pakistanis, was just a mullah speech to them. And this is a fitting reply to him. And if now he tries a misadventure against India, let me tell him through your channel that he will not have this Pakistan what he sees. It will be in 5 parts. Baluchistan will be separate. Pakistan, the Punjab province will be separate. Sindh will be separate. The Khyber Pakhtun area will be separate. That will go off to Afghanistan. Pakistan occupied Jammu Kashmir will come back to Jammu Kashmir. So this is what is going to happen. Yeah. It is better that this fellow stops all this export of terror that they have done all these 75 years and now concentrate on building this. But I have one apprehension, that this man may now stage a coup over there and become a martial law administrator like all of them have done. Yep. So this danger is also there. And if it happens, then we have to plan out for that too. Yes. We have to keep that in mind. Because I'm sure the planners, our Prime Minister and the others, NSA and all, they have already taken this into account. Yes. But this is one real danger which I feel like.
Yes. So, yes, all important points that you're making, sir. Want to absolutely be certain that we're not commenting about the political scenario or the state of affairs in Pakistan as things stand right now. That is for other fora. We're talking about this event, the response to this terrorist strike, and several that have taken place over the course of the last several years, and the nature of the response. Ambassador Rajiv Bhatia, Gateway House and former diplomat, joining us this morning as well. Mr. Bhatia, thanks so much for taking the time. I was mentioning to the other gentlemen on the panel that this is the first time that we're seeing a response like this televised and showcased to the public of India, in a sense, to prove to everybody that is watching that there is no question that an attack has taken place, that a targeted attack has taken place. Explain to us the significance of this message in the global community and the right that India has to protect its national security and the lives of its people.
Thank you very much. I'm not sure if I can add very much more to what Ambassador Parthasarathy would have already mentioned to you. But I would like to point out that there are 2 or 3 things which have struck me in a very significant manner. I think this is obviously an operation launched by India with considerable thought, and this is driven by our desire for self-defense. I think Foreign Secretary Misri made it clear that government has information that these terrorist groups were planning to launch further attacks on India. This was firm, reliable intelligence. So this is, first of all, to prevent further attacks. That is very important. Second, obviously, this is very much a response to what happened in Pahalgam, once again, in self-defense. And the third point, which is noteworthy, it is to deliver justice to the people who have suffered as a result of the massacre at Pahalgam. So taken together, the way the strike, the midnight or post-midnight strike has taken place, it shows thought, it shows precision, it shows planning. And incidentally, it is not just to inform and convince the people of India. The people of India are already convinced about Pakistan's true nature. It is really to inform the global community. And you noticed that as a result, Foreign Secretary first spoke in Hindi, very good Hindi he spoke, and then he presented the commentary in English, and the same thing was done alternately by the 2 officers very well chosen for this occasion.
Very important, very important points that you're raising, Ambassador. Thanks so much for joining us this morning, for the perspective that you did give us. Indeed, earlier, before you joined us, Ambassador Parthasarathy did make certain statements that you have echoed. And Captain Anil Gaur as well, thank you so much for joining us this morning and giving us the perspective that you did, talking about the capability of the Indian Armed Forces to respond as and when required. Now, at a time like this, you have to look at the response of the Indian administration, the armed forces, to an attack that took place. And of course, you also look at the markets. You look at how the market is reacting, the tone and tenor of the reaction. And I think it's evident on the screen to you. If we pull that up and see where things are standing, there isn't too much of a reaction. Sandeep Tandon joining us this morning, founder and chief investment officer, Quant Capital. Sandeep, thanks so much for taking the time and for speaking to us today. Of course, at times like this, markets kind of take a back seat. But your opinion on how investors in India should react to geopolitical tension, the response and the strong message that was sent out by the Indian administration to a dastardly attack that was taking place not too long back?
The market is a very evolved animal now, okay? So if you really look at for last many days, I think government, including the Prime Minister, having meeting with multiple people, bureaucrats, you talking. What government has done very smartly and tactfully is that it has prepared everybody, okay? And that's the reason I strongly believe up to large extent, everything has been factored. Okay, some people who are weak heart has already capitulated. Some people have from a risk perspective have pruned down their exposure. We as a house look this as a buying opportunity, so we have increased our exposure. So we have all sort of animals available in the market. How you look at. I think it's a very, very mature way they have handled the situation, and I think I like to remain constructive for India FI is coming back, and we have been saying for last 2 months now that India is in a risk on phase as compared to global risk off phase. And we also talked about in our last note, talking about how decoupling phase has already begun for India. So I think if you look at an absolute basis, you might have some concern, but I look at absolute and relative both. On a relative basis, we are in a very comfortable situation. So net, I will look for a buying opportunity if market corrects. First of all, I don't expect any major correction because up to large extent it has already been factored. And if it is already factored and this event has already played out, which has government has very clearly says that is a more not attack on Pakistan, not attack on the establishment, is an attack only on the terror camps. So I think they have support from the other global players in the market, and I think it's a tactical way they're handling this situation. And I don't think one should need to panic in this situation. Rather, I will be buyer on this every level if whatever reason market corrects, which first of all, I don't believe so that market will correct with this background. As I said, largely factor. If it happens even, then I should look for a buying opportunity.
That's an important point that you're raising. Sandeep, just to drive home the point, you've obviously seen many events like this in the past, but this, in my opinion, is different from those because the first instance of something being televised and showcased to the Indian public to say, look, this is what we have done, these are the camps that we have targeted, this is the information that we had, and we have reacted according to that. There's also a different scenario in terms of the structure and the makeup of the market as well, right? So if you're talking about even 5 to 8 years back, when the domestic institutions and the mutual fund industry did not have the firepower that it currently has, and you as a representative of the industry saying that you will go out and buy, how much of a factor is that in keeping the stability of the market as it stands right now?
So if you look at without any biases, mutual fund industry is sitting on a very large amount of cash. Okay. And this concern of Indo-Pak tension has come very recently. I think the cash level has increased because of a global trade related tariff is going out from January. So if you look at from that background is very constructive. When cash levels are so meaningfully high, okay, the leverage position has corrected a lot. Okay. And the participation is completely missing. In fact, if you really look at in last 15, 20 days of buying activities, which is happening in the market, is like largely FIS has come back, with which they were seller for last many years actually. Okay. So after long period of time, seeing FIS is coming back and domestic guys are slightly nervous because they have made a lot of money in the past, and any signs of any disturbance which is there in the more from a tariff perspective has psychological hurt them because many investors are seeing now 1 year's negative return. So some amount of concerns are coming. I think the way I look at the market is that you don't have to look at for just last 6 months or last 12 month perspective, because equity market a long term. Okay, if you're looking for 5-10 years perspective, I think from a longer term perspective, I think it's a great opportunity. And I will have a very constructive outlook in this background rather getting panicky, because the government is handling with a lot of maturity. Global forces are behind us. So we have huge psychological comfort. As I said, leverage positions is missing. FIs are buying. If you look at all combination, okay, then I think all combinations are endorsing a up move rather than a down move in the market on the immediate basis.
Sandeep, hi, Mahima also joining in. Just wanted to understand one thing. You did mention that according to every factor being considered, the market might see an up move. But you also mentioned that India striking back was kind of priced in the markets. But if Pakistan retaliates, do you think that is priced in the markets already, or do you think then we'll some kind of we'll witness some kind of a dip in the markets?
See, if you really look at the way we understand geopolitics, okay, I think they were also prepared, okay. And most of the camps, I'm confident a lot of people could have already vacated, because it was very clear that Indian government and Indian para forces will react, okay. So I don't see any meaningful casualty could be there. And it's all about how Pakistan should react. But I think given the background, they also understand you're dealing with a different India. It was not what happened in the 1971 or in the past what you have dealt. In last 10 years, India is in a very different league, both from arm perspective, status perspective, and in terms of global say perspective. So we are in a different league. I don't think Pakistan is in a position to really retaliate up to that extent of what he could have done 10 years back. Okay. And economically, they are in a very awkward situation. So maybe there's some noise can be there, which I'm not ruling out. But I personally don't see them reacting in a big way. And government has made it very clear, if you heard the speech of the finance secretary, very clearly saying that it is targeted towards terrorism, not on Pakistan, not on the military or any of their establishments.
The messaging is very clear. Yes, absolutely, Sandeep. I'm just going to ask you about what we found very interesting, right? You had last evening a major trade deal announced between India and the UK. We're having conversations with the US as things stand right now, global players, possibly an EU coming through also with a bilateral agreement. So on one hand, you have a very strong response to a terrorist activity that has taken place and a targeted reaction. And on the other hand, you have a very clear laser focus on trade that could have a significant tailwind for several companies here in India. How do you look at this context, and where would you be setting your sights? If you were to talk about these trade deals coming through, who stands to benefit in your opinion?
See, it's an interesting question in this current construct. As you said, FTA has been silent. Actually is going on for last 2 or 3 years, actually. Okay. Finally, it happened. Okay. So again, a very constructive message to the global investor that India is moving forward very fast on some of these bilateral issues which has been pending with various countries for a long period of time. And I personally believe that India will be one of the first few countries, or maybe the first country also on a large size, who is signing the bilateral agreements with US also. So again, there will be a strong messaging if it happens quickly. Okay. With that background, I think global investors are definitely looking at India as a safety perspective. From, let's say, the money shift from US to, we always talk about Asia-centric emerging market, and in India particularly, there could be tsunami out here because even 10-15% money shift from US. That's the first aspect. And because risk appetite indicators of emerging market as compared to developed markets are endorsing that liquidity can shift. That's the first important point you have to understand. Second thing is that India has sheer size. Okay. One side, if you compare, let's say, example, like we always talk about Vietnam or Bangladesh from perspective, they are giving competition to us. But now with the tariff is much more. So we have tariff differential in our favor. And second thing, what we have to understand, India has scale. Okay. Other countries don't have that much scale what we can build maybe next 2-3 years perspective. So I think we are in a very unique situation. Okay. Where we are saying that not only from US perspective, Europe perspective, and even Middle East perspective, India will be a preferred place for doing business. So the way current government is endorsing, talking about ease and making very fast move. In the past era, we have seen, such decision will take a decade, and maybe most of the time decision will not happen. So I think the current government is very, very agile and understand the needs of the hour, and they're moving very fast. It's not a signs of weakness that we are surrendered. A lot of articles or the media people talk about. My view is a very strategic decision that the Modi government is taking, and it's absolutely step in right direction. And I think with this background also is a very constructive news for India. Again, I said, you also have to look at relative basis, because money shift on relative basis, not an absolute basis.
Sandeep, last point that I want to ask you, and it's evident from your fact sheets as well, and we'll go through the numbers, I'm sure, on your overweight stances and what you're buying and what you're holding. Since you've said that you've been deploying and you're constructive, just leave us with a thought as to where you're seeing the most opportunity, which spaces you would be deploying in.
See, I tell you, obviously, right from January, when we talked about tariff-related thing, we said, let's focus on India-centric companies. So India infrastructure company, Indian hospitality space, okay, and up to certain extent materials also. But given the changes which is happening as we, let's say, FTA with UK has been finalized, if something we move forward with European countries or with US in particular, I think pharma is one area where a lot of people have given up completely and people have very concerned about it. I think India is in a very unique situation. There is no competition globally on the generic perspective. So Indian generic company, Indian textile companies are too clearly a winner. And obviously the textile, the size of the overall industry is smaller than the pharma. So from a value perspective, pharma companies will be the biggest beneficiary, and that's where we have added. And we also added some small quantities also in the textile space, as given the size of the activities or the volumes or in value terms, these companies are relatively tiny.
Sandeep, thanks so much. Appreciate the time that you've given us this morning. Pleasure speaking with you.
Thanks a lot.
All right. Well, so there you go. You've gotten a comprehensive view. You saw unprecedented messaging come through from the Indian administration and the armed forces, clear visuals, proof of the attack that took place, and you heard from market participants and former diplomats. We've given you everything. We'll continue to bring you news and updates on this very important day. Do stay with us. From Mahima and myself and the team that put this show together, thanks so much for watching. Do stay tuned. This is NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Apollo ties. Now there's a buzz of a positive corporate development related to one of the related to its European operations or European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and there's dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm.
India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Hello and welcome to NDTV Profit. I'm your host Heeral Dadia. What a day for the markets and for India. You have India who has actually struck back to all those terror attempts that have been made specifically with regards to where Pulwama, Pahalgam goes as well. But overall, if you see in terms of where markets are concerned, you are nearly inching towards the day's highest levels right now. What's interesting is that the markets are absolutely resilient at this point in time, and you have Operation Sindoor as well as the UK-India FTA that is being read absolutely positive. There is that summit of cautiousness, and that's the reason why you're seeing that range-bound trade that has continued in today's session. Let's quickly put our Bank Nifty on the screens as well, because the kind of recovery that Bank Nifty saw in today's day of trade was also pretty spectacular. Currently as well, you're seeing gains of nearly a little over 150 points that is coming in there, 0.3% higher. If we can get the sectoral heat map quickly to understand what's happening, who are the losers, who are the gainers, there you go. Clearly, auto is the top gainer, and the gains are coming in from Tata Motors. Apart from that, consumer durables is on the front footing. Energy is up in trade. PSU Bank Index, metals are the ones which are seeing gains. What's losing is FMCG, and that's for the obvious reasons where, geopolitical situations like that do create that that nervousness amongst consumers as well. And that's what is putting that sector under pressure today. 0.4% lower. Pharma is interesting as well, and this is on the back of the tariffs that could be coming in from the US, because a lot of facts that are developing on that front where India is talking about zero reciprocal tariffs on pharma, and you're also looking at US FDA costs that are expected to go up. So that is what is putting pressure on that front. So that's with regards to where the pharma sector goes. Let's quickly pull up the gainers and losers and the contributors in terms of Nifty 50. I'm sure it's Tata Motors which is leading the gains today, but if you can just have that one, there you go. Tata Motors, Bajaj Fin, M&M. The reason why M&M is also up in trade is because when you talk about the UK-India FTA, it's an opportunity for them because they're looking at the European markets pretty closely in terms of exports. So it opens up doors for a M&M. But what's losing is ICICI Bank, Sun Pharma, ITC, as well as Infosys IT. Surprisingly is one of the losers because the anticipation was that the FTA would provide some bit of fillip in terms of the IT sector, but does not seem to be enthused in terms of where the street goes. So that's with regards to where overall markets go. If you can just also have the mid cap and the small cap index, because that's where usually where you see some tremors that come in situations like this. But there you go, you have the Nifty mid cap 150, which is trading at the day's highest levels with gains of 1.4% coming in there. Small cap also, if you can give us that one, there you again at the day's highest levels with gains of 0.9%. So yes, that activity in terms of broader markets is absolutely heightened as we speak. You have the large cap space, which is slightly on the muted side in today's session. But clearly, 24,400 is the level that we're tracking in terms of Nifty 50. Moving from there on, let's quickly look at a few of the other things that we should be watching out for in terms of individual stocks that are reacting in today's day. Gokuldas Exports, Wellspun Living, both of these counters are seeing smart gains, and this is again on the back of the FTA, where textile industry that is exporting to the UK stands to benefit. There you go. KPR Mills, again another one, 8 to 9% is the kind of gain. Sirma is also seeing some smart moves today. What's losing is a Radico Khaitan, because there could be some bit of negative impact coming in on a Radico Khaitan with all your cheap alcohol that could be coming into the country. The preference, we know where it goes. So that's the reason why you're seeing some bit of cuts on a Radico as well. Patanjali also trading under pressure. But the big deal today is Operation Sindoor. The Indian Army and the MEA also did an extensive press conference on the same. My colleague at NDTV Network, Shiv Arur, brings you the key takeaways so far. Shiv, over to you.
We've just arrived in Baramulla. We're making our way towards the line of control in the Uri sector. That lies just a few kilometers ahead from here when we'll be reaching Uri. Now, obviously, the Vikram Misri, the Foreign Secretary, and the two lady officers from the Army and the Air Force have provided an extensive briefing on what we already know. They talked about the targets that have been attacked. They've provided, very importantly, they've provided imaging video footage of the actual strikes, which adds a visual layer to Operation Sindoor, which was not there at least thus far. But the missing pieces that are still there, because this is an evolving situation and the press conference wasn't able to take any questions, is probably because there is still a fog of war. A lot of information is still being corroborated and verified at this time, including casualties along the line of control on the Pakistan side, some on the Indian side as well. Information about fighter aircraft on both sides having been shot down, and the details of the escalation on the line of control, especially in Rajouri, Poonch, where the artillery shelling is heaviest at this point of time, and in Kupwara sector of North Kashmir, which is just north of where I'm standing right now in Baramulla district. We'll be reaching Uri in a very short while from now, where we will hopefully get a first-hand view of what this escalation is actually looking like. Suffice it to say that the two big points made by the Foreign Secretary were A, that these these strikes were punitive in nature and preemptory in nature, trying to stop further attacks from these Pakistani terror camps. And the second point is that India reserves the right to escalate right back at Pakistan should it indulge in any misadventure. Those are the exact words. We're in Baramulla. We'll be reporting next from LOC in Uri. That's the update at this time.
Thank you so much for getting us the updates from Baramulla right across right now. And we'll be waiting for the next line of update that would be coming in from Shiv once he's at Uri. But let's also now welcome in Gautam Duggad, Head of Research at Motilal Oswal Institutional Equities. Gautam, good morning and welcome to the show. First, let's talk about what's happening in terms of the markets. You have Trump's tariff truce that's actually lifted global markets. You are talking about the FTA that India has signed with the UK, which turns out to be a positive as well, because lots of opportunities that open up. And thirdly is how the earnings season has panned out so far. So three aspects. Let's start with the Trump tariff truce and the UK FTA. How are you reading into both of these?
Good morning. Thanks for having me. So, yeah, I mean, after several headwinds from September to February, March, the market has seen some bit of a breather in terms of some of the news flow which has come in, whether it is on Trump tariffs, be it on UK FTA, which got signed yesterday, or even for that matter, the corporate earnings. So UK FTA is a very positive step, and I think government will get a lot of confidence from this, and hopefully they will accelerate the bilateral tariff agreement with US also, because that will be a far bigger one. This obviously augurs very well for several of the sectors which you are mentioning, textiles, liquor, some of the other sectors as well will obviously have to dig more and figure out where the bottoms of impact is going to be positive there. But net, in a current scheme of things, two big nations signing a FTA, when there are so many trade-related headwinds, it sends a very positive message across the globe. Insofar as tariffs are concerned, there is a truce. We will know in July what exactly, how it actually unfolds after the 90-day pause ends. But I think market has kind of digested it well and shrugged off and moved on to the next thing till this actually unfolds in July, I think 7th or 8th July. So we will see what happens then, which are the sectors, which are the countries which are going to get impacted. There will be a lot of to and fro for sure. And India's position, I mean, it's very difficult to foretell right now, but relatively, I would think India's position will be strengthened given our, prioritization of the manufacturing investment that this government has done through various measures like PLI and so many other incentives which have been offered in the last 5-6 years. So fingers crossed on the tariff related measures. Third and most important, and that's the only thing that matters in markets as we've learned over the years, corporate earnings. After 3 very flattish quarters, the expectations for this quarter, when the preview was released almost a month back, was that this quarter is also going to be very flat. So expectations were very muted. Against that muted expectations, we are seeing a marginal beat. So, yesterday only we published our interim review. About 120 companies have declared their numbers in our coverage universe. So for those 120 companies, we were expecting a profit decline of 2%. The actual number is a growth of 7%. So reasonably good beat, and even accounting for the sharp swing in the OMC profitability, thanks to the marketing margins and GRMs being far ahead of estimate. If you exclude those 3 companies, even then, ex of OMC also, the growth is 6% versus expectation of 2%. For Nifty also, the numbers are slightly better. For the 27 companies which have released, the growth is 4% versus expectation of 2%. But more importantly, the spread of sectors which are delivering beat or inline expectations kind of numbers is far, far higher. Hardly 1 or 2 sectors have missed expectations so far. There's still a lot of companies still to report. 120 have reported, 180 still to go in our coverage universe. But large weight of companies have reported the numbers. For example, the 27 Nifty companies which have declared results, they account for close to 70% of Nifty weight. right? And they set the tone for the rest of the earnings season. Third, the forward estimate revision is very sort of, I would say, stable. If you look at our coverage universe, we have actually seen a marginal 1% upgrade for FY25 numbers, and FY26 and 27 numbers are quite stable. Similarly, for Nifty, we have seen a percent kind of an upgrade in FY25 and half to 1% kind of a downgrade for FY26-27. So not a very material downgrade, I would think. So we're still at 13-14% growth.
Gautam, so this is the interim review, but if you have to look at the forward estimates from here on and the commentary that has come in from these 27 companies, what's the outlook looking like going ahead if you have to look at FY26? And does that mean the valuations with regards to Nifty 50 are reasonable for an investor to start looking at and nibbling in?
Oh, absolutely. They were reasonable even 2 months back. Whenever Nifty has gone to 20p, the market has rebounded, and it has happened twice or thrice. This is not a technical point, but a fundamental point. If you look at 22,300, 500, which I think is the recent lows, give or take 100, 200 points. But broadly at 22,300, 500, Nifty was trading at 20p, which is where market sort of again rebounded. So 20p has become a bit of a floor for the large caps. And right now we're trading close to 20.6, 20.7 because there has been some rollover which has happened for FY26. To address your point, yes, the forward estimates have not seen much change, which is what I was discussing in the earlier answer to your question. Our FY26, FY27 numbers are very stable, around 1155 rupees and 1330 rupees of EPS. Insofar as valuations are concerned, the top 100 stocks or large caps on Nifty 50, they are looking quite reasonable at an aggregate level also. So they are trading in line with their long period averages. However, the mid caps and small caps is where the valuations are still expensive. The mid cap index is trading at 27 times and the small cap index is trading at 22 times, which is where we need a bit of a time correction or some consolidation so that earnings can catch up to those valuations. And then eventually the risk reward will become a little more attractive. Right now, the risk reward is most attractive in large caps in our view.
Okay, so if the risk reward is attractive in large caps right now, your quick comment in terms of Operation Sindoor and the impact on markets, taking precedence of what we've seen during Uri and the previous attacks as well, how do you think that the markets are reacting right now? And are you seeing resilience which is sustainable?
So I think sometimes we give too much importance to this topic. Market has become very mature. We are a 5 trillion market cap. This is a very localized conflict with a terrorist nation, which the army is well capable of handling it, and they're doing it. Market is doing its own job. I don't think there will be any more escalation beyond a point. And the way the market has reacted is very, very pleasing. I mean, there is no untoward volatility or wild swings, which we had witnessed 10, 15 years back, maybe. So market is taking it very nicely, I would think, that, there is a conflict which the relevant people are addressing. I don't think it has anyways any big impact on the fundamentals that matter, because you're talking about a country whose total market cap would be $50 billion maybe. So beyond few days, I think market will again come back to corporate earnings and move on fundamentals, and then look at the bigger picture things on macro and forthcoming RBI policy, and subsequent to that, the Trump tariffs and how the US-India bilateral trade agreement moves. So this is a very small thing right now in an overall scheme of things, and the way our markets are, it's a far bigger market today. 5 trillion market cap is a reasonably big size.
Right, so that's going to be interesting to watch out for from here on as well. Gautam, apart from that, if you see from a market's perspective, which are the sectors which have led to the outperformance in terms of earnings so far, and any individual stocks that you would want to call out that could become good investment bets?
So, like I mentioned, a lot of sectors have delivered numbers ahead of our expectations so far in the earnings season. So cement, chemicals, for that matter, consumer durable, there has been a broad-based beat in consumer durable. All the 4 or 5 companies in our coverage which reported numbers, they've been better than expectations. It's still early days in the result season for healthcare, but the 3 companies which have posted numbers in our coverage, even they were ahead of expectations. Metals, oil and gas, ahead of expectation. The big sectors like banks and IT and consumer, they were in line. Auto was slightly better than expectations. So net, among the list of 23 or 24 sectors that we cover, I don't see any big sector which has disappointed so far. As regards individual stocks, a lot of our model portfolio stocks have delivered very solid operational performance. The likes of Mahindra and Mahindra, Indian Hotel. Yesterday, BSE posted a fabulous set of numbers. So many of our long-held, high-conviction ideas in our model portfolio across sectors, they are demonstrating very strong resilience, and which is why we are staying put there. We have a big overweight on BFSI, within which a substantially higher overweight on capital market companies, discretionary consumption, IT, healthcare, so those are sectors where we are positive for some time and continue to stay positive.
Absolutely. So I think these are spaces and segments that one should be watching out for as well. Thank you, Gautam, so much for your views. We are running slightly out of time, taking into consideration the kind of programming that we need to continue doing as well. But let's also welcome in Rajiv Dogra, former from General Karachi. Mr. Dogra, firstly, good afternoon and welcome to the show. My first question coming to you is your immediate reaction basis the precision strikes that have been carried out on terrorist sites in Pakistan and POK. We're talking about 9 locations. How are you expecting the response from here on?
Response from Europe?
From here on, from Pakistan.
Okay. Well, Pakistan has already spoken. There are 2 kinds of responses. One is by the defense minister, who now says that we are willing to scale down if India stops its operations. The second is from the military side. Their publicity wing called ISPR, they are talking in terms of threats to India. So there are mixed messages coming out from Pakistan, and I think we should keep our guard up. We should be careful, because Pakistan is a very unreliable country. They say one thing, do quite another thing. Even when the defense minister of Pakistan was speaking, he only talked about the operations. He did not say anything about stopping terror. So I am introducing a note of caution that let's not think that Pakistan has reformed and is going to change its ways. It's certainly not going to change its ways. So till it admits that it had made a huge blunder in Pahalgam, until it confirms in verifiable form that it is going to stop all terror operations and it is going to recall the terrorists still operating in Jammu and Kashmir, we should be very careful.
Right. Mr. Dogra, my other question coming to you is, yes, you have to be cautious, taking into consideration the stance that Pakistan is sitting on. The conference that just happened right now, sometime back, clearly what they've indicated is that this is just phase 1 of Operation Sindoor. Does that mean there could be further escalations as well? Because clearly India does not want to escalate, and that is what their stance was as well. And they have been absolutely focused, measured and non-escalatory in nature in terms of the action. That is what the Ministry of Defence spokesperson has indicated. What would this indicate from here on? How well prepared should India be then from the next phase perspective?
Well, I think the Foreign Secretary's briefing was very clear. We should watch his words very carefully, because what he said was that our intelligence informs us that there could be more terror acts in the offing. If there are more terror acts in the offing, then obviously Pakistan has different intentions. So let me emphasize once more that we need to be doubly careful and we need to be doubly prepared. So this is the first phase, as you have said, and as many other sources, official sources have indicated. So there would be responses if the terror factory does not wind up.
And then overall, the other statement that did come out from the press conference that the Foreign Secretary, that's Vikram Misri, indicated was that when you talk about Pahalgam, the terror attack was extremely barbaric and it was specifically targeted to disrupt the normalcy that was returning in Kashmir Valley, and secondly aimed at creating communal rifts in India. Taking this into consideration, how do you see the political situation evolving within?
Well, as far as political situation is concerned, I think the government of India, as is the case with all previous governments, have taken the entire country into confidence, has also made sure that all the political parties are fully aware of what the government hopes to do and achieve in terms of terror. As far as communal tensions are concerned, India will not tolerate any communal tension, nor will allow any communal element to have its way. But Pakistan's intentions were quite clear, and they were clear when General Munir of Pakistan made that statement to non-resident Pakistanis about Hindus being different and so on. And that was followed up by these terrorists in Pahalgam, where they selected, chose, and killed Hindu men in front of their women and in front of their children. So that is a barbaric nation whose intentions clearly are to sow divisions in India. But they have not succeeded in the last 75 years, and they will not succeed now.
Okay. And Mr. Dogra, any closing comments with regards to how, you know, your Indians should look at all of this that's happening? Because if you have to look at from 2016, from Uri to now, India has been striking back in a very strong way. Still, I don't think so Pakistan is getting the message correctly. What should that translate into?
Well, that's why you started your questions by terming it as the first phase. So if Pakistan still does not get the message, then there has to be a follow-up phase because it has obviously not learned the lesson for the last 35 years, and it thinks that it can get away with carrying on with its killing and terror operations in India. So the time has come that enough is enough. This is the final shot. But if you still do not mend your ways, there are other shots coming. That's the clear message.
That's an interesting stance coming in there as well. Thank you, Mr. Dogra, so much for speaking to us at NDTV Profit. So clearly, you know, if you have to talk about the resounding response that India has given to Pakistan, that is absolutely crucial, with striking 9 terrorist bases in Pakistan. To be noted that we have clearly indicated that the forces used kamikaze drones that were weapons designed to crash into a specific target. In fact, the Ministry of Defense spokesperson had also indicated that the actions have been focused, measured and non-escalatory in nature. No Pakistani military economic facilities have been targeted, and India has demonstrated considerable restraint in the selection of targets and the method of execution as well. In fact, all air defense units have been activated all along India-Pakistan border as well. In fact, let's quickly see a few of the messages that are coming in from the government as well. You have Amit Shah, proud of our armed forces. That's the key word that Amit Shah is indicating. He's saying Operation Sindoor is Bharat's response to the brutal killing of our innocent brothers in Pahalgam, I quote. In fact, the Modi government is resolved to give a befitting response to any attack on India and its people. Bharat remains firmly committed to eradicating terrorism from its roots. That's the word coming in from Amit Shah as well. In fact, there are a couple of travel advisories that have been issued as well, and this is for the benefit of the viewers. Air India is saying that in view of the prevailing situation, Air India has cancelled all its flights to and fro from the following stations, that is Jammu, Srinagar, Leh, Jodhpur, Amritsar, Bhuj, Jamnagar, Chandigarh and Rajkot, and this is till 12 noon as we speak, and pending further updates from authorities. 2 international flights en route to Amritsar are being diverted to Delhi. From SpiceJet, they've said airports in parts of northern India, including Dharamshala, Leh, Jammu, Srinagar and Amritsar, are closed under further notice, and departures and arrivals and consequential flights may be impacted. And Kandla Airport is also closed until further notice. Departures, arrivals and consequential flights may be impacted. And very lastly, you have Indigo, which is saying that due to changing airspace conditions in the region, flights to and fro from Srinagar, Jammu, Amritsar, Leh, Chandigarh and Dharamshala are currently impacted as well. In fact, Bikaner is also another place which will be affected by the current airspace restrictions. So those are travel advisories coming in for the benefit of our viewers. But we'll quickly slip into a short break and then we'll get you continued coverage in terms of markets and more. We have Vallabh Bansali who will be joining us on the other side. Please stay tuned to NDTV Profit.
That's huge. That is a biggie. It's on.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
Apollo Tyres, now there's a buzz of a positive corporate development related to related to its European operations of European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and there's dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm.
India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Apollo Tyres, now there's a buzz of a positive corporate development related to related to its European operations of European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and there's dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm.
India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Hi, thanks so much for joining in. You're watching NDTV Profit's ongoing coverage of everything that you've heard since 1:30 this morning, 1:44 to be precise. And you've heard several updates from the government, from the armed forces. Hiral Dadia is with me. My name is Alex Matthew. And joining us to talk about markets, to talk about India's response, and a lot more is Vallabh Bansali, who's the founder and chairman of Enam Holdings, requires no further introduction. Vallabh bhai, thanks so much for taking the time.
Yes, sir. Thank you for giving me the opportunity.
No, it's our pleasure entirely, sir. Your response, and let me contextualize this a little bit for our viewers. You've seen so much in markets and in this geopolitical tension that has not gone away. It's been bubbling and it's been under the surface and it keeps coming up. This response in the context of everything that you've seen over the last 3.5, 4 decades.
So, India has had very interesting neighbors. So this is our, like a conflict. And we have had to deal with it. It is amazing to see that how China at some point of time chose a way to grow. How Bangladesh after independence chose to grow. And how Pakistan unfortunately got waylaid by its army, militants, etc. And this is something that, you have to live with a cantankerous cousin or a sibling is that kind of situation. And though they got defeated in 1965, in 1971, in 1999, they received very powerful responses to acts of terrorism, particularly in the last 10 years. The memory of 1948, where, we don't want to go back into that. Since you mentioned historical perspective, I'm just raising it. It does not elude them. And it suits them because by keeping some kind of attrition going, army is able to justify, militants are able to justify. And it's unfortunate. And therefore, until the people of Pakistan adopt, embrace, and, are ready to sacrifice to establish thriving democracy in their country, just see their own, East Pakistan, how much it has progressed. Today, its per capita income is on par with India or shade better, depending upon many things, But how much has it progressed? But the people of Pakistan cannot see that. They've been so blinded by or so captivated by the army, etc., etc. And therefore, this is a reality that even if you do something, until the people come, we cannot ever be rest peaceful that Pakistan will not do something. Terrorism, attrition are a part of their statecraft. And even if you have, the apparently democratically elected prime ministers, they are not able to last in their office. So I think, it's like an endemic difficulty we got to accept and move on. And in that context, what we are seeing from the government, I think, I would like to give you a framework, 3 things. Our response is based on 3 things. Weaken Pakistan long term. Don't wage an expensive war, but give a fitting reply. And it takes time to, think of something which fits all 3, parameters. And they've done that. How many of us thought of water as a weapon? And, just the threat has created so much ruckus in Pakistan. So that's a brilliant response. So every time we have had to respond, we have responded brilliantly. And now also this. Because if Pakistan has nothing to say that you did it, there is no tat for something like this because we don't have terrorist camps. We are so focused target. We are not targeting innocents. We are very, very careful about all these things. And so we can only take pride in how we are responding, how we have very measured statecraft, how we are not affecting our growth, strategy. And what can be more brilliant? The same night that this is happening, we have the India-UK Trade Tech Pact, announced just a few hours before that. And so India largely is a story of growth and dealing with this nuisance from time to time in as intelligent manner as possible. I hope that we continue on this path. We cannot be negligent, but will have to be very measured as we have been in responding to unfortunate neighbor of ours.
Right. That's an interesting take, Vallabhbhai, Hiral on this side as well. India's growth story is absolutely intact. I mean, absolute precision when you say that. However, let's understand from you, because you've been in the markets, you've seen from, I think, the last 1964 war as well. After that, almost attacks, when you talk about the attack on the Indian Parliament, the blasts, the 26/11 attacks, your Pathankot, Uri, Pulwama, Balakot and Pahalgam. If you have to correlate all of these to what's happened in the markets, how have you seen markets react, number one? And what would your advice be to investors who are seeing this for the first time?
See, primarily, it is an orientation of a person. We have seen so much happening around us in terms of promoters going a certain way or another way, depending upon their orientation, or their family splitting, and then you're seeing people with different orientation. So what matters is that those who are oriented to long-term wisdom and path of prudence, irrespective of what happens, they may have a parental loss, they may have a natural calamity visit them, they want to, dust off the difficulties, build hope and get back to it. India is that country. So, take 91, right? 91 was an, cumulative effect of war against
Exploration Conference 2025. Space is not just a destination. It is a declaration of curiosity, courage, and collective progress. India's space journey reflects this spirit. From launching a small rocket in 1963 to becoming the first nation to land near the south pole of Moon, our journey has been remarkable. Our rockets carry more than payloads. They carry the dreams of 1.4 billion Indians. India's achievements are significant scientific milestones. Beyond that, they are proof that the human spirit can defy gravity. India made history by reaching Mars on its first attempt in 2014. Chandrayaan-1 helped discover water on the moon. Chandrayaan-2 gave us the highest resolution images of the moon. Chandrayaan-3 increased our understanding of the lunar south pole. We built cryogenic engines in a record time. We launched 100 satellites in a single mission. We have launched over 400 satellites for 34 nations on our launch vehicles. This year, we docked 2 satellites in space, a major step forward. Friends, India's space journey is not about racing others. It is about reaching higher together. Together, we share a common goal to explore space for the good of humanity. We launch a satellite for the South Asian nations. Now, the G20 satellite mission announced during our presidency will be a gift to the global south. We continue to march ahead with renewed confidence, pushing the boundaries of scientific exploration.
So that's Prime Minister Narendra Modi at GLEX 2025. We will cut back to him shortly. Thank you, Vallabhbhai, for your patience. But we were talking about the message that needs to go to investors at this point in time, for whom this kind of an event is absolutely fresh, who've not seen this, with your experience of the past events that you've looked at.
As I mentioned, that there will be war against us, and there will be war that we are waging against ourselves with, not well thought out policies or backward policies, control policies. So as long as we are following policies that will free our people, very broadly, I'm saying this, that free our people, we have the people that who are waiting for an opportunity. And second, we are giving support. First is freedom, second is support, and various kinds of support, whether it is financing, whether it is, market support. As long as you see that element grow, freedoms, financial support, market support, and government having itself the idea of, creating ease of doing business, which is kind of freedom, it is thinking right. Our long-term prospects will just keep improving. If we find that our governments are not doing something like that, then our demand and demographics are not enough. We need to add design and domination to demand and demographics. So any government can benefit from demand and demographics, but only a wise government will benefit from design and the desire to dominate. Prime Minister was talking about that, how, we are moving towards, progress. We are improving design, and one day it will lead to domination. He said, oh, we are not about domination. Not at this point of time, but in the commercial world, you have to dominate in a healthy manner. That you are large, but not to defeat others. India should always be, Vishwamitra, trying to help other countries rather than leaving them out, as is, being attempted by some big countries at this point in time. It is so sad.
Protectionism ultimately is going to be something that we're going to have to face as a nation and as a growing economic power, Vallabhbhai. But in that context, what you mentioned about the FTA that was announced just a few hours before the strike, it becomes so important, right? And so many nations looking now to tie up with India. In your opinion, how does this pan out heading into the next decade? A lot of people have called this India's decade, India's century, but what form will that take? If you're talking about labor-intensive sectors like textile or leatherworks or footwear or even IT, what according to you are the ones to watch in this changing global dynamic?
So firstly, I don't believe in India decade, India century, etc. I believe in day at a time. Can we make it India's day every day? And given that, as long as, so this is a very, very important milestone that we have reached, that not one country can dictate to the world. People will have bilateral, trilateral interest, etc. And that's a message to the world. So we've given two messages in the last few months. We responded very responsibly and sedately to, even after being the first country to visit America and then, have parlays with the president there. Second, we have come up with this important pact. Despite, this was in suspension for the last 2.5 years, at the first attempt, the first opportunity, we worked hard and closed this. And it's a wonderful pact. I think it reads very, very well. And this is the way to go. You're absolutely right that India has now given a signal to the world that, you have to look after yourself, and it is possible. And therefore, this is, saying another thing, that protection cannot be practiced in a meaningful manner in today's world. We are too linked to each other. Exchanges is the way of life. Nothing works, right? We take oxygen and we let out carbon dioxide because something else lets out oxygen and wants carbon dioxide. This is the way of nature. People trying to act against it is not possible. And it's so wonderful to see that our country has not been daunted and is trying to navigate these short-term tough waters. And this is the way to go. I believe that many other pacts will follow. Many other pacts will follow. And I think this whole balkanization of trade that is happening in the world is also going to get pushed back by very important pact by two large countries, number 5 and number 6 economies of the world. So all our compliments to the government that negotiated this in such a tough atmosphere. I'm so happy and delighted.
Absolutely. Vallabhbhai, as always, our absolute pleasure having you on the program. Thanks so much for taking the time.
My pleasure. Thank you very much.
Okay, so there you go. You've heard the leading market voices speak about the key developments from overnight, and Vallabhbhai focusing quite a bit on the trade agreement between India and the UK, and calling it a fitting response to the aggression that was shown in India. What I'm talking about, of course, is the surgical hit overnight. But let's focus now on the markets, on corporate conversations, on earnings, and Newgen Software is in focus, Puneet.
Well, definitely, the company came out with its quarter 4 earnings over the last couple of days, and very interesting stock because the mid-cap IT companies are largely showing a very healthy growth over the last few quarters, and this one as well, it is in focus. So let's welcome Mr. Virendra Jeet, who's the CEO of Newgen Software. Virendra, good afternoon, and thanks so much for joining us today. I just wanted to start off, with how the quarter gone by was for Newgen, because while we've seen growth for the company in this particular quarter, we've seen the largest vertical, banking, just show about 10% growth, which is quite meaningful, but it's slightly slower than what has been over the last 8 to 9 quarters. If you could just start us off first with what led to the quarter gone by, and also on banking, if you can comment something.
Good afternoon, and thank you for having me out here. I think you're right. And, we at Newgen are a growth-led company. We have been growing at 20% year on year for many, many years now, with very few exceptions in between. Our businesses in last quarter, generally grew, and the Q4 is the largest quarter, and it's typically a very large percentage of revenue. It again ended up being, this is the first time we crossed almost 400 crores of revenue in a quarter. The growth has been broad-based. It has been US provided a significant push in Peters. APEC provided it. Our markets in India and Middle East, both were sitting on almost 40% year-on-year growth on last quarter. So they were very heavy. That's why their numbers look slightly muted. But broadly, if you look at, we have done very well for the whole year. We have done around 20% growth for the year with expanding margins. We had almost 40% and more growth on the license revenue, which is the predominant factor on which our business gets determined. And that's how the downstream revenue kicks in. We also had 62 new logos, which is typically a quite improvement over even last couple of years. And then also the US market, which is typically where we are investing a lot, fired up for this. Broadly, it has been a good quarter, and the weakness which we see in banking or in EMEA or APEC for the Q4 is on account of very large base in terms of more than 40% growth last year. But we think that banking will continue to be our predominant market, and today it's roughly around 60 to 70% of our market, and I don't think there's any change going to happen in near future in that.
Got the view, Mr. Virendra, and I just want to take the point forward as well, because if I just take out the seasonality for quarter 4 and look at, for example, the bookings for the whole year, they've grown by roughly about 10%. And while this is a sizable growth, in the last year, you had roughly 23% growth. How would you want us to see the growth parameters in terms of bookings for, for Newgen over the next fiscal year?
The bookings are an indicator for next year's revenue, but not the only indicator. A lot of our revenue for that year comes in the bookings of the same year for that. So like last year, it was around 17%, for the whole year growth in booking. And this year, if you look at for Q1, Q2, Q3, it was a flatter booking, but our revenues grew much faster than that. And in Q4, we have almost around 27% booking growth in that. So the way we look at all that booking as well as the continuity of business we have the existing customers creates something which we call in business in control. And going to next year, we have more than 20% growth over previous year in our business which we are in control. That means for the business, we don't need new contracts, just renewals of existing contracts. And I think we should be able to scale that. So what I would say that, for next year's growth, we still are quite dependent on the deals we do in that year rather than the booking of the previous year.
And Virender, if you can, is there any kind of quantification that you can give us? Because, and correct me if I'm wrong, you're roughly 60 to 70% of bookings or order books that you build in a year gets consumed in the same year itself. So, is that the correct number? And also any kind of indication that you've seen currently in banking as well? Because we've seen a very volatile market for all IT companies based on what's happening in the US, as well as slower growth in Europe as well. So how would that shape up in the next year?
You're broadly right. Yes, a lot of booking which is done in that year gets consumed in that year because we have short execution cycles. Now, coming back to big business, if you look at Newgen, we are pretty diversified. Our business is spread between geos in terms of India, Middle East, US, and APAC now also contributing a large part of the revenue. So it's quite diversified. It's also diversified on verticals. So like while banking is the largest one, but I think predominantly if you see last year, the growth on government and insurance has been substantial. So it gets kind of a de-risked. Then also there is a very low degree of client concentration, so it is quite spread. What we have seen so far, from the conversations we have with our clients, we have not seen major shifts of priority or anything happening like that. That's also to do with the fact that we are still operating at sizes and numbers which are not at very strategic level deals in US. We're still talking of couple of $1 million deals, which are executed at more tactical level. And we have seen opportunities both in the growth side of the market or in optimization of side of our market where products and our solutions are well suited to do that. As of now, I don't see any challenge, to maintain a growth momentum. But having said that, the kind of uncertainty which is coming both from the US and other areas in terms of what's happening in oil prices and other things can introduce risks. But today, at the beginning of the year, we are projecting for another growth year. And we are planning like that. And I think we'll keep on, our eyes and ears open to see and make any corrections that are needed in between.
And Virender, one of the other segments that is major in terms of revenue is, of course, insurance as well as healthcare. I just wanted to understand that's roughly 14% revenue for at least the last quarter. Just wanted to understand, is this more focused on the US or is it evenly balanced between developed geographies essentially?
What happens last year beginning, we started investing more deeply on insurance and trying to build insurance to a sizable thing. And insurance is broad-based. Insurance is across all markets with both cases in India, Middle East, APAC, as well as in US. Healthcare is health payers and, the market is predominantly US. That's where we focus on. The health is only the US market out there. And luckily for us, the last quarter has been significant on US side. We got deals both in health side as well as on insurance side and multiple of them. And these were the first ones after we started redefining our plan to go to market. So we are excited about the space. It is early, and we'll have to wait for building the momentum of this business in US, but should yield us, give us substantial returns going forward in multiple years.
Just a follow-up on that, Virender, and that's my final question as well, because healthcare, you said, is more focused on the US and insurance is more balanced across geographies. But for healthcare in the US, we've seen, quite a bit of negative commentary coming because of spending cuts from the government as well for funding research projects under DOGE. So is that something that's a concern right now? What are you hearing currently on the ground as well?
So we operate in an area of which is called health payers and typically provider management. In those spaces, our solutions are about enrolling new partners, optimizing their digital onboarding processes. So I think what we are operating in a technology space which has always got an interest, both when there are costs to be optimized or the growths to be serviced. As of now, the concerns you're talking of DOGE or other things are a much different level than what at level we operate on. So, luckily or unluckily, we are still a smaller company and we operate at a tactical level. I don't see the concerns. In fact, we are very excited about the business of healthcare coming to this year. And we've already won some deals and we think that we'll continue to win few more deals this year.
Virender, got that view and thanks so much for the clarification. We'll leave it at that. Wish you the best for next year and look forward to our next conversation.
Thank you very much.
Well, that was Newgen Software talking about growth continuing into the next year as well. But with that, it's a wrap on this edition of Markets at 12. Stay tuned to NDTV Profit for more. Profit Buzzers comes up next.
Go गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Apollo Tyres, now there's a buzz of a positive corporate development related to related to its European operations of European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and there's dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm.
India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hello and welcome to NDTV Profit. My name is Mihika Barve and you're watching Profit Buzzers. Let's just take a quick look at how markets are faring right now. You have the Nifty 50 trading fairly flat but with a positive bias in terms of, the Nifty 50 counters. You do have Tata Motors, the top Nifty 50 gainer, up over 4% in trade right now, followed by some strength in something like Titan and SBI Life, Shriram Finance. All of these counters trading higher 1.5%. Something that's not doing so well is something like Sun Pharma, IndusInd Bank, ITC, all seeing cuts of over 1%. But it is actually the broader markets that are outperforming. The Nifty Mid Cap 150 up 1.3%. The Nifty Small Cap is up almost 0.9%. If you look at some of the mid cap counters, you do have 116 mid cap companies that are advancing. Some of them include Endurance Tech, up over 8% in trade today. You also have some strength in a KPR Mill, which is up 8%. BSE and Paytm are also buzzing on the back of a strong Q4 results. Both of these stocks are up 7%. You also have some strength in KEI Industries on back of their Q4 results, up 5%. Something that's not doing so well are some of the defense counters. Mazagon Dock and Bharat Dynamics down about 2 to 3% in trade. You also have some weakness in Patanjali Foods, down about 2%. Conversely, if you look at the Nifty Small Cap 250, you do have 159 small cap counters in the green. Something that is doing well is a Wellspin Living, up about 12%. And you have actually a host of textile stocks buzzing in trade today, potentially from higher export opportunities that arise from the India-UK FTA. You also have a Sirma, SGS and EMS counter that is up 10%. Vardhaman Textiles, KRBL, Indocount are some of the textile companies that are doing well. Something that's not doing well is Radco Khaitan, is down about 4%. While it did have a strong set of Q4 numbers, you do have some negative implications coming in from the India-UK FTA on the entire alcohol beverage space, as some of the tariffs on whiskies has been slashed down. You also have some negativity in Chambal Fertilizers, Craftsman Auto seeing cuts of 2.5%. Lastly, if you just look at how the sectoral indices are performing, the Nifty Auto is your top gainer, up 1.3%, something that is contributing to the gains for the Nifty Auto. You have Tata Motors up 4.5%, Bharat Forge up 4%, Samvardhana, Bosch, Ashok Leyland, all of these counters are up 2 to 3% in trade today. Three counters on the Nifty Auto that are under slight pressure. You have a Bajaj Auto, an MRF, as well as an Eicher, which is down about 0.2 to 0.4% right now. Something that's also doing well today is the Nifty Metal, up about 1.1% in trade right now. APL Apollo Tubes is a top gainer on the sectoral indices, down up about 3%. You also have some strength in Nalco, NMDC, Hindustan Zinc. Actually, all of the counters on the Nifty Metal, like you can see, are trading in the green. You also, something that's not doing well in terms of the sectoral, you have Nifty FMCG, Nifty Pharma, and the Nifty Healthcare Index. In terms of your FMCG counters, you have 9 constituents on the decline, Radico Khaitan being the top of them. You have ITC, Varun Beverages, Nestle. All of these counters also trading with a negative bias. And something that is doing well on the FMCG space is a Balrampur Chini and a Marico, up over 2%. But I want to bring in Puneet right now. Puneet, JBM Auto is a counter that has come up with his Q4 numbers. Could you tell us about how the quarter went by?
Well, definitely, and it's been a steady quarter for the company. Again, a very high growth trajectory for the company over the last year or so. And the electric bus segment as a whole has been in focus. We've seen, the legacy players also doing very well in terms of contracts, and the kind of outlook that the company will give as for next year is going to be something else to watch out for as well. But overall, let's go to the management now. We are now joined by Mr. Nishant Arya, the Vice Chairman and MD of JBM Auto. Mr. Arya, good afternoon. Thank you so much for joining us again. Let's start with this particular quarter as well, because we did speak, in February after a big order win as well. Just talk to us how this quarter has transpired essentially in terms of growth. You've shown decent growth of about 10.8%. Talk to us how this quarter went by in terms of execution for the company, as well as anything that we've seen post February as well in terms of conversations with any kind of state governments for new contracts.
Yeah, so this quarter we've grown by 18% in our EV business in the OEM division, and it has been a very good quarter. And as of today, we are seeing an order book of 11,000, close to 11,000 electric buses, which is a very strong base for starting the new year in FY26, and will move over FY27 as well. In the month of March, what has happened is that we have also got the deployment from ADB and AIB in our Eco Life Mobility, which is the e-mobility platform of the company. And so that has got completely funded for executing the projects. And clearly, we are seeing that the projects which have been signed, the PM E-Bus Seva 2 and the other projects in the past, which are formulating this complete growth trajectory, are on track and are moving forward, and we'll be delivering these buses as per plan.
Arya, just in terms of EBIT margins as well, if I look at your segmental performance, we've seen the components division have very strong growth in terms of margins at 8% now versus 5.9 same time last year. But the OEM division has seen like roughly 40 basis point of margin correction. So if you can just talk about the EBIT margins for both these, is there something to look at?
The OEM division, we've made investments basis which there has been some correction, but in the component division, the investments made in the past are yielding good results. So consistently, you would see that the growth in the component business and the OEM business is happening very clearly, because the OEM business is growing by leaps and bounds very clearly, because the business in hand is getting executed, and we are working consistently with third-party customers where we are delivering vehicles for tarmac applications, for staff buses, for electric coaches, to different customers across the country. And we are also exporting now our buses in Asia Pacific, in Middle East, Africa and Europe. And with the coming India-UK FTA, I think that is playing as a game changer because that will open up the UK market for us as well.
Just if I can take this point forward, Mr. Arya, in terms of the FTA agreement as well. If there is anything specific that you can talk to us about, what's the strategy for JBM specifically to take this agreement forward for you? How are you seeing the growth for you specifically? Because we've seen that there are some challenges in the market in terms of growth, in terms of UK specifically, and we've seen corporate action in one of your peers as well for the UK bus market. So what could be one of the key opportunities with this agreement? Will it be mainly also on the component side that you spoke about, but also in terms of exports of the full buses essentially? How should we look at it?
No, I think since the FTA has been just announced yesterday evening, so we would be deep diving into that and understanding more in detail. But we see that UK as a country and a region is going for a very high level of electrification and high-end products, which they're even exporting to other countries. So from a component and from an EV ecosystem perspective, we would be looking at that market as a great potential, which is waiting to be harnessed.
Just one more question in terms of the current order book execution. You mentioned 11,000 crores in terms of order books, and I think the number is 5,500 currently. How are you in terms of execution timeline? Where do you see the execution for at least the current order book? Will it be safe to say that in the next 18 to 24 months these should be able to be executed and given to the parties, because you also have a capacity of 20,000 buses?
Yeah, so we would be looking to execute the 11,000 buses by around FY27.
Mr. Arya, in terms of increasing, we last time we did speak about the battery as well, in terms of insourcing it and everything. Is that finally complete in terms of doing that? And are you looking to use all of the batteries specifically from your own manufacturing? And what's the outlook for this? Would you be separately reporting numbers, if any? Because this can also become an opportunity to get the batteries. Could be also another opportunity to look at separately as a business fundamental as well, right?
Sure, definitely. I think going forward, we were looking at doing that. But even today, all the batteries which we use in our electric buses are produced in-house. And we are ensuring that there is complete control and understanding on the battery technology, since that's heart of the system. And that's a differentiator in JBM, that we have battery technology, vehicle technology, charging technology, with complete software, hardware, and firmware being developed and executed in-house.
So, Arya, for joining us and kind of giving us an outlook on how the quarter went by, what's ahead, and we wish you all the best, and we look forward to speaking to you soon.
Sure, thank you.
India strikes back, and today India has conducted Operation Sindoor, where it carried out strikes in Pakistan and Pakistan-occupied Kashmir. In fact, the strikes were carried out in response to the terror attack in Jammu and Kashmir's Pahalgam on the 22nd of April. To discuss more on the same, Dr. Basham Kasturi, former Director, National Security Council, joins in. Dr. Kasturi, good afternoon and welcome to the show. Your first comment in terms of all that's transpired so far from last night, 1:30 a.m. to now. Yes, there is some bit of intensification in terms of LOC as well. How would you read into this, and what are the logical next steps that you're looking at?
Well, I think firstly, we need to look at this from India's perspective in being able to respond adequately, respond with precision, and carry out strikes on stated targets, which is the terrorist infrastructure, about which India has known for a very long time that Pakistan is a state sponsor of terrorism. Now, having achieved our immediate goals of having struck 9 targets across, as you said, across the line of control in Pakistan-occupied Jammu and Kashmir and in Pakistan, I think there will be a pause in which we will have to wait and see how Pakistan responds. So I think the first, the immediate requirement is, having achieved our goals, it is important for India to be prepared for the expected retaliation by Pakistan.
Mr. Kasturi, Mika joining from this side, do you expect any further escalation from here on?
Well, you see, Pakistan would be forced to, for their own domestic reasons, and also to continue with this charade of having, said earlier that we are not supporting terrorism, that we do not sponsor terrorist groups. They would have to, at least for the sake of form, come out with some kind of a response or retaliation, however small or adequate. There is, of course, a recent quote I saw this morning by their defense minister, Mr. Khwaja Asif, subject to it being verified, and he has said that if India were to stop its strikes, then Pakistan will hold its its cards before responding or retaliating. I think that's an important statement. It also shows the degree to which India has succeeded in its mission of targeting and destroying significant terrorist infrastructure bases.
Right. Mr. Kasturi, the other question I have for you is, when you talk about the officials coming out and saying that this is just phase one of Operation Sindoor, does that mean that there is further escalation that could be anticipated from our side as well, taking into consideration, that Pakistan has a reputation for being an asylum for terrorists, and there has been a huge outrage, not just in Kashmir, but across India. And there is some bit of brutality right now that they have actually targeted civilians on the line of control as well in the artillery firing. Does that really tell us that there will be further measures taken from our side?
Well, I think India would have prepared for all contingencies. And I think the idea that we have done phase one could mean that we have more in mind. But that the carrying out or execution of those would be dependent on what happens in the next 24 or 48 hours and what Pakistan does. Second, I think it will be based upon an assessment by the armed forces in India of what has been the impact of these strikes in phase one. If it is considered that we have achieved our goals, we may not immediately go into phase two. That would be my immediate response.
Okay. And Mr. Kasturi, in terms of the mock drills that are being conducted across the country, across states and districts, how effective do you think is that going to be in terms of the preparedness that we are looking at?
I think the idea of having mock drills is a very important thing. Please remember that we have not had mock drills since the 1971 war with Pakistan. And therefore, it's very essential for us to be prepared for the civilian population of India to be prepared in case there is an attack by Pakistan. Secondly, I think it's equally important that we, our disaster preparedness is in sync with the requirements of national security. We've had cases in the past, and India has been, if you recall, a first responder to virtually every natural disaster in the region. So therefore, I think a preparedness is good in that sense, but we need to be sure that all the steps that we take would be available, would be ready in case there is a retaliation, a massive retaliation by Pakistan on our civilian population.
Thank you, Mr. Kasturi, for joining us and providing insight on what could happen next and what India needs to watch out for.
Thank you so much.
Yeah. Well, as we all know, several mock drills do begin across India today, and sources told NDTV Profit that the Mumbai police is set to conduct a meeting with high-level authorities on the mock drill activities. My colleague Shabana Sheikh joins in with more details.
Mumbai police is holding a high-level authority meeting on mock drill exercises. Sources are telling us that over 20 senior officials, including the civil defense teams, the NDRF, NCC, Indian Navy and Indian Army, officials from fire and railway departments are also part of the meeting. What we're also hearing is that Mumbai Police Commissioner Deven Bharti is also likely part of the meeting. The meeting is being held at the Disaster Management Department of BMC headquarters in Mumbai, and the meeting will conclude within an hour. What we're also hearing from sources is that they could decide upon the timing of these mock drills that could be held in Mumbai today. The mock drill exercises could be held at the Chhatrapati Shivaji Terminus station around 3:30 p.m. today. Now, this is part of the government's initiative to execute one of the biggest nationwide defense mock drill exercises in the recent history. This is following the deadly terror attack at Pahalgam that happened on April 22.
Well, thank you, Shabana, for, getting us those details. But, Hiral, what seems interesting is that markets are showing resilience. In fact, we had an Anand Rathi note come in not so long ago. They're talking about the key reasons why we are seeing resilience. First of all, historically, most instances in the India and Pakistan, scenarios have not met with extreme movement in the Nifty. While we do, a certain pattern is usually formed. You do see volatility, Nifty hits a bottom and then it recovers in a few days. What Anand Rathi is saying that the probability of a full-scale conflict does remain low despite the heated rhetoric. Both nations have typically avoided escalation beyond tactical thresholds, and investors adept at distinguishing noise versus fundamentals. Anand Rathi is also saying that earnings, liquidity, policy direction, macro stability continue to drive flows and not border tensions. And the equity and FPI data also show that in peak crisis moments, markets have rebounded swiftly. And it's key to note that we have been seeing FIIs being net buyers for 14 straight sessions now. In terms of the outlook on the markets, Anand Rathi says that short-term volatility cannot be ruled out. It is definitely a possibility, but they do not expect any structural impact on Indian equities. Broader market narrative will continue to be shaped by the domestic macro strengths. But the question that's on every investor's mind is where markets are headed from here. Amidst the India-Pakistan conflict and the India-UK FTA, we spoke to Gautam Shah of Goldilocks Global Research and Sunil Subramaniam to understand the same. Do listen in.
Domestic liquidity remains quite strong. We went through a terrible bear market in the broader markets in the last 6 months. And despite that, the SIP figure continues to stand at 25,000 crores. And despite the recent correction, you have the Nifty valuation still at about 22 PE. So I think we are far, far away from overbought valuations. And that's probably the reason Indian markets have come back so strongly. So I think there is definitely more to come. And once this geopolitical situation stabilizes, I believe that the markets are actually heading towards levels of 25,500.
Market reaction point of view, my personal preference for investors is that those who are already invested, don't worry. Those who are traders, obviously don't do anything today. But those who have some free cash on their hand, right? Maybe you deploy 1% of the cash today into the market because you know that good quality stocks are going to suffer a little bit of volatility, which is nothing to do with their future EPS or India's growth prospects.
Right, so that's interesting commentary that's coming in from market experts as well. And what's interesting is there is absolute resilience in terms of Indian markets. Let's just pull up a 5-day chart of Nifty 50, then move to Bank Nifty and then move to Nifty IT Index. If you see in terms of the last 5 trading sessions, Nifty has been consolidating in a range. But what's happening is you're hitting that high, and at higher levels, you're seeing selling pressure that is coming in. And that's the trend that we've been witnessing. With this, if you see, even in terms of Bank Nifty, the kind of buying interest that did come in the last 1 month, it has started to taper off, right? But valuations are reasonable, and that's what fund managers are alluding to when you talk about the BFSI space. Let's look at IT, the 5-day chart in terms of Nifty IT as well, and then we look at defense. In terms of IT as well, it's an absolute topsy-turvy, right? flat in the last 1 week. And in terms of defense, let's pull up that one on the screens. There you go. 4.5% downtake is what we've seen in the last 1 week. But again, you are seeing buying that's coming in at lower levels. So these have been few of the sectors that we have been watching out for. But few of the stocks like Gokuldas Exports, Wellspun gaining in trade on the back of the FTA, Tata Motors gaining in trade on the back of the FTA. Apart from that, you have names like BSE, which is reacting to numbers, Paytm, which is reacting to numbers, Radico Khaitan also reacting to numbers. But let's quickly slip into a short break. We'll be right back with lots more on the other side. Please stay tuned to NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Apollo Tyres, now there's a buzz of a positive corporate development related to one of the related to its European operations or European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and there's dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm.
India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Welcome back. You're watching Profit Buzzers. Let's quickly pull up Nifty 50 and on the screen as well, because good moves coming in on that front. But one space that is in focus is the auto pack. Within that, you have MRF right now, which is just reported numbers. Revenues are up around 11.5% on a consolidated basis. The stock is seeing a good spike in trade as we speak. EBITDA up 18.3%. That's the number we're tracking. Margins have improved as well substantially. 15.2% versus a 14.4% is what you're watching out for. What's interesting with regards to tire companies is the raw material cost as well now. That is one of the factors probably that is working in favor, and that's the reason why you're seeing that kind of an expansion. But 29.3% is the kind of up move that you're seeing in terms of profit. 1,079 is what the EBITDA has come in at. 15.2 versus a 14.4 is what you're tracking. So that's with regards to where MRF goes. Strong moves, 3.7% up move, a good spike coming in with regards to MRF as well. Let's see, pull up the other tire stocks as well, because CEAT was one of the names that were in focus in yesterday's session. There were strong moves on that one. Today you're seeing some bit of profit booking that's coming in on a CEAT. Apollo Tyres, if we can have that one, as well as a TVS Sri Chakra. Apollo Tyres also interestingly is seeing a strong spike today, 2% right now as MRF numbers have come. And a TVS Sri Chakra, which is probably seeing cuts of around 0.9%. So that's what the tire space is looking like. That's a Balkrishna on the screens. Moving on, 14 rounds of negotiations, and 3 years later, India and the UK have signed a landmark free trade agreement or FTA. Mika joins us with the highlights from this deal. Mika, what does it mean for India's exports into the UK, and which are the sectors that will be impacted?
Yeah, so it was 3 years of stop and start negotiations, but yesterday the finalization of the deal was finally announced. India and UK have signed a free trade agreement, which also includes double contribution convention. Now, this took place after 14 rounds of negotiation over the course of 3 years, and the agreement is expected to be signed officially when the British Prime Minister does have his India visit this year. Now, the pact eliminates duties on nearly all trade lines, and this covers around 99% of the value of Indian exports, and this aims to take bilateral trade to $120 billion by 2030 and around 25 billion pounds by 2040. It is a major step forward in India's post-Brexit engagement with the UK, and the agreement also includes provisions on mobility for professionals, regulatory alignment, and exemption of UK social security contributions for short-term Indian worker. It also has provisions for professional visas, and one of the key aspects is that it does reduce the duties on scotch and whiskey. Now, in terms of what will India get, one is tariff-free access. Labor and tech incentive sectors also benefit the most, and it also gives a boost to exports across key sectors. Now, if you had to just look at how India and UK's import-export data pans up in terms of India's share in UK's imports in FY24, at the top of the list you had hides and skins 7%, textile and clothing at 6.6%, footwear stood at 4.2%, metals at 3.4%. You had fruit and nuts that came in at 2.9%. Other mentions are also chemicals, minerals, machinery and electronics, as well as fuels. In terms of how the free trade agreement has changed the duty scheme, in terms of products, you had animal, vegetable oil and processed foods, which had up to 20% in duties. Now, this has, under the FTA, it's 99% of these tariff lines are at zero duty. In terms of industrial goods, transport and auto, leather, footwear, electric machinery were the top three kind of sectors that had a duty range of 14 to 18%. Now this has become zero trade under the FTA. You also have the headgear space, you have the wood paper space, minerals, chemicals and mechanical machinery. So if you have to round it up and see which sectors get impacted, in terms of the positives, you have textiles, auto parts, IT services, pharmaceuticals, gems and jewelry, leather, engineering goods, shrimp exports, organic chemicals and defense. In terms of what could see a negative reaction, you do have the auto pack and alcohol beverage manufacturing companies.
Right, thank you for getting us the details, Mika. And this is an interesting space to watch out for. You just have Hudco earnings also, which are flashing at the bottom of your screens. A marginal uptick in terms of profitability, so a pretty flat number there. At around 738 odd crores, a 30% up move in terms of total income. And you're seeing the stock, which has actually nosedived as we speak. It's hit the day's low of 212.50 on the back of no major moves, at least in terms of the profit number that I'm seeing right now. I don't have the margin and the EBITDA profile yet, but 2,855 odd crores, a 4% up move in terms of profitability, and that's what the street probably is not appreciating, and the stock sees a nosedive as we speak further. 2.5% downtick coming in terms of where Hudco goes. Let's also welcome in our guest, Gaurang Shah, Head Investment Strategist at Geojit, and Gaurav Sharma, Associate VP and Head of Research, Equity, Commodity and Currency at Globe Capital. Welcome to the show, gentlemen, and thank you for speaking to us at NDTV Profit. Gaurang, very quickly, let's start off with you in terms of the FTA deal. We have been looking at various sectors that Mika was getting to us as well that could be beneficiaries. In fact, the discussion in the newsroom was what gets cheaper, specifically with regards to cars, what gets affordable that's coming in, the alcohol, the scotch and the gins that get cheaper as well. But that would act as a negative for the domestic manufacturers. Your quick view in terms of sectors or stocks that could benefit and stocks that would lose in terms of your picks.
Well, thank you for having me on the show, and good afternoon to all of your leaders. So I think it will be a little bit premature to guess names over here because I've yet to get across to the fine print of this long-awaited foreign trade agreement between UK and India. It was in work in progress for the last 3 years. Finally, it has taken the shape and the frameworks have been finalized. Very soon, we'll have the have it signed, sealed, and delivered. India has also invited the Premier of UK to come to India. Hypothetically speaking, purely I'm taking a guess, Hiral. I don't have much insight onto it, but yes, I think you mentioned about alcohol stroke high spirits segment. One thing in India that I have noticed is that there is a lot of dedicated consumer loyalty towards a particular product and affordability. These are the two important drivers which has the high spirit segment in high spirits. Yes, of course, the single malt and bourbon would become relatively cheaper. But again, how many of consumers can afford that kind of high brand even after the price cut? So that's one question. Secondly, I think autos, textiles are the other two sectors which will see, which will be in spotlight, given the kind of opportunity that will be opened up. In autos, I think one of the greatest beneficiary we've seen today is Tata Motors because of its manufacturing facility of Jaguar Land Rover GLR in UK. And of course, the production export that was halted to US has started about a couple of days back. Chemicals and electronics, I think, would be the other ones that would possibly be in the spotlight.
We have gathered some of the counters across various sectors in the Indian landscape that do have exposure to the UK and could benefit from the India-UK free trade agreement. Now, up first, you have the textile space. We've seen a lot of these stocks actually buzzing in trade today. You have something like a Wellspun Living. You have something like a Trident, Indocount Limited, KPR Mill, Pearl Global. You also have Gokaldas Exports that is seeing positive movement. SP Apparels, Arvind Fashion are some of the counters. In the gems and jewelry space, you have counters like Rajesh Exports, Viber Global, as well as the PDS. You've seen Viber Global and PDS actually seeing strong movement today. In the shrimp export space, counters like Avanti Feeds and Apex Frozen could be in focus. Both of these stocks gaining 3 to 4% in trade. In the alco beverage space, it's a mixed reaction. You have Radico Khaitan that is down about 4%. United Spirits and Allied Blenders that are also in focus. United Spirits flat right now, but Allied Blenders is up 4%. You also have the rice exporters that are in focus. You have a KRBL as well as an LT Foods that could see a higher export opportunity, up 2 to 4% in trade right now. In the industrial packs, names like Thermax, Cummins India, Greaves Cotton and ABB India do have exposure to the United Kingdom. And in the chemical companies, you have counters like Avinante Organics. You have Gujarat Fluorochemicals, which actually has 24% of their revenues from the European Union. And Aether Industries, Balaji Mines, you have Naveen Fluorine, SRF, Himadri Speciality, Lakshmi Organics and a Fine Organics that are in focus and have exposure to the country. Among the pharma companies, names like Lupin, Glenmark Pharma, Cipla, Sun Pharma, Dr. Reddy's and Biocon are on our radars. In the auto and ancillary space, you have Tata Motors, which is in focus today, which is up 4%. In the tire space, you do have a Seat, an Apollo Tire, JK Tire and Balkrishna Industries that do have exposure to the United Kingdom. Forging space includes something like a Bharat Forge and an RK Forging. Even in the auto ang space, you have an Endurance Tech, Samvardhana Motherson, a Sona BLW, a Sansera Engineering and Suprajit. You actually have Endurance up 8%, Samvardhana up 3% and positive movement in these counters. And lastly, in the IT pack, names like TCS, Wipro, HCL Tech Mahindra, Emphasis, Mastech, Sonata Software, Persistent, Coforge, LTI Mindtree are what's on our radar.
Right, thank you Mika for that detailed explanation on which stocks stand to benefit on the back of UK FTA. Gaurav Sharma, let's welcome in our technical guest for the day, Associate VP and Head of Research with Globe Capital. Gaurav, coming to you on this one, United Spirits was a consensus beneficiary of that. We have seen the stock being quite volatile in trade today. Any technical views on that counter?
Viewers. Yeah, it's been a volatile stock. Tipsy tops have been witnessed it went down in line with some profit taking in the markets initially. Now it has recovered off late. Technically, it looks in strong hands, sustaining somewhere reasonably around 15, 70, 75 odd levels. Things look a little better also from current levels, and I see it heading towards 1600, 1650 in the immediate near term.
Right. Sticking to the UK FTA thing, the auto sector is expected to see the biggest sectoral impact from the Indian-UK trade agreement. To explain how exactly will it change India's auto sector, we have Tushar joining in now.
Good afternoon, Thomas. So yes, one of the key beneficiaries of the India-UK FTA will actually be the auto sector, because the auto tariffs actually been slashed to 10% from over 100%, but with a certain amount of quota. At this point of time, let me make it very clear that we don't know what the quota is. More fine print is has to emerge. But this actually, the duty-free structure will be on the imports of ICE vehicles from the US is limited to a predefined quota. The duty-free quota on EVs is limited only to a few thousands. No out-of-quota duty reduction for EVs. Out-of-quota duty on ICE vehicles will be reduced gradually over a period of time. That will actually insulate the India's auto industry from imports that may come from the UK. Likely winners are already emerging. Tata Motors is clearly the winner, because of its JLR factory. Remember, JLR makes the Range Rover range of actually SUVs in the UK. That the prices of those cars will reduce when they come to India, almost reducing by a half. Mahindra is set to have a minimal benefit as far as we can see right now, because Mahindra has already disclosed its plans to actually export its electric vehicles to Europe. The UK may also open. The company has not commented on that fact yet. Minimal impact to negative impact can be seen on Maruti Suzuki as well as Hyundai. They do make cheaper cars under the rupees 20 lakh price bracket, because most of the car imports that become cheaper from the likes of Toyota, Nissan, Mini Cooper, Rolls-Royce and Aston Martin cater to the luxury segment. All these cars are made in the UK, so they may not come below the 20 lakh rupees price bracket where Maruti and Hyundai function, or most of the models are. But the pricier models, which are the SUVs, which are priced above 20 lakh rupees, like the Alcazar and other models that may come in, may see some pressure going ahead. The biggest gainer, so to speak, would be the auto components industry. The company, the space actually was dealing from the impact of from the US tariffs, 25%, which came into effect on 3rd May. They will see a big fillip when the UK FTA deal comes into effect. Swamit.
Right. Thank you so much, Tushar, for all the details. But few stocks are in focus on the back of earnings. Let me start with KEI Industries. Wherein if I were to talk about the number, good set of numbers. If you see, the domestic institutional wire and cable was up almost 12%, and the sales through dealer and distribution was at 52% in FY25. But the sale decreased in EPC, and the company had a pending order of rupees 3,893 crore, and the net profit growth that you are seeing has also led by other income. So this is when it comes to KEI. The other stock which is in focus is Aarti Drugs. Again, good set of numbers. The stock is up almost 15%, if I'm not wrong. There you go. Now the revenue growth that you're seeing is led by global demand for APIs, and the API volume grew 15%, which was led by exports, and the margins are actually flat, suggesting cost pressure continuing to, and which has offset gains from the revenue growth. And the net profit growth that you're seeing, which is 33%, is aided by lower tax. Then on my list is Avalon Tech. Again, good set of numbers. The margin expansion is led by lower employee costs, and the India manufacturing actually represents 87% of revenue, which has delivered a 14.2% EBITDA and 9.5% of PAT in FY25. And the order book has also increased 29% year on year. Last on my list is Poly Medicure. Again, good set of numbers. The stock is up almost 4% in trade today. Now, the export business for them grew 13.5%, and the export growth that you are seeing is led by performance in the key international markets. But geopolitical tensions and tariff war led to short-term demand uncertainty in exports. And the domestic business that you're seeing grew almost 24%, and the renal division, which is the growth driver for the company, continues to gain market share in domestic market, and the renal business grew almost 69% year on year. So good set of numbers when it comes to all four stocks. Gaurang, Let me come to you. Aarti Drugs gave good set of numbers, and even if you see Poly Medicure also, gave a good set of numbers. So your view especially when it comes to Aarti Drugs and Poly Medicure?
Well, so I think it's been, again, we don't have a specific coverage on either of the two companies, but I can say this much that for Aarti Drugs, I think it's been quite a while since we saw the kind of turnaround that all of us were waiting for. And rightly so. Again, no specific comments in terms of Aarti Drugs. For Polygab, I think, you're referring to Polygab, if I'm not mistaken. Did I hear the name right?
Poly Medicure.
I'm sorry, I won't be able to comment on this one since we don't have coverage.
Okay. And Gaurav, how are charts looking for Aarti Drugs, Poly Medicure, and of course Avalon Tech?
First, I'll take up Aarti. Charts are well paced. The stock, some bit of formation, good positive formation is there, and we are expecting that going by the same formation, it will head towards 3-4% odd move in this particular move itself. Now, as far as Poly Medicure is concerned, it has already run up too much. So in the past, say 8 to 10 trading sessions, the stock has already moved up from 2400 odd levels to currently trading around close to 2900. So if one has to take a long position, it is better to wait for a 8 to 10% dip from here and then consider it for a buy side. What is the third stock that we are looking at?
Right. Okay. Now staying with earnings, other set of earnings in focus, Mahima gets us details of Radico Khaitan and Kansai Nerolac Q4 numbers.
Right, so I'll start with Radico Khaitan. Numbers were in line in terms of the quarter. There was a bumper volume growth of around 27%. Gross margin recovery has continued this quarter as well. So overall, a great set of numbers. But I believe that the stock was already kind of expecting this, and the kind of growth that the company has come out with is already priced in. Now, in terms of how earnings fared, revenue was up 15%, EBITDA was up 45%, margins improved to 13.6 versus that of 11.3, and net profit was up almost 60%. The company also declared a dividend of 4 per share. In terms of how segments fared, Prestige and above category for them, volumes grew by 16%. Prestige and above net realizations were up around 11%. Regular category volumes grew by around 17%. This was of course on the back of a low base effect as well. But overall non-IMFL sales declined by 14%. So that's the one negative that was seen in the results. In terms of outlook, the company has said that they eye 30% growth overall in luxury spirits, and what they're aiming is that the overall revenue from luxury spirits will go to 500 crores by FY26. The next one is Kansai Nerolac. In terms of how revenues fare for this paint counter, well, the numbers were a bit disappointing. Revenue was a beat, but margins and net profit overall a miss. EBITDA was a miss, of course, on the back of a higher subsidiary loss, but gradual recovery has been seen in overall demand is a positive commentary coming in from the management. In terms of the numbers, revenue was hardly up 3%. EBITDA was down 7%. Margins at 9.1 versus that of 10.1, so 100 basis points dip there. Net profit was down 6.5%. In terms of how segments did, well, new categories drove the overall beat in the decorative paint segment. However, the automotive paint segment did outperform the decorative paint segment for yet another quarter. And overall, the demand outlook picture, we'll have to wait and see as to how the management commentary fares in that matter and see as to how stock reacts post that. So this is the overall view as to how Q4 earnings have panned out for Radico Khaitan as well as Kansai Nerolac.
Right. Gaurang, coming to you first on the paint sector, the Kansai Nerolac number doesn't appear to be that bad given the fact that now crude prices are lower. They also have a raw material benefit that could come in for these paint companies. Do you see this to be a major positive, and how are you looking at the demand trends to be going forward for the entire paint sector, and what would be a top pick here?
Well, so the answer your last question first, top picks would be Asian Paints, Kansai Nerolac, and I think Berger Paints, if I'm not mistaken. We do have coverage on Berger Paints as well. Well, my sense over here is that, Berger Paints, we don't have current coverage. We used to cover Berger Paints, but Asian Paints and Kansai Nerolac, are the two ones that we have coverage on. Currently speaking, yes, of course, crude oil coming down does have a positive impact on the input cost of overall input cost for the paint manufacturing companies. Expect the paint sector to perform well on 2-3 counts. One is, of course, numbers should improve going forward, subject to crude oil prices staying at lower level. Second positive is that the rub-off positive impact of recovery in real estate sector also percolates onto the paint sector, pipes and fittings, sanitary ware companies, vitrified ceramics, etc., etc. And there is also a good positivity about a new order market demand improving and the repeat market demand also improving in terms of upgrading your residence or home and home refurbishing. So we remain positive on these two names, Asian Paints and Kansai Nerolac.
Right. And Gaurav, coming to you on Radico Khaitan, how's the stock looking like on charts?
Prior to this news that about the UK trade agreement, the stock was well placed on charts, specifically when we look at from a short-term perspective. But it simply nosedive post that, and a decent, good amount of profit taking was business from its peak that was close to 2650. Currently, the stock is down nearly 200 rupees in the day's trade itself. So I see it falling a little bit more and heading towards 2350 in the near term. So short-term traders can consider taking a buy position around those levels and look for targets close to 2550.
Right, got that view. Well, Polycab also, posted its Q4 numbers, and we spoke to the management about the quarter gone by. Please listen in.
I think so. It will be continued because of the huge infrastructure work is going on, and especially green energy, solar and wind is going full-fledged. Railways expanding huge, and industry is also increasing their capacity because they feel that future demand is going to be good. And main point is what today the people of the world is respecting India because they feel that India will be the best country to import from there. So demand is continuously because of our infra development is huge. So it is going continuously. So today I think so everybody have got a huge orders to feed that infra work and the solar and green work. And the building construction also is going in a big way in the 2-tier and 3-tier cities also.
And Mr. Jaisinghani, do you see in the current market that the cables growth is outpacing the wires growth, or is there anything on that front that you can quantify for us?
No, it is both sides. Cable is more demand because of the infra side, but building construction also demand is good, reasonably good.
Mr. Tonge, let me come to you as well on the numbers specifically, because you've seen a very strong expansion in terms of margins as well in this particular quarter. Could you just talk us through first also on the commodity cost side, because we did see some kind of reprieve in terms of copper prices, but if you can just talk us through for Polycab, how was the margin profile in this particular quarter maintained, as well as something on the copper side as well?
Thank you for having us. You're right, this was the best quarter as well as the best annual performance in the history of the company. We were able to breach 22,000 crore rupees of annual turnover. We are now the largest company in the electrical sector. And profitability wise also, we were able to reach to almost 2,000 crore rupees, again, highest in our sector. On the margins, it's comparable with last year and within the guided range of 11 to 13%, slightly better than the guided range. We believe that this range is maintainable, and as part of Project Spring, which is the next 5 years transformational project, we would be able to grow at a rate 1.5x of the industry growth rate with similar margin profile. As far as commodity prices are concerned, we have a very robust risk management framework wherein we are able to pass on, in general, the movement in prices, whether it's upward or downward, to the end customer, and we don't take any positions as such on the movement of copper or aluminum prices. And to that extent, we believe that we should be able to maintain our EBITDA range of 11 to 13% in years to come.
Right, so this was Polycab, giving us a growth, how 26 and 27 will look like. But Gaurang, Polycab came out with a good set of numbers. So just wanted your view on that. And plus, in cables and wires industry, which is your favorite pick?
And so on Polycab, sorry to disappoint you and your viewers, but we do have a sell call on Polycab, to be very honest. Positive coverage, yes, KEI Industries is something that we have a positive coverage. And if you think Havells India, because that's also into electrical appliances as well as electrical peripherals like wires and cables, etc. So we've been positive on these two names for some time.
Right. Another couple of stocks that have been the top gainers among the FNO stocks are BSE and Paytm on the back of the Q4 numbers. Let's get in Harsh with more details on why these stocks have been gaining.
Well, I'll start off with Paytm first. Strong or decent performance on the operating side of things. OPEX, in fact, calibrated. And therefore, you saw 1% decline sequentially with regard to OPEX, which aided the numbers with regard to Paytm. They've achieved EBITDA level pre-ESOP, EBITDA profitability, which is the one positive metric that we were talking about. Also, there's been a one-off, around 520 odd crores of one-off and anticipated, but this came in the month of April. And therefore, a lot of analysts had not baked this into the numbers when they had put out their estimates. And therefore, while PAT or rather loss is a miss, that loss number after tax loss is a miss, it's largely because of the fact that most analysts had not built that number of 520 crore one-off into the numbers and their estimates. Overall, otherwise, the numbers were extremely strong. It's a beat, and that's why you're seeing the reaction on the stock. BSE, on the other hand, as well, a positive set of numbers, especially when you're comparing the numbers of BSE and NSE. It's a very strong set by BSE. While NSE's margins have come off, BSE's margins have actually improved despite it being a tough quarter and multiple headwinds coming through from a regulatory perspective. Despite that, and BSE's management seems to suggest that volumes have been lower, but on non-expiry days, volumes have inched up, which is what has aided some of the numbers as well. They're expecting some of these trends to continue, and therefore robust with regard to even their guidance going forward. They're expecting that these trends will likely continue and continue to benefit BSE, and hence that reaction on the counter again.
Gaurav, coming to you first on Paytm. A sharp up move that we have seen post numbers. Do you see more of an upside coming in for Paytm from here on?
Yes, Paytm looks upbeat on charts and currently trading just around 875. I see it heading towards 900, 950 levels very soon, and even 1000 can be seen in maybe 1 or 2 weeks now.
Right. And Gaurang, your views on BSE, they have been gaining market share from NSE. Do you expect that trend to continue and the numbers to be upbeat even going forward?
So we like the Indian capital market sector. And if one is of an opinion or a view that we are going to do well over the next 3 to 5 years, then our sense is that all those companies which are associated with the Indian capital markets, be it a platform provider like BSE, be it a service provider like CAMS or CDSL. As a matter of fact, on CAMS, we do have a positive coverage on the fundamental side, or be it intermediaries. All related companies are supposedly going to do well. Like I mentioned, positive coverage on CAMS amongst the names that I mentioned.
Thank you so much for that view, and thank you Gaurang Shah and Gaurav Sharma for joining this conversation. Viewers, this is all the time that we have on this edition of show. Stay tuned to NDTV Profit.
That's huge. That is a biggie. It's out of there.
गोल्ड ग्लास क्लियर ग्लास, कार हो या नियर, सब कुछ दिखे क्लियर.
Apollo Tyres, now there's a buzz of a positive corporate development related to one of the related to its European operations of European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and there's dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm.
India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Apollo Tyres, now there's a buzz of a positive corporate development related to one of the related to its European operations of European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and there's dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm.
India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Welcome, you're watching Profit Top Trades. I am Mahima Vachrajani and with me is Alex Matthew. Of course, the talking point today is the India-Pak conflict, but we've seen an interesting thing that markets, no matter what, have remained resilient. Now, the question really is that whether this was actually priced in. I mean, that's what the analysts are actually indicating, that this kind of strike back was priced in the markets, and the markets are mature enough to react to the overnight developments that have taken place. And to take this conversation ahead and discuss as to what next for the markets, we're joined by Sujan Hajra, who's the chief economist from Anand Rathi, who's joining us now. Warm welcome to you, Sujan. My first question to you is that markets have shown extreme resilience today in terms of the kind of escalations that have taken place, right at the border. What's your view like as to, was this already priced in, one thing? And the kind of bounce back also that we've seen from the lows today is quite interesting. So what's the outlook like?
So typically what we have done, we have actually published a study this morning which traces back 11 events between India and Pakistan since 1990. And in every episode, if you look at the market actually did not correct significantly. The only event for which market corrected between India-Pakistan tension was during the parliament attack in 2001. During that period, Sensex and Nifty corrected almost 14%. But even in that case, the background was not the military actions, but it was because the S&P 500 corrected 30 percentage point during that period. So in that sense, Indian market outperformed. So basically what I'm telling is that in all of the last 11 episodes of heightened tension between India and Pakistan since 1990, market never reacted significantly.
Okay, so hi, Sujan, Alex here. If market is not reacting to that, and evidently so, that's evident in what we're seeing on the screen, what are the factors that, in your opinion and your studies, are influencing the equity markets and the other markets, the capital markets in India?
Yeah, so obviously it's the fundamentals are, say for example, in the medium term, it's really corporate earnings and valuation. And from a longer term perspective, it's really the macro factors like growth, inflation, the state of government finance, and these are the factors. These are the factors which are influencing the market. And you have to understand that the escalations which we are seeing in the last 30 years, with the exception of the Kargil war, and to some extent the parliament post the parliament attack when we saw the Operation Parakraman, the 500,000 military mobilization. Except for these two events, the escalation has been pretty limited. The tensions have been pretty limited geographically. So therefore, I don't think market takes it too seriously from earnings or valuation perspective.
Sujan, but there might be a short-term impact whatsoever when it comes to certain sectors like hotels. You have your aviation being a bit impacted, even your booking platforms. What's the view like there? And I mean, what should one do right now with those sectors which might get impacted in the near-term future?
Yeah, so far as hotels are concerned, the only listed player which has footprint in J&K is Indian Hotels. And there also the kind of revenue which is coming from that geography is very limited. So therefore, we don't expect any major impact there. So far as the aviation is concerned, the main issue could be Indigo. But once again, the diversion of the route for Indigo, particularly from flights from Delhi and thereabout international flights. But if you see that all the airlines are now avoiding the Pakistan airspace, all the major airlines. So therefore, in terms of cost disadvantage, we don't see much, and therefore loss of traffic. So therefore, there also we don't see much impact. For the travel aggregators, obviously the Kashmir, we have seen a large number of cancellation, but in most cases, these cancellations convert into another destination. So therefore, again, there also we don't see much impact playing out. So net, we are not seeing any major. There may be slight marginal negative impact on all these three sectors you just named. But the extent we think it will be very, very low.
All right. And I think that sort of sums it up. Thanks so much for joining us today and for speaking to us about that study. I think what you're speaking about is evident in the market as we see it right now. Let's, in fact, take a closer look at what's moving in trade today. And the benchmark Nifty 50 just about treading water, about 0.1% lower. And the broader market's actually looking quite sanguine. You have the mid-cap index that's up about 1% or so, the small-cap index, quite a bit of chop and churn at the broader end, but still gaining about 0.5% or so. In fact, let's pull up the advanced decline ratio just to give you some sense of how that has moved through the day. And as you can see, there's quite a bit of a tussle between the bulls and bears in trade today. But as things stand, pretty much even Stevens between the advances and the declines. Let's also pull up the sectoral chart and see what is moving in trade. And it was more green on the screen maybe about half an hour to an hour back, but that is now split midway through. You have the auto index that's up about 1.2% or thereabouts, led by Tata Motors. You have metal that's up about 1% or so. You have energy that's up about 0.6%. And then on the losing end, you have defense, which is down about 1.4% or so. And FMCGs is down about 0.6%, pharma about 0.5% lower thereabouts. Metal, of course, reacting possibly to overseas developments, China cutting the policy rate by about 10 basis points. And if there is a boon to that economy, or there is a bolstering of economic growth there, that is positive for metals as a whole and commodities as a whole. So there is, of course, a raft of stocks that is reacting to the other key development from overnight, which is the signing of a free trade agreement, something that has been in the works for 3 years between the United Kingdom and India. This is seen as a shot in the arm for quite a few sectors, not least of which is the textile space. And there are a few stocks, Wellspun, for example, that is moving up and how in trade today. Mahima, it's a sector that you track closely. Why is this such a significant positive?
Right. So as you mentioned, the UK FTA, which has been in negotiation for the past 3 years, around 14 rounds of negotiations have taken place, is now finalized, and this is definitely a big beneficiary for textile exporters specifically. Now, there are a couple of factors playing their role where textiles comes into picture. There's Bangladesh +1 strategy, which is in favor of India. Plus, there are negotiations going on with the US as well in terms of tariffs. And the analysts and sources predict that overall India will have an upper hand when it comes to textile exports as compared to Bangladesh. So both the UK FTA plus the US tariff negotiation combined together is posing a very positive outlook for the entire sector. Now, in terms of what stocks might get impacted on the back of that, a lot of these stocks are also moving in trade today. You have something like a Wellspun Living, as Alex mentioned earlier, up 14%. Trident Limited, we also have Indocount Limited, a small counter compared to what where Trident Limited stands, but significant amount of their revenue comes from export. The stock is up 11%. There is KPR Mills, Pearl Global, Gokuldas Exports, Arvind, SP Apparel, all of these counters buzzing in trade today on the back of that. Now, just to give viewers a perspective, overall India's share in UK imports in terms of textile and clothing, in terms of where India stands at FY24 export share is around 6.6%. So there's a lot of scope as to where textiles can grow from here, which is why the entire sector is buzzing in trade today. And textile could possibly and is possibly the sector of the day, and throughout in closing also we're going to discuss as to why this could be a big win for India when it comes to UK FTA. Leather is also another counter, but leather comparatively has very small counters, small market cap companies which are listed, which is why we're not seeing big moves in those stocks. But the other beneficiary is auto components and auto. We're seeing those moves in those auto components and auto stocks as well. Tata Motors, we have something like Endurance Technology doing very well in trade today.
Tata Motors, most certainly. Let's pull up Tata Motors and see where it is right now. Endurance is up 11%. Tata Motors at the high point of the day about 5% higher. And this is because of the favorable treatment that is anticipated on autos that are imported into India. And as you know, Jaguar Land Rover is a UK-based company with a large portion of its manufacturing in the UK. Of course, do remember that a few of their products are manufactured in India as well, but then the whole range of products could benefit from any a reduction in the customs, which is pretty high for completely built units, which is essentially the import of the whole vehicle, as it is called. In case you didn't know, there is the CBU, which is a completely built unit, which is the whole vehicle being imported, or there is a CKD, which is the completely knocked down unit, which is parts of the vehicle that are brought in here and are assembled that gets a more favorable customs treatment. But to talk about the sectoral impact from the India-UK trade agreement and to explain to you how exactly this will change India's auto sector, Tushar is joining in with this report.
one of the key beneficiaries of the India-UK FTA will actually be the auto sector, because the auto tariffs actually been slashed to 10% from over 100%, but with a certain amount of quota. At this point of time, let me make it very clear that we don't know what the quota is. More fine print has to emerge. But this actually, the duty-free structure will be on the imports of ICE vehicles from the US is limited to a predefined quota. The duty-free quota on EVs is limited only to a few thousands. No out-of-quota duty reduction for EVs. Out-of-quota duty on ICE vehicles will be reduced gradually over a period of time. That will actually insulate India's auto industry from imports that may come from the UK. Likely winners are already emerging. Tata Motors is clearly the winner because of its JLR factory. Remember, JLR makes the Range Rover range of actually SUVs in the UK. The prices of those cars will reduce when they come to India, almost reducing by a half. Mahindra is set to have a minimal benefit as far as we can see right now, because Mahindra has already disclosed its plans to actually export its electric vehicles to Europe. The UK may also open. The company has not commented on that fact yet. Minimal impact to negative impact can be seen on Maruti Suzuki as well as Hyundai. They do make cheaper cars under the rupees 20 lakh price bracket, because most of the car imports that become cheaper from the likes of Toyota, Nissan, Mini Cooper, Rolls-Royce and Aston Martin cater to the luxury segment. All these cars are made in the UK, so they may not come below the 20 lakh rupees price bracket where Maruti and Hyundai function, or most of the models are. But the pricier models, which are the SUVs, which are priced above 20 lakh rupees, like the Alcazar and other models that may come in, may see some pressure going ahead. The biggest gainer, so to speak, would be the auto components industry. The company, the space actually was dealing from the impact of from the US tariffs, 25%, which came into effect on 3rd May. They will see a big fillip when the UK FTA deal comes into effect.
Okay, Tushar, thank you so much for breaking that down for us. Now let's take a look at some of the earnings which came out post-market yesterday, and some big movers there. Varsha joins us with more details on that.
Thank you for that. So let me start with KEI Industries, wherein let's see the key highlights. What led to the revenue growth? You have domestic institutional wire cable was up almost 12.4%. The sale through dealer or distribution was 52% of sales in FY25, but there was a decrease in sale when it comes to EPC, which so the sale was decreased 62% year on year, and a company has a pending order for around 3,839 crore. And the net profit growth that you are seeing was led by other income. Next on the list is Aarti Drugs. You see stock is up almost 14-15%. Good set of numbers. The revenue growth that you're seeing was led by a strong global demand for APIs, and the API volume grew 15.5%, which was led by exports. And the margins are actually flat year on year if you see, suggesting cost pressure continue to offset gains. But quarter on quarter, if you see the margins, there was a good uptick when it comes to EBITDA margins. Next on the list is Avalon Tech. Again, good set of numbers. The margin expansion that you're seeing was led by lower employee cost, and the India manufacturing represents 87% of revenue, delivered 14.2% of EBITDA and 9.5% of PAT in FY25, and the order book has increased to 29% year on year. Last on my list is Polymedicure. Again, good set of numbers. Their export revenue grew 13.5%, and the export growth was led by strong performance in key international markets, but geopolitical tensions and tariff was creating short-term demand uncertainty in certain export market. But the domestic revenue, if you see, grew 24%, and the renal division, which is the next leg of growth for the company, continues to gain market share in the domestic market, and the renal division overall grew 69% year on year.
All right, thanks Varsha for getting us those details. A few more stocks in the financial space that are reacting to earnings, and I would like to talk about BSE first in the capital market play. Of course, the stock is reacting to numbers that are good in the context of a tough quarter. So take a look at the headline numbers, right? So you have 75% increase in the revenue, and it has come in ahead of expectations at 846.6 crore rupees. Of course, the entire picture is a little bit mixed if you look at the consensus estimates, but remember that it's a tough quarter that they've operated in. The operating EBITDA includes a a component that is the core SGF, and that has stood at 593.6 crore rupees, and that has that margin has also come in very substantially higher. Of course, there's that one-off that we've talked about. The margin is up about 45 basis points, the EBITDA margin at 57.09% versus 56.64%. The PAT number as a whole is up over 100%. It's coming at 493 crore rupees. The expectation was about 410 crore rupees, and so it's ahead of expectations. It's doing quite well in trade today. Paytm is the other stock in the financial space that is reacting very sharply to numbers. On the upside, it's up about 7.4%. Here too, there is a one-time loss that they have incurred to the extent of 522 crore rupees. The net loss is coming at 544.6 crore rupees, and that compares with an expectation of a loss of 178 crore rupees. But do bear in mind that a large part of that loss is on account of the one-time loss. The EBITDA loss has come in at 88.6 crore rupees. This is also slightly higher than the loss that was anticipated. Now, the 522 crore rupees of loss that they've incurred on a one-time basis is on account of an accelerated charge of 492 crore rupees after the CEO said that they would forego ESOPs. Now, what else do you need to bear in mind on Paytm? The gross merchant value is up by 1% sequentially to 5.1 lakh crore rupees. The financial services revenue is up about 9% sequentially at 545 crore rupees. And they have a very substantial cash balance of 12,809 crore rupees as well. They have what has worked for them, and this is the reason why the stock is up and about. The EBITDA before the ESOP profitability, or rather the EBITDA before ESOP is showing profitability, which is seen as a positive. Though the revenue is below expectations, the OPEX or the operational expenditure has been controlled in the quarter gone by, and that is something that is seen aiding the numbers. That one-time loss, of course, has pushed them into the red. Mahima, there's of course there's several sectors that react when there is geopolitical tension. We're seeing considerable resilience in the markets today, and I think, if I'm not mistaken, defensives take a bit of a knock when you have these conflicts. Has that panned out today?
Well, we're seeing that. In fact, we're seeing that in Nifty FMCG that is down. Let's pull up the Nifty FMCG and see how much it is down by. It's down by about 0.6%. Nifty IT is another counter which is generally considered as a defensive play, but it's trading flat, and this could be on account of the UK FTA trade as well, because services are going to get cheaper by that trade, which is why the Nifty IT has kind of remained resilient. Now, in terms of what sectors might get impacted in the short run, could be the first could be travel and tourism. That could take the first hit, because airlines today came out and told that the flights going to and from Srinagar will not operate. So flights are the first, the airlines are the first ones which will take the hit for a shorter term perspective. So your Indigo might get impacted. Hotels like Indian Hotels, which has exposure in Jammu and Kashmir, might get impacted for a while, because tourism will take a halt there. In terms of booking platforms, Ease My Trip, Ixigo, etc. might also get slightly impacted, because bookings in terms of tourism might go down. And actually the tourism season is kicking in, which is why the impact might be higher here. In terms of consumer discretionary, well, slowdown in consumer discretionary spending might be seen. This is because in a situation where people are worried as to what will happen next, it is possible that people will not spend on consumer discretionary items like your jewelry, your watch, your high-end electronics. So jewelry counters like Titan, Kalyan Jewelers, Ethos, Senco Gold, etc. might get impacted. Electronics like Blue Star, Voltas might see some impact. Even fashion apparels like Aditya Birla Fashion, Page Industries, Raymond Lifestyle also might see some impact there. But mixed signals in terms of food delivery platforms, your quick commerce platforms, your Zomato and Swiggy. People might stock up the overall essentials that they need in terms of living, and people might order these online. So it's a positive there. But overall, if something happens beyond this, if Pakistan retaliates, we might see that people might not order online, or if things escalate, that could be the case. And lastly, in terms of FMCG, consumer staples, they remain winner here because people might stack up in terms of their essentials. So staple companies might see a short-term spur in terms of their selling. So these are some sectors that might see some kind of reaction here or there, or some kind of spur in terms of their sales and volumes. Earlier this morning, we were also joined by Sandeep Tandon, founder at Quant Capital, where he elaborated about what investors should keep in mind before investing, of course, considering the recent development between India and Pakistan. Listen in.
If you look at without any biases, mutual fund industry is sitting on a very large amount of cash. Okay. And this concern of Indo-Pak tension has come very recently. I think the cash level has increased because of a global trade related tariff which is going out from January. So if you look at from that background, is very constructive. When cash levels are so meaningfully high, okay, the leverage position has corrected a lot, okay, and the participation is completely missing. In fact, if you really look at in last 15-20 days of buying activities which is happening in the market, is like largely FIS has come back, with which they were seller for last many years actually. Okay, so after long period of time, seeing FIS is coming back, and domestic guys are slightly nervous because they have made a lot of money in the past, and any signs of any disturbance which is there in the more from a tariff perspective has psychological hurt them, because many investors are seeing now 1 year's negative returns. So some amount of concerns are coming. I think the way I look at the market is that you don't have to look at for just last 6 months or last 12-month perspective, because equity market a long term. Okay, if you're looking for 5-10 years perspective, I think from a longer term perspective, I think it's a great opportunity, and I will have a very constructive outlook in this background rather getting panicky, because the government is handling with a lot of maturity. Global forces are behind us, so we have huge psychological comfort. As I said, leverage positions is missing, FIs are buying. If you look at all combination, okay, then I think all combinations are endorsing a up move rather than a down move in the market on the immediate basis.
All right. Now, that view is somewhat echoed by Sunil Subramanian, who said that if there are drawdowns in the near term, you should consider deploying some of the cash that you might have available to you. Listen in.
Market reaction point of view, my personal preference for investors is that those who are already invested, don't worry. Those who are traders, obviously don't do anything today. But those who have some free cash on their hand, right? Maybe you deploy 1% of the cash today into the market, because you know that good quality stocks are going to suffer a little bit of volatility, which is nothing to do with their future EPS or India's growth prospects.
All right, the question that's on every investor's mind is where the markets are headed from here amidst the India-Pak conflict and India-UK FTA. Gautam Shah of Goldilocks Global Research believes that the markets are headed towards 25,500 levels. Listening.
Domestic liquidity remains quite strong. We went through a terrible bear market in the broader markets in the last 6 months, and despite that, the SIP figure continues to stand at 25,000 crores. And despite the recent correction, you have the Nifty valuation still at about 22 PE. So I think we are far, far away from overbought valuations, and that's probably the reason Indian markets have come back so strongly. So I think there is definitely more to come, and once this geopolitical situation stabilizes, I believe that the markets are actually heading towards levels of 25,500.
Okay, shifting back to earnings, MGL, Mahanagar Gas, is up about 2% after its Q4 numbers, and Somit is joining in to tell you about some of what has played out in this quarter and also possibly on the roadmap going forward. Somit?
Well, yes, if you look at the Mahanagar Gas numbers, on the face of it, the numbers might look much better than what the street was estimating, but this is largely because of a one-off of around 63 crore rupees. Now, this was related to a provision related to OMC commissioning, which has been adjusted from the revenue, EBITDA and net profit. Now, adjusting for this one-off of 63 crore, revenues were up just 2.5% on a sequential basis. EBITDA was largely flat. EBITDA per unit, EBITDA was up 0.6% at rupees 8.4, while the net profit was down around 7%. 11% on a sequential basis to 209 crore rupees. Now the total volume for the company, that increased around 2% on a sequential basis, while 11% on a YOY basis to 4.19 MMSCMD. Again, these numbers were much below than what the street was estimating, adjusting for that one-off of around 63 crore rupees. Now also when you compare the numbers with what IGL had reported, MGL's volume growth was much better than IGL, but the EBITDA growth for IGL was much ahead of that of compared to MGL. IGL's EBITDA grew nearly 5% on a sequential basis, while that of Mahanagar Gas just grew by 0.2%. Net profit, both the companies saw a decline. Both the companies had this one-off. IGL one-off was around 110 crore rupees. For MGL, it was around 63 odd crore rupees. But all in all, the numbers for Mahanagar Gas were below the street estimates. However, the stock is gaining 2% on the back of the fact that the outlook could be much better. The company will be holding their conference call today at 4 p.m.
Okay, thanks so much, Somit, for getting us those details. Keep that on your radar. For now, that brings us to the end of this particular episode. But, well, from Mahima and myself and the team that put this show together, thanks so much for watching. Up next is India Market Close, and the team will take you through how the markets wind up today's eventful session. Do stay tuned. This is NDTV Profit.
Apollo Tyres, now there's a buzz of a positive corporate development related to one of the related to its European operations of European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and there's dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Indus Waters Treaty of 1960 will be held in abeyance with immediate effect.
India will identify, track and punish every terrorist and their backer.
Earlier this morning, as you would be aware, India exercised its right to respond and preempt as well as deter more such cross-border attacks. These actions were measured, non-escalatory, proportionate, and responsible.
An absolute resilient day for the markets. Harsh, welcome to India Market Close. I'm Hiral Datia and with me is Harsh Saita. Harsh, if you see in terms of levels, we opened up in terms of today's session slightly negative with cuts of around 0.2%. Absolutely flat yet again at 24,374. But what's interesting to notice, we are not seeing a major dip that's coming in. Yes. There is that little bit of fear that is still there, which is not even letting us go higher, because the key level that we were watching out for was 24,500. Only if we surpassed those kind of levels, you could see a triggered fresh up move. But again, 24,200 becomes the crucial support. We are far away from that as well, so don't see that pressure building in. So that range bound trade, that consolidation is what markets are looking like. If you see in terms of Bank Nifty as well, 0.2% higher on this front. So you're seeing somewhere around that 54,400 mark on that front. But let's look at the broader markets with this, because that's where all the action has been right now.
Absolutely, and there you go. That's the intraday on the Nifty mid cap. Well off the lows, right? We're roughly 500 points from the low point of the day to the high point of the day. Currently sitting somewhere in between, maybe, but more towards the higher side. So almost 500 points gain from that lowest point of the day. So the Nifty mid cap showing plenty of resilience, plenty of zing. The Nifty small cap also around 0.8% higher. Again, from the lows, we've done fairly well for ourselves. Nearly 300 plus points, 350 plus points on the Nifty small cap as well. So on both of those indices, definitely doing well.
But you know what's working over here is, if you quickly pull up Nifty 50 heat map, you'll understand. And then let's pull up NSE 500 as well, or BSE 500. Tata Motors continues to hog the limelight, clear beneficiary in terms of the FTA. Yes. But apart from that, the breadth is still somewhere in favor of the bears. Some bit of bulls are picking up on that front, so it's seeming to be a kind of an equilibrium right now. But what's putting pressure is Sun Pharma, Asian Paints, Bajaj Auto, HCL Tech, Grasim, ITC. The trend was, we started off the day with majorly the consumption-driven stocks which were under pressure, and for obvious reasons that the fear amongst investors is there, and that's why your consumption part of it is slowing down from a market perspective. However, names like Shriram Finance, Titan, Bajaj Fin, Geofin, Tata Steel, Coal India will be reporting numbers today as well. So a pretty mixed trend coming in there. And if you see from a sectoral perspective as well, defense continued to see that kind of an up move in terms of today's session. IT, which was one of the key beneficiaries of the FTA, has been ruling under pressure. Let's see where that is. I think that's again gone into the positive venue of defense, which has come down
IT
to
is around
1.3%.
thereabouts.
So it's a very interesting mix. And I think, you know, the smaller sectors which will be reaping benefits of the FTA is what is pulling the broader markets higher as well.
I think we've brushed off everything with regard to India-Pakistan. We're focusing more when it comes to sectors with regard to the FTA. Look at auto, 1.5% higher.
Tata Motors, M&M.
Correct. Metals have done well. Today the resilience continues with regard to where metals is concerned. And banks are doing okay. They're largely performing in line with what the index is doing. Flattish with probably a slight positive bias.
Pharma and healthcare again comes to the limelight with the kind of overhang they have in terms of the US tariffs, right?
Correct. So despite UK being a respite, US is pulling.
So that overhang till that does not go away. Plus your US FDA costs increasing, and that's what is putting pressure on this front. But an interesting day of trade. There is resilience in terms of where markets go. If you have to talk about the escalations that we've seen in terms of Indo-Pak as well. But let's also welcome in our guest, Abhay Agarwal, who joins us on the show as we speak. Abhay, good afternoon, and thank you for speaking to us at NDTV Profit. A good day to speak to you, where you're seeing so much of resilience in terms of markets. Don't see that kind of fear from a technical perspective. Good amount of consolidation that's happening. What is your read at this time, taking into consideration where we are?
Good afternoon, Alex and Hiral. Great talking to you. I'm not surprised by this resilience. I mean, though I would not, I was budgeting for a knee-jerk reaction, but very happy to see there is no knee-jerk reaction to, to the ops carried out by our forces. I think there was some bit of cap on market that was put up by the geopolitical tension over the last couple of weeks, because there was no surety of what kind of action, how deep, how big will that action be, what kind of escalation that will lead to. So I think, frankly, with last night's action, there is a bit of relief that, okay, now we at least know what action has been taken. So I think what we are seeing, the resilience is some part of that. And there was a lot of money sitting on the sidelines, and I think that is probably now starting to come in, assuming that we are not going to see an escalation of a major kind, or this is not going to become a broad war. This will largely be limited to, hitting the enemy targets, very concentrated targets, not a wide range, conflict, and maybe some action at the borders, but nothing beyond that. So I think this kind of certainty as it emerges over the next 2-3 days or next week, I would not be surprised to see a bigger relief rally that also takes in from here. The good thing to see today is also it is this kind of support to the market is backed by good volumes. So it's not a thinly traded day, which shows that money is coming in from domestic investors as well as foreign investors. So yeah, overall, I'm pretty happy to see this kind of response. Now it is, I think, in week or 10 days, the market participants and fund managers will start focusing on the results aftermath and what is the management commentary, what is the corporate earning growth going to look like. I think the conversation will probably start switching there now.
Point taken, Abhay. Abhay, this is Harsh Saita joining in. First off, Abhay, want to try and get your take with regard to how you would play on a day like this. Let's just assume you want to buy something. Would you hold off any buying at this point, or would you buy today? How would you look at it in the broader scheme of things? Because of course there is plenty of conjecture on what is going to happen next, right? And nobody is really sure. So there's plenty of uncertainty.
No, I think that uncertainty is par for the course, in any kind of market. So, but yeah, absolutely, it is elevated at this point of time, knowing what we know and what action has been taken. But, in terms of allocation, I would say that this is a market which has seen pretty bad times. We had very aggressive selling by FPIs in January, February, March also. Then the market started stabilizing in April, and now we are seeing more strength coming in, largely because of return of foreign investors. And though it is drips and drabs, but still it's a positive flow after a very long period of time. So as an asset allocator, I don't want to be under allocated to the Indian market. I don't want to be in a situation where I am trying to time the market. I think a lot of time people, when they look at Indian market, they go wrong because they try to time it to perfection as if they know when is the right time to buy. And I think that's where, investors who stay invested benefit from days or even weeks when the market goes one way, which is up, and then they benefit from that. The investors who try to time it too well or time to perfection, they exit the market, they miss the up days, up weeks, and as a result, underperform the market. So I think for any investor, it is very important to stay appropriately allocated to Indian equities. If you're an Indian equity investor, of course, bit of maybe 10%, 15% of cash calls you can take. You're trying to time the market, but frankly, my experience is a futile effort.
Okay, point taken. So don't time. If you have an idea, deploy today. Essentially, that's the message coming through. But Abhay, interesting times from a trading perspective as well. There's plenty happening on the India-US front. Of course, a resolution there awaited, and awaited in bated breath. In fact, pharma will be one sector which will really be waiting for what transpires there. But India-UK, and that's the key positive today, at least plenty of sectors buzzing on the back of that India-UK FTA. How do you look at it? How big of a positive is it for India from an Indian standpoint, and does it change the hypothesis for maybe a sector or two for you as well, fundamentally?
I think it is a giant size positive, and I think the impact of this will be felt over the next 1 year. I think from a signaling perspective, it is very important to note that the government has pushed through this UK FTA, which was hanging fire for last 10 years, and there was a lot of dogmatic calls that were taken that look, UK wants spirits, alcohol to be not duty free but lesser duties from 150%, and that is not something that we will accept. And there was a lot of posturing going on that. But the speed with which over the last 1 month this whole thing has come together, I think both from an immediate benefit perspective and from a signaling perspective, the government has sent a very strong signal to the global markets that we want to increase our share of global trade. We want to become equal partners. We will do whatever it is required to get into a situation where make in India for the world becomes a reality. And I think I would compliment the government to push through this and be seen as a very strong global player, in the other trade level. And I think this same signaling and the same thing will continue with the US government also. I'm pretty positive of that because you can't have a US again.
So Abhay, clearly, would it be right to say, number one, that the dynamics of the markets have changed with the FTA being signed? Because before that, fund managers, markets across were talking about putting your bets in terms of BFSI or the domestic oriented sectors. And if that is the scenario now where dynamics have changed, which are the sectors would you start nibbling at?
We have already been nibbling here. Our biggest overweight in our model portfolio is the EMS space. So again, not buy recommendations, but since these companies are part of our model portfolio, company like Dixon, Amber, Keynes, Sirma, because these companies benefited from the PLI that the government rolled out to make India self-dependent on a lot of things that we were importing, like TVs, mobile phones, electronics, computer equipment, laptops, routers, that kind of stuff, which we are all making in India and making at good scale. So what happened is that what started as a small experiment has scaled up big time. And that's why you have companies like Apple planning to make their entire US consumption of phones from India. So what that scale is doing is it is making us very competent as a manufacturer for the first time of equipment and products that the world needs and has typically been sourcing from China. So first time we have a situation where our companies which have spent last 5-6 years investing in building manufacturing capabilities are now globally competent players. They don't need subsidy support, they don't need other kind of support because we are benefiting from scale, So I think this is a story, India as a manufacturing hub across products. You have seen it in pharma, you've seen it in electronics, mobile phones. You will soon see it in other more complex products also, once we have our own semiconductor packaging plant starting June, July this year, Tata's and Keynes. I think a lot of things will change dramatically and the world will hopefully see India as a manufacturing hub. So we are quite bullish on that theme that India can manufacture not only for itself, but for the world.
Okay. And Abhay, finally, just trying to get a sense on what you would completely avoid at this point. What are you finding as that pocket which should not currently be touched for whatever various 2-3 reasons which you can highlight?
Yeah, I think there are two sectors that we are very underweight. We have no holding in our model portfolio. And one is IT services, because I think that whole game of labor arbitrage, frankly, has outlived its utility. And unfortunately, our leading companies in IT services space have not innovated to the extent that they should have. They are behind the curve on adopting new technology. And as a result, the growth guidance is what it is, 0 to 2%. The margins are under pressure. The customers want 20% price discount. So it's a very tough situation that our IT services are going through. I'm hopeful that a year or 2 years, they will be able to become more competitive, but it will require a lot of reset at their end. So I don't want to pay 20 to 25 times price earnings multiple for these companies when they are guiding for a 2% growth. The second is the large FMCG players in India, companies which are trading at 45 to 60 times P multiple with a 2 to 5% growth, very anemic volume growth. And the reason is that they are probably not able to compete with the local brands which are expressing their own might in their own territories. So I think these are the two sectors which are very high priced valuation wise when you look at the growth guidance that they have over the next 1 year. So those are the two sectors I would avoid right now.
Right, interesting. Consumption and IT, two sectors that Abhay would be avoiding as well. Thank you, Abhay, so much for joining us on the show and sharing those views. So interesting aspect coming in from sectors that you could actually place your bets on. EMS does come in as one of the top picks there. But one stock that is hogging the limelight today from the pharma pack is Aarti Drugs. Let's quickly pull up that counter on the screens and what the stock is doing in trade at the day's highest levels with gains of around 18% coming in there. Adish Patil, CFO and CEO, joins in. Adish, good afternoon and welcome to the show, and a pleasure to speak to you as well after a really long time. What has worked this time around? Because clearly on a year-on-year basis, if you have to compare, absolutely somewhere flattish, but it's the sequential growth that tells us the story wherein things have improved, specifically from an API pricing perspective. Where are the concerns? And secondly, what has led to this growth?
Yeah, so the entire reason for the growth is the volume demand. And especially it was driven by export market. In fact, the year-on-year quarter performance, domestic demand was quite flattish. There was a slight bit of growth, but export was more 25 to 30% volume growth was there. So that was one of the reasons. Yeah. So that was one of the reasons for having good revenue in this particular quarter. And it was from our existing product profile only and from the existing markets. No new markets have been opened up, just pure good demand, I would say, in Q4. And going forward, we have to sustain this demand. And the thing is, we have a couple of more product lines which are coming up through our greenfield projects. So that will also help us in growing further from these levels in the coming year.
Adish, this is Harsh also joining in. Curious to know, so if it's only volume driven, how have margins expanded? Give us some context to that, because is it just the scale which has helped you get better margins?
Yeah. So if you see, if you look at the entire year, definitely the gross contribution margins have improved tremendously with respect to the first half of FY25. And we were always telling that once the decline in the raw material prices halts and the prices stabilizes, and once the high cost inventory is over, then our gross contribution margins will look better. So they are looking better from December quarter, December and March. But in March quarter, what happened further is, because of the high utilization of capacity, because of the operating leverage, the overall EBITDA margin expanded. And that was the main reason. Because of the volumes, the EBITDA margins expanded further.
So do you expect this to therefore sustain, Adish? What's the outlook for FY26 like, both in terms of volume top and therefore top line as well as margins? Is there scope for further margin expansion, given the fact that you could see some bit of pricing tailwind, if at all?
Yeah, so as far as pricing is concerned for the API market, December quarter it got stabilized, and the March quarter and December quarter more or less the pricing is similar. So we don't foresee any sharp spikes in the prices of APIs going forward. So all we have to look at is maintain the demand. And another thing, the positive thing for FY26 would be a reduction in power and fuel cost for us. So the initiatives what we are taking in, for example, the solar power plants and the cogeneration boiler, which we are implementing this year, the entire potential would be around 25 to 30 crores of cost saving just in power and fuel. Maybe 10 to 15 CR will come in this financial year, FY26, and 25 to 13 the subsequent year. So that also will help us improve our EBITDA margin almost by 1% or so.
Okay. Adish, another question I have for you is in terms of the revenue target. 4,000 odd crores is what the company has indicated for FY28. Taking the current market scenario into consideration, is the company on track, or do you think that will require some bit of a revision?
Yeah, it will require some bit of revision because of the pricing. So what we have observed in FY25 is that even though year on year the prices have gone down, but within the financial year itself, the second half pricing was almost around 4% lower than the first half pricing. And now because the prices have stabilized at lower level, so we thought so we looked at the current pricing scenario, and what we feel is that in 2 years time, that is, let's say by FY27, we will try to reach 3,000 crore turnover mark, and then after that around 3,500 crore. 4,000 with this kind of pricing, I think we will need to have more facilities and more production lines to reach that turnover.
Okay. So what will that revision look like currently in terms of FY28? From a 4,000 crore kind of a number, what would you pull it down to?
Yeah, so we would still try to achieve 3,500.
But conservatively, if you have to look at it?
Conservatively, let's say 3,200 to 3,500 crores.
Okay, so 32 to 3,500 crores is what you should be watching out for. Apart from that, now when you're talking about, as Harsh asked you about the margin profile as well, where do you want to take that contribution of the formulations business to? Because that's the business which is high margin yielding, which is still only 9% of your business. So any aspiration in terms of where it could go to from here on if you have to improve your margin profile?
Formulation, we would be taking it up to 10 to 15%. The reason I'm saying just 15% is because our spec chem products, nutraceutical and intermediate line is also expanding in coming 2 to 3 years. Means we have already put the greenfield capex, and all those production lines will be going commercial in this particular year. So what we feel that in 3 years time also, the formulation won't be beyond 15%. But I would also like to point out that in this particular year, the standalone business, which is the API and Spec Chem, has actually done better margins of about 14.5% in March quarter.
Right. Adish, also want to understand, now that the Tarapur plant issues are resolved, how quickly does revenue start to come through from that part of your business? Also, where do you sell to from there? Is it UK as one of the locations, destinations, and therefore will you benefit from this India-UK FTA?
What we see is that there are not many formulation companies, manufacturing companies in UK. So it may not help us in API business, but definitely the formulation business, the formulation dossiers which we have, and we do have a UK MHRA approved plant for formulations. So that business might get some help because of this. Having said that, if we talk about the Tarapur plant, which is the API plant, from there we sell. As of now, we were selling to semi-regulated markets because we had import alert on that facility till January, and we got it cleared. So there is a lot of potential for the European market as well from the same facility. And because there was a stigma associated with the import alert, we were not able to sell to the European markets. So the European sale will pick up faster. And then maybe in 12 to 24 months, the US sale will also pick up. And once US sale picks up, the margins will be much higher for that market.
Okay, Adish, thank you so much for joining us, giving us all of that perspective with regard to Aarti Drugs. Stock is on a tear in trade today on the back of those numbers. 18% higher now, the stock, Hiral. with regard to where Aarti Drugs is concerned. But what we're going to do is we're going to slip into a very short break. On the other side, we're going to do Heard on the Street as we always do. And we'll quickly take our stock of the day as well, and we'll try and have a bit of a chat and get more views with regard to specific counters. Stay tuned. More action on the other side.
Indus Waters Treaty of 1960 will be held in abeyance with immediate effect.
India will identify, track and punish every terrorist and their backers.
Earlier this morning, as you would be aware, India exercised its right to respond and preempt as well as deter more such cross-border attacks. These actions were measured, non-escalatory, proportionate and responsible.
Apollo Tyres, now there's a buzz of a positive corporate development related to one of the related to its European operations or European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and there's dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Welcome back. Thanks for staying with us. That time of the show where we get you all the chatter from dealing room. Somit is with us. Of course, a pulse of dealing rooms on a day like this, Somit, becomes critical to understand what's happening. What are you hearing?
Well, few stock-specific action that I've been picking up. Firstly, on Titan is what I'm understanding that there are buy flows in trade today and hence the stock is up. But what I'm picking up from dealers is that smart investors or large HNIs have been selling their shares ahead of the fourth quarter numbers of Titan. They're selling on every rise that we are getting today in Titan. When it comes to Biocon and Voltas, dealers are indicating that mutual funds have been buying both these counters. For Voltas specifically, dealing room check was that the worst seems to be now priced in for the company. If you look at the share prices, it has fallen from 1500 rupees that we had seen a couple of months back to around 1200 levels, and now worst seems to be priced in, and there are some buy flows on the mutual funds for Voltas as well. When it comes to JSW Energy, off late there was a large FIR who was a seller in JSW Energy, and that's the reason we had seen a sharp fall in the share prices from 510 rupees to around 465. But now what I'm picking up from dealing room is the fact that the selling is largely over, and there could be a bounce back in the share prices of JSW Energy. So keep an eye out for JSW Energy as well. And Asian Paints is one counter which is down around 3% ahead of the fourth quarter numbers. Now earlier in March we had highlighted that there could be some CEO change, and again the buzz is on the street that potentially there could be some CEO or management change announcement that could come in for Asian Paints.
So that's an interesting one, I think, in terms of Asian Paints, because the kind of pressure that it's building up in today's session clearly is telling you some story with regards to the stock. But thank you so much for getting us that one right now. Stock nearly at the day's lowest levels, and Titan again, that will be reporting numbers in terms of tomorrow's session. We'll take both these counters with our guests, but before that, also let's welcome in Kush Bora, founder at kushbora.com. Kush, before we talk about the stocks that Somit was mentioning, one aspect that we need to consider is in the way markets are performing today. There is good amount of resilience as we speak. Absolute range-bound trade is what you're watching out for, and this is in spite the Indo-Pak tensions that continue. Plus, there is positivity from a fundamental perspective if you talk about India-UK FTA. If you have to look at Nifty 50 and Bank Nifty, we were looking at around 24,350 as one of the key support levels. On the higher side, 24,500 is what the street was eyeing to get a fresh trigger point. What is that close that you will see in terms of today's session, which will probably help investors understand the direction of the market?
Hey, hi, Hiral. First of all, very good afternoon. Well, I think this must be one of those rare trading days where, there is action on the border. And, if you weren't tracking the news flow and just tracking the markets, you would have never come to know, right? That's the kind of market that we are in today. That's the kind of structural shift that has come about in the markets over the last decade or so. So I think the retail investors and also how the economy is shaping up, I think all of that, no matter how much ever credit you give them, seems less. That's the kind of setup we are in. Now let me just continue with the theory that let's for a minute assume that there isn't much happening on the border front, which it is. I'm just saying from a market perspective. The view that we carried yesterday continues to remain, because if you see the technical aspect of the market, we did discuss how the call option based from 24,500 is shifting lower to 24,400, but there's enough support around the 24,300 mark from a put option perspective. In fact, I went and checked the next week expiry, not the 18th May, the 8th May, the 15th May, and there is still writing at the 24,400 put option level. So when you ask me what is that level that I'm eyeing in terms of a positive close, even if we close above the 24,400 mark, that will be a big, take, considering everything that's going on, around the borders as well. So for me, this buy on dips view is very much intact. I will still go with the view that as long as, tensions don't escalate, and from a market perspective, as long as we respect the 23,800 and 24,000 mark, I think this rally is, going to hold on, and this might just act as a launch pad for the index to move higher to 24,600 now. Once again, and then 25,000. So fairly constructive. It's just that the levels that we discussed in terms of the support zones and the strong ones that should be respected in the coming days.
Positive, Kush, even with regard to the Bank Nifty?
So mild caution there, Harsh. And the reason for that is that for the last 9 sessions, we've had 7 sessions which have ended in the negative. And while we've discussed time and again that the kind of rally that we had from April. After that, some correction is far for the course, and I think we are now nearing that 20-day moving average support zone of 53,800. Also, we've seen some correction, in SBI and HDFCs of the world. I think that the correction in ICICI remains elusive, but once that Trioca is complete, I think Bank Nifty will head higher. It's just that because the near-term momentum has turned a little bearish, I wouldn't really bet big on it just now. Till some of the key levels, in this case it being 55,000, 54,800 to 55,000 being taken out. But yes, if you ask me from a medium-term perspective, I still think that this dip will turn out to be a buying opportunity. Just the level that you have to watch for on the downside is 53,800, 53,750.
And what are your picks for this afternoon, Kush, therefore?
Sure. Going with a mix of a long and short, as you would guess, yesterday we discussed a short on ACC, that played out. The second target was 1830, and that's been hit. So I think that continuation of short trade is, fairly logical. So 1805, 1780 are your targets on the downside. 1865 is now where you place that stop loss or trailing stop loss if you did listen to us and, initiate that short trade yesterday. On the long side, I've got Fusion Finance. Now, very interesting setup on this one in the sense that, the stock is consolidating. Mild negative bias over the last few days, but today it's respecting that 20 and the 50-day moving average convergence near the 150, 155 mark. The volumes are seemingly picking up on this one. But if I remember correctly, there was very healthy institutional activity in the last quarter on this one, where I think the FIS stake had actually gone up. Now, after a longish bit of consolidation of the last 5-6 months, the stock is now seeing uptrend, in volume side. So if you want to consider from a medium-term perspective, I think 170, 180 are your targets, and 150 is where you place that stop loss.
Right, so that's the topic coming in terms of where Fusion Micro goes from Kush. Let's also welcome in Samir Dalal. Samir, good afternoon and welcome to the show. In this kind of a market right now, with everything that's happening around, where would your bets be?
Honestly, my bets would be on sitting on a bit of cash, right? Look, I'm not denying the fact that the way India has responded is very non-aggressive per se, to put that we don't want to escalate the situation, but you got to remember we are dealing with a state that is not in all probability run in the right manner. So if they do respond and things escalate, it could be a problematic thing. I think it doesn't hurt to be a little cautious in the markets at this point of time. Look, opportunities will keep coming. I don't think the trade wars are done. So when the trade war news comes and the market's correct, maybe once, this India-Pakistan saga comes to an end, and then, you have something actually from the trade war side, which is not, it is negative, but not as bad as something as real as a war, right? Then I think that might be the better opportunities to buy in. It doesn't hurt to sit on a bit of cash. You want to, if you are hell-bent on investing, stick to the blue chips, stick to the frontline stocks. Even though they will correct, they will also bounce back faster than most of the others will. So that would be the one call I can give if you are hell-bent on investing, but it doesn't hurt to sit on cash at this point.
Okay. Samir, also curious to know your view with regard to everything evolving on the India-UK FTA, especially the way in which and the resilience which auto stocks have shown as part of this entire consolidation that we've seen maybe over the last week or so. Do you believe auto could well be an opportunity, and if so, do you have any favorites there?
So if you're talking about pure auto, I don't think there's going to be any drastic change per se that comes from the free trade agreement, right? It's not like that we've been exporting cars to the UK, or we haven't been able to export cars to the UK because of whatever reason. We've probably not been able to do it because our cars were not good enough to do that. The one company that might get a bit of a benefit from all of these trade war hits, free trade agreements, is that Jaguar Land Rover will be able to send their cars into India a lot easier. And if we have some manufacturing here where we can do some cost savings, we can probably send it into UK. But I think the bigger picture very clearly shows, this. So, okay, so let's talk about two things. One, auto sector, is there any major benefit? I don't think there is. Second, now, the first question that you initially asked me, what's my take on the free trade agreement? So, the big positive that comes, I'm not saying that India is going to be able to export garments to the to the UK, which is going to take over the markets of Bangladesh and Sri Lanka, because at the end of the day, they also have free trade agreements where they are exporting. And I don't think we have that much manufacturing capacity or that much price competitiveness that we can probably steal a huge chunk of that market. Some of it may shift, but not all of it. But the directional call, which tells us that if we are able to agree with UK for all these tax cuts, that is what we are probably also going to do with the US. And if that happens, that could be the big trigger and the big positive, because that means we can take some amount of market share from China, which is exporting to the US, where the tariffs are a lot higher and where they may not come down to the same extent that India may get the benefits. So I look at it from a broader picture, that the direction that the government is showing, if they can take that similar direction with the US, I think that will be the key trigger, and that will be the one that drives the market up, not this free trade agreement with UK, because it's a small one. It's not like they have a huge market which we can export to and it's going to change the dynamics of our country.
With regards to a few of the names that you're looking at from the textile space as well, Kush, let's look at a Poly Medicure. Clearly, if from a fundamental perspective, if you see in terms of the counter export revenues have seen a good growth, that's mainly on the back of the international market performance. Domestic revenues have seen a growth of around 24%. Your renal division has grown 69%, where it's gaining market share in the domestic market as well. So profits are up 34%, but if you see the stock, which is seeing cuts of around 0.2% right now. A lot of bets in terms of Poly Medicure, where we've heard positive commentary. What are charts indicating? Any opportunity of buying are you seeing on this one?
So it did pop up on our terminals as well because of the high volume, and high delivery spike that it's seen yesterday and today also continuing from there on. But a couple of cautionary points in terms of the chart setup, which is that it's now approaching overheated territory. So you are seeing some sort of a profit taking on this one, which I think is quite healthy. Also from a trading, from a technical standpoint, the 2900 mark, 2875 to be precise, is actually a level to watch for. A closure above that will complete the rounding bottom formation, and you could see some sort of a resistance breakout beyond those levels. In fact, if you see the high for the day as well, I think that's been close to the 2930 odd mark, and the stock actually cooling off from there. And hence, I think that acts as a supply pressure, supply zone, not 2875 to about 2900 odd. So if you've got a position, you might want to perhaps book partially at about 50%, maybe even 75%, and wait for a slight decline. But any fresh breakout, I think, would come about once the stock closes above the 2900 mark.
Also, want to quickly mark out numbers of PNB in slight contrast to how Bob played out yesterday. At least the NII number seems to be up 4%, and that kind of gives some level of comfort. Need to wait and watch as to how the sequential growth number has been for PNB. For a Bob, it was very, very strong. Mind you, it was 5%. But that drop in NII was what concerned the street yesterday. And a large part of that profit after tax sustaining was because of other income, which had gone up around 25% odd on a YOY basis for Bank of Baroda. Certainly doesn't seem to be the case for a PNB, and therefore you're seeing a bit of recovery. Mind you, some of these stocks really took a knock-in trade yesterday at least. So maybe to a certain extent warranted as well. Kush, you want to quickly give us your take with regard to a PNB?
Yeah, well, I think massive selling seen yesterday, and in fact, if you consider the last eight odd sessions, and as you also said that some of these names have taken a beating. I think this is just perhaps some consolidation. I wouldn't actually consider fresh shorting, given how these stocks have already been beaten down and are close to support level as far as PNB goes. That support level comes in at 93.5 level. Also, it's trying to regain the 50-day moving average at 94.85. I think any closure close to or above that will actually give the stock a chance to consolidate sideways, and perhaps you could see some sort of a rebound as well. But nothing meaningful for me to say go out and buy these, after the fall that they've had. Probably one more day, and if the stock actually ends up sustaining above the 95, 95.5 level, perhaps you could start seeing some sort of a recovery, on this one. So getting constructive, but not strong enough to go out and buy the dip, right?
Okay, Samir, let me come to you with regard to a PNB. Do you have a view on the PSU banking pack as a whole? Are you positive? We've seen a sharp correction from the highs with regard to the PSU banking index. Whether you would play it, if you would, how would you play it?
Yeah, so talking purely on the fundamental side, okay, so what I told you in my initial comments about being cautious because of the situation between India Pakistan stands. But if that was not the case, I think the PSU banking pack entirely is showing value at this point. They're all trading at about one-time book. Bank of Baroda, especially after the yesterday's correction, I think the book value is right now about 225 and it's at 223. So roughly at one-time book. PNB is slightly little above that. But again, I believe that the worst for these banks in the provisioning side is over. These banks are delivering decent ROAs and ROEs. they're dividend-paying companies. So I'm just giving you, I mean, I've studied the Bank of Baroda results a little more, so I can talk a little bit more about that. They've announced a 8.5 rupee dividend, which works out to about 4.5% dividend yield on the stock, which is fabulous when you talk about a company. So we believe the growth opportunity still remains. They have a huge reach, which will allow them to get their deposits. Yes, they've had 1 quarter of some amount of decline in NIs. And if you see the decline in NIs also, they came because it was a hit on both sides. You got interest, your interest income also went down and your interest expense also went down because deposits were harder to get. But
So
Samir,
would it be right to say that a Bank of Baroda is a better bet or the top pick in terms of the PSU Bank Index?
It's always been our top pick. PSU banking, but now I haven't studied the PNB numbers. But yes, I think the entire PSU banking looks attractive, and Bank of Baroda for me still looks like one of the best picks, even though the numbers.
So that becomes the top pick coming in from Samir as well from the PSU banking space so far. But let's move on to the stock of the day. Nothing beats it. It's a Tata Motors. What's interesting with regards to Tata Motors is the kind of benefits it gets on the back of the UK FTA. Now, whether it's coming in as a relief, because initially when we started off this conversation, the idea was that Tata Motors was one of the top losers. Now it becomes one of the biggest beneficiaries as well. Puneet is standing by to do that number crunching for us as to how Tata Motors benefits on the back of JLR. Puneet, over to you.
Well, thank you for that. So definitely a very interesting play happening with this company. It's seen a lot of correction over the last 9 to 12 months in terms of stock price. But what's interesting is now with the FTA, it's going to be very interesting for Tata Motors how the prices of its cars could come down. And we've just kind of put together the current scenario. Now, for JLR, they roughly sell between 5,000 to 6,000 vehicles per year in India, and majority is the Land Rover brand for the company. Roughly 20% or 1,000 vehicles out of that is directly imported from markets like the UK. And this is completely, imported in India, no assembly of those sorts. So that has a very higher tax rate in India at currently 110%. And remaining 80% also are just assembled in India, and they also attract a higher tax. So essentially the kind of manufacturing prowess isn't there in India yet for this particular brand, and hence an FTA with the UK specifically will be a key benefit for the company. Now, how will this FTA make the company's cars cheaper? When you look at, the effective tax rate will come down for completely knocked down units or CKDs to 14 to 16% versus 50% earlier. Now, CKDs is essentially where the parts are, imported in India and then kind of assembled and put together in the country. And currently, the tax rate is lower at 14 to 16% under this FTA versus 50% earlier. So definitely will help the car prices going forward. The other aspect is the completely built units. This is essentially the whole car being imported from outside markets like the UK. This attracts a tax of 110% in India. And if with this FTA, the tax rate will effectively come down to just 40%, while still higher to the local manufacturing. I think it will bring down the prices very effectively on this luxury brand. We also looked at for a brand like Range Rover, which currently offers the car at 2.4 crore rupees. That currently has a 110% tax rate. If that gets reduced to 40 under the FTA, the car prices will be lowered between 1.5 to 1.6 crores. That's what will be the final amount that you will have to pay, and essentially be in competition with players like Mercedes, BMW, which are much bigger than something like a JLR in India currently. So that's the benefit for the UK FTA for the company. We've also seen that another benefit could be the spare parts business of the company, roughly 5 to 10% of revenues. This comes after sales and is a huge margin business for the company. The tax rate will also essentially become tax-free in the country, and hence another added benefit to margins going forward. So overall, that is the story for something like a Tata Motors. On one hand, it did get a huge knock when the tariffs were announced in the US, but some reprieve in terms of the UK FTA before earnings are announced next Tuesday.
Absolutely, and this is an interesting play. Thank you, Puneet, for that number crunching as well, because really helpful, not only from a stock price perspective, but even for someone who is looking to buy any of the Land Rovers or Range Rovers. This is the one that you need to bet big on. Kush, very quickly, what are charts indicating from a Tata Motors? Because a big knockdown is what we've already seen. Good strength picking up today. Good opportunity?
Now, before that, you've got to tell me, is one of those on your list or Sameer's list?
Not yet, not yet. Far away.
Oh, soon. I hope real soon. I hope for the both of you. No, look, the past where you have mentioned that the 600 mark, which is an 8-year, long support level. Good to see that that has been respected and the stock actually rebounded from there. I mean, it did briefly go below that, but it was quick to regain that. Now, if you see it on a weekly basis, then the retracement of the rally that started somewhere in early 2023, correct? The fall that came about, it took support at the 78.6 retracement mark and rebounded from there. Now, what could happen is that it doesn't seem like it's completely out of the wood, but there's a gap near the 700 mark, and also you'll see some call option writing and some selling pressure coming in at that level. So if you want to play for the another 20-25 odd points, then it's not a bad idea to play this momentum with a stop loss close to the 665 mark. The risk reward ratio is quite favorable. But if it's in the clear and it crosses the 700 mark and sustains above that for some time, then perhaps this near-term momentum could continue. So that's the view from a very near-term perspective. But if you're looking at a 12-month kind of a horizon or longer, then I think these historical, support levels will act as a good risk-reward ratio. So for a long-term perspective, also with this kind of a support in place, support in place and the up move that you're starting to see resume on the stock, I think it makes a good bet, for a long-term perspective as well. So from a near-term perspective, 700 is the mark. If you're looking at anything from 12 months or longer, then 850 or higher should be your target.
Okay, all right. So those views coming in with regard to Tata Motors and sets us up beautifully with regard to our next conversation. We have Michael Ingram, market strategist, joining us with regard to helping us get a grip of things of how the global investor community is looking at India at this point. It's critical because of everything that's playing out on the geopolitical landscape, right, Michael? How are you looking at developments in India? There are plenty of them. One is the India-UK FTA, which is positive. Does it therefore pave the way for an India-US trade deal as well, likely? Is that how you would view it? And how would your peers as well view these developments, along with everything that's happening on the India-Pakistan border? Just sum it up for us.
Sure. Well, I think firstly, it's always dangerous to try and predict what Trump's going to do next, particularly in respect of trade policy. I mean, certainly risk assets globally have benefited to a certain amount by the current 90-day suspension of some of the biggest tariffs out there, and the news that Scott Bessent, the U.S. Treasury Secretary, is meeting with the Deputy Premier, I think in Washington before the end of this week. But you can see that the extent of the risk rally has actually been quite limited. We haven't seen much of a bounce back in the dollar. It's struggling to reach 100 on the dollar index. You still continuing to see gold, for instance, very well supported. I think above 32.96. Certainly, it's above 3,300 right now. So there has been a bit of a recovery in risk appetite, and in that sort of environment, markets such as India, etc., are going to benefit. Now, that's on the plus side. The FTA that you mentioned, I think, is probably more of a micro situation, as you've just done, identifying individual winners and losers, perhaps from that agreement, and certainly, Tata is front and center in that. However, obviously, I think it's fairly clear that geopolitical tensions in your region are escalating. And just before I think we came on air, I saw a report that Pakistan has said it's going to retaliate in kind. So that doesn't seem to be a line drawn under that situation quite yet. So that's going to keep some investors away, certainly, and I think in terms of further support we might see. Well, we've got the FOMC meeting at the moment, but there again, I don't think there's going to be any immediate relief. The market certainly isn't pricing in a rate cut until probably July. The most recent macro data coming to the US has been somewhat firm, and inflation remains sticky. So you're not going to get necessarily that monetary impulse. So I'm guessing at the moment, and I'm afraid it is just a guess because, as I mentioned, Mr. Trump is pretty unpredictable. We're probably in a holding pattern. We might have some individual winners in terms of Tata, but I think we're in a wait and see. They're certainly going to wait and see what the Fed says over the next day or so, and if there are any hints as to what they're going to be doing. But right now I think we're in a holding pattern.
Okay, Michael. Good afternoon, Hiral on this side. Let's focus in terms of how the FIs are looking at India right now, taking into consideration what's happening here. Would it be right to say that this would be one of the best markets to invest in, number one? And two, if so, where would your bets be?
Right. So, I mean, first of all, I think over the longer term, certainly India is probably, in the Premier League in terms of, investment destinations, both for, foreign direct investment and for portfolio investment, because, there's a reasonably supportive program of liberalization. You've got strong demand dynamics in terms of the internal market, and it's got very very strong positions in certain sectors of our IT sector and high growth technologies, and it's got good export competitiveness. And the FTA that you mentioned is helping to burnish those particular credentials. In terms of where we're looking at, well, I mean, autos is obviously you've already touched upon that. Pharmaceuticals, strangely enough, certain other areas of IT are certainly looking very, very strong. The other thing I'd probably just briefly mention in the context of the relative attractiveness as India as an investment destination, as I think I mentioned in previous conversations that we've had, a lot of the biggest investors, portfolio investors in India, tend to look at it v China because they're the two heavyweight so-called emerging markets, and you've seen a bit of a bounce in China, and having come from sort of very low level, I have a feeling that that's probably going to plateau out now. And I think if we didn't have the geopolitical tension that we've just gotten over the last 2 or 3 weeks, ultimately, that we'd see a more aggressive rebalancing from that bounce in China back into India. But again, it's certainly causing a lot of the largest portfolio investors to think twice before making that decision.
Okay, Michael, we're going to leave it at that. Thank you so much for those views. We'll let you go. What we're also going to do in parallel is slip into a very short break. On the other side, we'll again continue to focus on individual counters which are buzzing in trade, get better perspective, and we will get you top BTST ideas as well. Stay tuned.
Apollo Tyres, now there's a buzz of a positive corporate development related to related to its European operations or European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Welcome back. Thanks for staying with us here on India Market Close. We have a special guest joining us, Nilesh Shah, Managing Director, Kotak Mahindra AMC, joining us. Good afternoon, Mr. Shah. I'm Harsh Saita here. Wanted first off your quick take with regard to everything that's happening in markets, that is the market reaction to both the India-UK FTA as well as everything that's happening on the border. Just give us your 2 cents on how an investor should react or respond in the current environment.
So, markets are driven by funds, fundamentals, and sentiments. From a flow point of view, domestic institutional investors have been buyer led by mutual funds. The SIP culture brings every month regular flows, and mutual funds buying has been regular. Foreign portfolio investors joined the party and they became buyer in last couple of weeks. There has been no significant supply from IPO or QIP or OFS. Clearly, with DII and FPI buying, market is balanced in favor of rising prices for lack of supply. From a fundamental point of view, we have seen March 25 quarterly results coming ahead of expectation. While there are some misses, collectively, corporate India has delivered results ahead of expectation. This quarter, Nifty earning could be somewhere around 275 rupees, and that will take FY25 Nifty 50 EPS to somewhere between 1050 to 1065. With flows and fundamentals in place, driver for the market is sentiments and events. While conflict with Pakistan obviously is an event to watch out for, the positive event was India-UK FTA. This FTA has come in a win-win situation for both India and UK. And if this FTA agreement is harbinger of what will happen with EU and US, clearly Indian manufacturing and Indian exports stands a better chance. So overall market has been fairly positive because of the flows and fundamentals. And even today's conflict, market is pricing in that it will not be escalated. It will remain, under control. And with that anticipation, market is behaving moderately.
Hi, good afternoon, Hiral, on this side. I mean, an interesting take, because as steady as what the markets are, they are absolutely mirroring the steady strategy in terms of the strike as well. But going ahead from here on, from a retail investor perspective, do you think this valuation is going to be ripe enough to start nibbling in? And if so, which are the sectors that you would recommend?
If you are looking as a long-term investment, then these valuations are fair. They are neither cheap nor expensive. If you are looking from a short-term point of view, well, valuations will depend upon events. As I mentioned, flows, fundamentals, and some of the events are positive for the market. So, since we can't predict future and events, it's better to be a long-term investor. From a sectoral point of view, we believe consumption is one sector to watch out for. The tax cuts proposed in the last budget will put about 1 lakh crore in the pockets of taxpayers. Interest rate cuts will reduce EMI burden for investors, for borrowers, and that could also support consumption. The 8th pay commission should be effective somewhere around 2027 beginning. That also will support consumption over a period of time. Crude prices have come down, which creates room for petrol diesel price cuts. If that materializes, again money is left in the pockets of consumers. Between income tax cuts, EMI burden coming down, potential petrol diesel price cuts, and 8th pay commission benefits, consumer discretionary space looks like a market outperformer.
So you're looking at the discretionary space as the outperformer. Nilesh bhai, how supportive are the FIs? Because the read in the market was that probably if there is any escalation before Operation Sindoor, there's a possibility FIs would not be as positive on the India story. Yes, you're looking at growth, but your geopolitical aspect also comes into consideration. Along with your domestic investors, you have that support coming in from the FIs as well. This combination, how good a deal is it?
So undoubtedly FPI are major player in our market, but their influence is coming down. Now DII holding is ahead of FPI holding. Undoubtedly, they are fully aware of geopolitical situation between India and Pakistan, and yet they have started investing. Now, if there will be escalation, undoubtedly their reaction could be to take money out of India. But that will be again a temporary thing. Ultimately, I still believe FPIs will invest for India growth story. We are truly an oasis in the global desert. Our growth story is intact, and probably FPI at this point of time, looking at Pakistan's economic situation, looking at isolation of Pakistan on global stage, looking at the advice from US to Pakistan, don't even think of retaliation against India. There are many things which I'm sure they are considering and watching, and we believe while it's difficult to predict their behavior, I think they will be buyers of the India growth story.
Nilesh bhai, last question with regard to how you view the Indian macro, especially from a small and mid-cap perspective. There was plenty of conjecture that small and mid-caps a few months back were sitting at slightly elevated valuations. Do you believe we've seen a sizable enough correction in terms of comfort for someone of your stature to say that we are now at a place where valuations are more reasonable, or would you still continue to believe that they are elevated?
So, small and mid-cap space is more micro than macro. Each company has different growth trajectory, each company has different governance structure, and hence you have to do a far more bottom-up analysis to invest rather than top-down. Mathematically, even today small and mid-caps are trading at a premium to their historical average compared to large cap. There is no way one can say that small and mid-caps are looking cheaper from a valuation point of view. If at all, they are marginally priced ahead of large cap. My feeling is that if you want to invest in small and mid-cap portfolio, focus on quality, focus on earnings growth. You might end up paying a little higher price at current valuation, but if you have chosen right stocks over a period of time, they will deliver the return. Keeping with uncertainty in the market, our recommendation is to be marginally underweight small and mid cap, marginally overweight large cap, and keep neutral allocation to equity.
Okay, thank you so much, sir, for joining us on this very, very critical day and giving us all of those views and perspectives. Interesting conversation with Nilesh Shah. But let's switch focus. Look at a couple of other stocks which are buzzing in trade. One of those being BSE, and numbers for both BSE as well as NSE came out. So I'm going to try and compare the performance of both of them at least for Q4. Let's first look at the QOQ numbers for BSE versus NSE. And in terms of revenue, for BSE, the revenue was up 10% sequential. For NSE, it was down 13% sequential. EBITDA for BSE was up around 11.5% versus NSE's EBITDA, which was down roughly 18%. And net profit for BSE doubled, while for NSE, it was down 31%. Now, I want to quickly take perspective and compare both of those as well. So BSE market share went up. Top line was above expectations, whereas NSE's top line shrunk. Weaker operationally for BSE than expectations, but margins rose, which was a key positive. For NSE, margins were under pressure. They fell nearly 800 bips on a sequential basis, margins from 74% to 66%. And PAT was aided by a one-off reversal for BSE, but nonetheless grew. For NSE, profitability was under pressure. So that's how it stacks up. And even in terms of commentary, BSE came out with extremely strong commentary to say that customers are taking a relatively longer view on markets, and if trends continue, volumes from monthly contracts will continue to improve, which seems to be the case at least at this point. Now, let me come to Vineet Bolinchkar, who's joining us right away. Vineet, now tell us with regard to a BSE, and let me try and actually cover all market intermediaries. Looked at an Angel One's numbers which came out earlier today morning. Those were a decent set as well. We started to see a bit of a rebound on Angel One's numbers. We saw CAM's numbers yesterday. We saw KFIN as well, and that's one of the other stocks which is buzzing. So all of these market infra companies, of course, they're trading at elevated valuations, but justifiably so, given the way that they've performed?
Yeah, I'm quite bullish on BSE particularly and KFIN. We believe that these two stocks which we have under coverage will do very well going ahead. I'll touch on each of them briefly as to why we think they will do well. But before that, let's look at even Angel. Angel is quoting at significantly low valuations, over its recent run that it had, making it a very attractive proposition. And Angel is a full stack broking, having exposure to all the elements with reasonable, retail growth coming in. So these three stocks score very well. As far as BSE is concerned, and the diabolical trends that we've seen in stocks which are versus NSE is clearly due to the fact that BSE's market share in terms of F&O is now gradually going up. We are almost around 40%, and that was one of the key riders when about a couple of months back. If you take a slightly longer 3 to 5 year kind of perspective, say by 2030, and if trends play out the way they have been doing in terms of market participation, we believe that there's a chance that BSE could move up 3 to 5 times, right? So very positive on this stock. BSE could turn out to be a multi-bagger. And, going ahead, whatever listings happen will be more or less equal on both exchanges. So, that really takes away the advantage that NSE had over many years quite favorably in terms in tune with BSE. So that is one. KFIN has got a lot of levers under its belly, which will slowly start reflecting because, while you do pips at a few paise in India, few pennies, globally it could be 0.2 to 0.4 pips globally. And interestingly, global business acquisitions are going up. They will play out in the right direction. And so apart from India, KFIN also has got, business potential coming in from the global markets. So we tend to be positive on this also, and both these stocks should do very well going ahead.
And okay, so that's the fundamental view. Super bullish with regard to BSE even now, Vineet Bulinskar, after the kind of run up the stock has seen in recent months. But Kush, do you have a technical view with regard to a BSE as well?
Well, the direction is similar, as Vineet already mentioned, but maybe, some cooling off is par for the course because the stock had a phenomenal run. Even now, if you see, the reaction that it had to the numbers, you're seeing some profit booking from those elevated 58, 50 odd levels. So I think while yes, I am fairly constructive on BSE, have been for a while, even when it hit those 45, 4400 marks, those levels. But I think at the moment there is some consolidation that that could come about for the stock. So on the higher side, you're looking at 6750, 6800 as the level to watch for, and on the downside about 6300. So if it does go into some sort of a time-wise consolidation, it will not be a bad idea. On the whole, the medium-term picture does look intact. If you have a position, not a bad idea to continue to hold on with 6300 as your stop loss or as your trailing stop loss, as the case might be. But as I said, this I would rather see some consolidation because it's now starting to get into slightly overheated territories from a technical standpoint. On the whole, remain positive on BSE.
Okay, what we're going to do is slip into a very, very short break. On the other side, we'll get you top BTST picks as well as, again, we'll discuss a couple of stocks, including a Paytm, because interesting set of numbers, stock flying away. You have APL Apollo, Q4 earnings on your screen, stock is flying as well. Stay tuned, short break, we'll see you on the other side.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in?
What is the real picture behind presentations and claims?
Is the outlook as rosy as the company claims?
Welcome back. You're watching India Market Close. Now, the India-UK Free Trade Agreement is set to supercharge India's textile sector, granting duty-free access to the UK market. Now, let's quickly understand how textile becomes a big beneficiary. Firstly, a wide range of Indian products will receive duty-free entry into the UK, and this will boost export of labor-intensive sectors as well. So textile exports will remain strong amid the kind of global shift that you're seeing. India is now at par with Bangladesh in terms of the tariffs and also has an advantage over China. Moving on, if you see in terms of the category and the exports share to the UK, that stands at around 6.6%. So that's that big number we should be tracking from here on. What are the multifold benefits that you should be looking out for? Firstly, the FTA is in favor. Secondly, the ongoing Bangladesh crisis would act as a tailwind with regards to the Indian textile sector. And you have the China Plus One strategy, which is already at play. So clearly, from a US market perspective, which was a headwind, that probably will help India as well, because it gets placed better in terms of where negotiations are concerned with the US markets as well. Secondly, let's look at companies that stand to benefit. Names like Worldspun Living, Trident, Indocount, Himmat Sikka, KPR Mill, Pearl Global, Gokul Das, Arvind, SP, all of them, there you go, seeing smart gains in today's session. So the key question from here on is, you have UK, which has become a tailwind. US, which was a headwind, could be a potential tailwind, taking into consideration the negotiation power that India will be sitting on as well. Very quickly, let me go to Vineet. Vineet, your understanding on the kind of benefits that the textile industry would gain, and any topics?
Wellspun Living looks clearly undervalued. One stock, it scores on all parameters, very, very undervalued out there. We can see a price of around 210 on that. And I believe that, while the US is very, very insistent on, degrowing the China pie, even a small fraction of it, if it comes to India, over a relative period of time, will mean mega boost to India's earning potential. So I believe that this stock will do very well. Other stocks like Pearl Global, despite being intensively Bangladesh presence, has managed to, thwart the Bangladesh decline story and still score better. Also, they have got relatively good India presence, so they can clearly, boost exports also. So I think this stock also has another 30% upside possible from here. So these stocks look good. Arvind, which is a conglomerate play on textiles, also should do very well. So these are some of the three stocks that we like and believe that will definitely benefit from the UK FTA as well as from the impending US-India deal.
So top three picks coming in from Vineet. Kush, any top picks where charts are looking strong?
I think I'll have to go with Wellspun Living. That's the one that has been steadily, gaining ground. And even today, if you see, while it's been a big move, it's actually sustaining that big move rather than some of the other ones that have actually gone quite, deeply into overbought territories and are now starting to see some, a sharp profit booking today itself. So I think from a risk-reward ratio perspective, also, if you check, 125 being a good support zone. On the upside, you've got targets up until 155, so a good 1:2 risk-reward ratio. So if you want to consider, then I think Wellspun Living is something that you should consider from this space.
And your BTST, Kush, for this afternoon?
Sure, still braving a BTST, as you rightly called it. It's just Bharti Airtel. Now, while the 1900 mark is acting as a bit of a resistance and has been doing for some time, about last 10 sessions or so, also there's small congestion. But the fact that this is a stock that has actually gained ground when the entire market was under pressure and even now continues to hold its ground. It's a good relative strength indicator. So from a near-term perspective, I think this is the kind of stock that you want to be in. On the upside, your targets are 1945, 1990. There's a fixed stop loss around the 1855 mark. So from a margin of safety perspective as well, plus the relative strength that the stock has to offer, Bharti Airtel is one stock that can be considered on the long side.
The other one which is buzzing today, Hiral, is MRF on the back of those numbers, 11.5% top line growth. EBITDA rose by 18.5%, so very solid drive, and margins now at 15.2%. Mind you, they've not done the 15%, or they did 15% in Q2 last. Q3 was a tough quarter. The 4% stock, or rather the impact that we've seen on the stock. Vineet, quick view, justifiable?
Which particular stock?
MRF.
I think the stock is well valued in my opinion. Okay. So not much upside, but I think CEAT will have a lot of run there. They're doing really well, and we expect CEAT to do well going ahead more than MRF.
Okay, so a preference for CEAT over MRF. Kush, do you have a view with regard to an MRF? Numbers out, would you, what side of the trade would you sit on, if at all?
Let me ask you a question. I mean, who do we give this view for? Because it's not a counter where traders will enter, and this is not a counter where the long-term investors are going to let go anyway, right? So,
fair point. Okay. I think I'm going to take this one, Harsh, from you. So, Kush, is this time to sell a MRF, taking into consideration the surge that you're seeing, and look at any other tire stock from a buying perspective? Should that be a strategy?
I'll ask the same question. Traders are not in it, investors won't sell it, so who's going to sell? No, but I get your idea. Look,
we've lost
multiple
Kush.
reasons.
Yeah.
Yeah,
Sure,
as I said,
I was
if
just going to answer that question. Somebody wants to buy the JLR at a 40% duty over 110% duty, could well sell this
a
stock.
MRF.
Sorry, please go ahead.
Fair game. Fair game. No, I would. So if I did actually buy this at lower levels, and if I'm looking at a re-entry kind of a trade in this, yes, I would sell it because from a technical standpoint, there are two things that have happened. One, it's hit the overheated territory and has been in that zone for the last about 3 to 5 sessions. So you could see some profit taking after the results have come about because maybe there was some anticipation baked into the price and some profit booking is par for the course. Also, if you see on a weekly basis, for the last 1 year, if I dial the clock back to late July, then the 14,200 mark, 14,300 zone is a level which the stock has not been able to cross. So from both the counts, I think there is some pressure that might come in. Also, it had about 5 weeks of positive gains. So some profit taking is par for the course. So if I did trade, I would actually exit now and look to re-enter near the 13,300. 13,500 zone. Sorry, 1,35,000. See, that's the kind of number it confuses you with. So 1,35,000, 1,33,000. That's the kind of level where I will look to re-enter. So at the moment, it's a book profit, and you might want to re-enter when the stock corrects.
That's an interesting one coming in with regards to MRF. Let's quickly pull up a Paytm on the screens as well. Let's see what the counter is doing in trade. 7.5% up move. A complete thumbs up. Your OPEX has been controlled on a sequential basis. It's just your one-time loss that hurt the profitability this time around. Clearly, Vineet, what would you advise an investor to do with a Paytm at 870? Fundamentals still hold a buy view?
Yes, definitely. In fact, we have a target of almost 12 to 1300 on the stock. We have voiced our views on the stock when it was around 500 on your very channel. We continue to remain bullish, and we believe that this stock has still got another 35 to 40% upside steam to go.
Okay, thank you so much, both of you gentlemen, for joining us this afternoon. We'll wind it up and let you go on that note. Let's quickly look at the last minute and a half to close. Let's look at where the Nifty is settling in at today. Of course, we started off lower, but we've recovered from there. And not a bad close at all, Hiral, given the context with which we've opened. 24,400 held. And if you look at it intraday as well, it's fairly range bound in that sense, the day of trade. Fairly range bound.
Absolutely. In fact, 24,400 is what Kush was eyeing as well, that a close above 24,400 is something that will be positive for the market. So I think this is an important close that you should be tracking. Bank Nifty as well. Let's quickly take Bank Nifty on the screens and India Wix. There you go. You've almost ended near the day's highs of 54,657, like very close to that number in terms of Bank Nifty. If we can have India Wix as well to understand what it looks like. There you go, 18.91, right? 19.73. So that cautiousness and that volatility is receding somewhere. That's what your Wix is telling you. And this is a very interesting day, taking into consideration the way markets have moved. Very quickly, if we can just have the Nifty 50 heat map, and then probably Harsh will take us through the broader markets. But there you go, Tata Motors, 5.5% up move continues. Bajaj, Finserv, Finance, Zomato, that's Eternal, M&M, Coal India contributing. Asian Paints is an interesting one. It's a herd on street from Somit, and that news probably could push it lower tomorrow as well. So 4% downtick there. Pharma continues to be under pressure. ITC, Bajaj Auto, Grasim, RIL, Tata Consumers, Aisha, few of the top losers coming in there as well. But clearly, 24,400 kind of a close seems to be a good one in terms of Nifty. Broader markets, over to you, Harsh.
Absolutely. Sectors first off. Auto was the one which really did well. That's how mid-cap did, 1.5% higher. The small-cap index also had a very good day. Both closing at the day's high. Quickly on to sectors. Auto was the one that really stood out, 1.5% higher. But outside of that, realty did well, metal stood out as well within the broader market indices. Defense was the one which sulked in trade, ironically, and FMCG down around 0.5% odd. Pharma was down 1/3%. Hiral has covered that. Let's look at the BSE 500 top gainers, top losers as well. Some of those names on the back of earnings, but a chunk of those names on the back of the India-UK FTA, and a lot of those names reflecting there. Aarti Drugs closing 20% higher on the back of numbers. We spoke with management as well. Last off, I want to quickly cover what to watch out for when it comes to tomorrow's day of trade. Those are some interesting nuggets for you which will come through before open tomorrow. Let's also look at any dividend announcements. Those are the ones you want to look out for. OFSS is the big one. Gravita India just about 6 rupees, and those are all the earnings you want to look out for. L&T will be the big one. Biocon will be the other one where I will have my eyes. Asian Paints will be one. Titan. And then you'll have a Sula because it's at an interesting point as well.
Britannia and Bharat Forge also will be interesting place for tomorrow.
Yes, absolutely, absolutely. So Britannia as well. I missed that one. You're right, Hiral. So that's how we'll look and close the day for today. For now, from Hiral, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action right up on the other side. Stay tuned.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
India strikes back. 24 missiles strike 9 terror camps and kill 70 terrorists in Pakistan and Pakistan-occupied Kashmir from 1:05 a.m. to 1:30 a.m. this morning. This was carried out jointly by the Indian Army, Navy and Air Force under the code name Operation Sindoor. Prime Minister Modi visits Rashtrapati Bhavan to update President Murmu on the details of Operation Sindoor, while the Home Minister convenes a strategic meeting with Chief Ministers of border states to discuss related security and coordination measures. Indian markets are cautious and mildly volatile as geopolitical tension flares after India launches Operation Sindoor, targeting these 9 terror camps across Pakistan in response to the deadly Pahalgam attack. India's leading export segments, including apparel, auto, components, carpets and marine products, are set to benefit the most from the India-UK free trade agreement signed on Tuesday. The pact, which eliminates tariffs on nearly all industrial goods, is expected to unlock new export opportunities in the UK market. The Securities Appellate Tribunal declines interim relief to Gensol Engineering in its appeal against SEBI's order barring Gensol and its promoters from the securities market due to allegations of fund diversion and governance concerns. All eyes will be on the US Federal Reserve's monetary policy announcement, as Fed Chief Powell is most likely to keep rates unchanged at 4.25 to 4.5% in the May 2025 FOMC meeting. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we're going to bring you the latest on markets as well as national and international news. So let's move on to our top focus today. Nearly 2 weeks after the tragic attack on tourists in Kashmir's Pahalgam, which claimed 26 lives, India has retaliated with precision. In a decisive response, the Indian Armed Forces launched overnight strikes on 9 key sites in Pakistan and Pakistan-occupied Kashmir under Operation Sindoor. Following the operation, military officials briefed the media, stating that the strikes were a measured and proportionate action aimed at eliminating terror hideouts. Pakistan has resorted to indiscriminate firing along the line of control and the international border, prompting the Indian Army to respond in a proportionate manner. NDTV Shivarur brings you a ground report straight from the village along the LOC in Uri, capturing the impact.
We're at the line of control in Salamabad. It's one of the last outposts before the line of control. There are 2 houses here that were struck last night in Pakistan Army shelling here in the Uri sector. These 2 houses have been completely totaled, completely destroyed. There's still a fire burning, if you can see over there, smoke smoldering across this entire pair of houses. Miraculously, no deaths, but 4 people have been severely injured. 2 of them children. One of them has apparently lost a limb as well. They've been evacuated to the Baramulla hospital, which is about 40 kilometers to our rear from here. We're about 10 kilometers from the line of control. Complete damage over here. If you can see that these 2 houses, I'm surprised that anything is left everywhere else, because it looks like a stray shell may have come and landed here. It appears to suggest that the Pakistan Army, which has been aiming and firing directly, targeting civilian areas, has caused damage deeper inside, and one shell or a couple of shells has come and actually landed here. This has all the telltale signs of artillery damage. You can see shrapnel completely ripping through these metal sheets. These are very clear signs of artillery shrapnel that has ripped open these roof sheets. The walls completely broken, and everything is still burning in these houses.
And we'll continue to track the latest developments. But in the wake of the strikes, the government has been operating at full throttle. But before that, take a look at this report.
Well, in the morning, it was Prime Minister Narendra Modi who chaired the CCS, which is the Cabinet Committee on Security, the highest body who takes care of the national security, after which Prime Minister also chaired CCEA and a full-fledged cabinet. The sources of the cabinet had told us that it was the cabinet colleagues of Prime Minister Narendra Modi who lauded government's efforts of operationalizing, the entire operation Sindoor, and how there were successful strikes in Pakistan and the POK region as well. Apart from it, it was later Prime Minister, after chairing those two crucial meetings, arrived at the Rashtrapati Bhavan. Prime Minister Narendra Modi briefed President of India, who is also the Supreme Commander for Indian Armed Forces, and these are some protocols that usually we see whenever Indian Armed Forces conduct any operations, then Prime Minister goes to
On May 7, 2025, between 1:05 and 1:30 a.m., the Indian Armed Forces executed Operation Sindoor, striking 9 terror camps, 4 in Pakistan and 5 in Pakistan-occupied Kashmir. The operation, a joint effort by the Army, Air Force and Navy, was the first tri-services mission against Pakistan since 1971.
Our intelligence monitoring of Pakistan-based terrorist modules indicated that further attacks against India were impending. There was thus a compulsion both to deter and to preempt. Earlier this morning, as you would be aware, India exercised its right to respond and preempt, as well as deter more such cross-border attacks.
The missile strikes targeted facilities in Muzaffarabad, Kotli, Bhawalpur, Rawalkot, Chakswari, Bhimber, Neelam Valley, Jhelum and Chakwal, all areas long suspected by intelligence agencies of harboring terrorist camps. These sites were believed to be affiliated with Lashkar-e-Taiba and Jaish-e-Mohammed, two terror groups responsible for multiple attacks in India over the years. Colonel Qureshi said that the operation marked a shift in strategy.
पाकिस्तान में पिछले 3 दशकों से टेरर इंफ्रास्ट्रक्चर का निर्माण हो रहा है। इसमें रिक्रूटमेंट, इंडोक्ट्रिनेशन सेंटर्स, ट्रेनिंग एरियाज व लॉन्च पैड शामिल थे, जो पाकिस्तान और पाक अधिकृत जम्मू कश्मीर POJK दोनों में फैले हैं।
Operation Sindoor was launched by Indian Armed Forces to deliver justice to the victims of Pahalgam terror attack and their families. 9 terrorist camps were targeted and successfully destroyed.
The operation's name, Sindoor, resonates with many as a tribute to those lost in the deadly Pahalgam attack, particularly women. After the strikes, Pakistan claimed attacks on their military posts. India's Press Information Bureau debunked these as fake. On the border, civilians were killed in Jammu and Kashmir due to Pakistan's retaliatory firing along the line of control. India remains on high alert. And amid all of this, the country is gearing up for a nationwide mock drill. The exercise, aimed at improving national security preparedness, will test first response capabilities in case of any hostile situation. Sources told NDTV Profit the Mumbai police has also convened a high-level meet in the matter, which will be attended by officials of NDRF, NCC and Armed Forces personnel. And now a quick look at what else is making news. Let's quickly cut over to how the markets fared today. Indian markets ended cautious and mildly volatile. The NSE Nifty 50 and BSE Sensex erased losses in the second half to end slightly higher. Harsh now joining in with a wrap of all of the action. Harsh, over to you.
Right, so markets had quite a muted move in that sense. Nothing adverse in a big fashion. We were up just about 0.1% on the Nifty, so fairly cautious view, but nothing dramatic, and that's the one key positive that I would take away from a day like this. In terms of stocks and sectors,
India-UK FTA was the key piece which dominated the way in which individual stocks and sectors moved. Textiles was one such play, some fabulous moves in counters. The other one was the auto space, which was a top sectoral gainer, one, but you had some big movers within that. You had a Tata Motors which moved up 5% plus, and you had something like a Samvardhana Motherson also, which did fairly well for itself. So all export facing, and Tata Motors of course the reverse, import facing, and enabling the Indian consumer access to those cars. So that was one pocket. The other one was defense, fairly muted, was the top sectoral loser of the day. Pharma too was muted on the back of commentary coming in from the United States. So those were some sectors which moved. The banking index largely in line with the Nifty, and no major moves here or there with regard to the financials and the banks. So that's how it played out. IT also buzzed a little bit on the back of the India-UK FTA, again one of those beneficiaries. Now let's talk about the mid and the small cap, because the bulk of the action was there. 1.5% plus on both of those indices, so fair bit of traction within the Nifty mid cap and small cap index. So the broader end did fairly well for itself, and therefore overall we've had a solid reaction to everything that's played out, both on geopolitics as well as on trade.
Right, Harsh, thank you so much for that roundup. We'll continue tracking how this actually impacts the market and bring you all the latest developments. But markets on the close slightly cautious, and India's strike on these 9 terrorist bases in Pakistan has escalated tensions, prompting investors and businesses to brace for broader economic repercussions. Now, the impact is expected to extend beyond the border, affecting India's financial markets and consumption landscape. So how do markets respond in such a scenario? My colleague Mahima joins us with the latest data on market response and the economic projections.
So in terms of how the markets have performed in the past wars, or when India has retaliated to circumstances, we saw that initial drawdowns were seen, followed by swift recoveries in the markets. Impact on equity markets was typically unfold in 2 different phases. The initial drawdown was seen in the Nifty, followed by a recovery in pre-event levels was also seen swiftly. Now, in terms of how it happened, in the Indian Parliament attack, it took 14 days for the markets to bottom out, but the recovery was done in the next 11 days. During the train blast, the time to bottom out was only 1 day, and the recovery took 2 days. In terms of the 26/11 attacks, 7 days markets bottomed out, but the recovery was done in 1 single day. During the Pathankot attack, the bottom out did last for 54 odd days, but the recovery took a little longer. 62 days was the time where market took time to recover to the pre-event level basis. In terms of the Uri base attack, 2 days time markets bottomed out, and 2 days markets recovered. Now, in terms of the other attacks as well, surgical hit, again 1 day and 5 days of recovery. The Pulwama attack, 5 days to bottom out and 2 days of recovery. In terms of the Balakot attack, 2 days in terms of markets to bottom out and a 1 day recovery. And Pahalgam attack, we saw 5 days markets did bottom out, but the recovery was seen in 1 single day.
Thanks. We'll continue tracking the impact of these geopolitical tensions and how that impacts the markets and the economic projections. Moving on, 14 rounds of negotiations, and 3 years later, India and the UK have signed a landmark free trade agreement, or FTA. And India's leading export segments, including apparel, auto components, carpets and marine products, are set to benefit the most. The auto space may actually face the biggest sectoral impact from the India-UK trade agreement. To explain how exactly it will change India's auto sector, we have Tushar joining in.
One of the key beneficiaries of the India-UK FTA will actually be the auto sector, because the auto tariffs actually been slashed to 10% from over 100%, but with a certain amount of quota. At this point of time, let me make it very clear that we don't know what the quota is. More fine print is has to emerge. But this actually, the duty-free structure will be on the imports of ICE vehicles from the US is limited to a predefined quota. The duty-free quota on EVs is limited only to a few thousands. No out of quota duty reduction for EVs. Out-of-quota duty on ICE vehicles will be reduced gradually over a period of time. That will actually insulate the India's auto industry from imports that may come from the UK. Likely winners are already emerging. Tata Motors is clearly the winner because of its JLR factory. Remember, JLR makes the Range Rover range of actually SUVs in the UK. That the prices of those cars will reduce when they come to India, almost reducing by a half. Mahindra is set to have a minimal benefit as far as we can see right now, because Mahindra has already disclosed its plans to actually export its electric vehicles to Europe. The UK may also open. The company has not commented on that fact yet. Minimal impact to negative impact can be seen on Maruti Suzuki as well as Hyundai. They do make cheaper cars under the rupees 20 lakh price bracket, because most of the car imports that become cheaper from the likes of Toyota, Nissan, Mini Cooper, Rolls-Royce and Aston Martin cater to the luxury segment. All these cars are made in the UK, so they may not come below the 20 lakh rupees price bracket where Maruti and Hyundai function, or most of the models are. But the pricier models, which are the SUVs, which are priced above 20 lakh rupees, like the Alcazar and other models that may come in, may see some pressure going ahead. The biggest gainer, so to speak, would be the auto components industry. The company, the space actually was dealing from the impact of from the US tariffs, 25%, which came into effect on 3rd May. They will see a big fillip when the UK FTA deal comes into effect.
Thanks, Tushar, for that update. And to give us more insight on what this deal actually means for India, I have Rahul Ahluwalia, the founder, director of the Foundation of Economic Development, joining us on the phone line with more. Rahul, thanks so much for your time. I'm going to cut right to the chase. How do we see this India-UK FTA boosting bilateral trade, and what are the projected economic benefits for India?
Thanks for having me. I think we should see large benefits. The UK is one of the largest economies in the world. The projected total number over a few years, I think in 5 to 10 years from now, we should see trade between the two countries going up from anywhere between 25 to $35 billion. I think in the short run, the sectors that will gain the most are textile and apparel. You were just talking about automobiles and auto parts. That's also going to be a big sector. Gems and jewelry, I think leather, footwear, sports goods, these are all sectors that I think will benefit, because these are all employment-intensive, skill-intensive sectors where the UK is already importing a lot, and we have a tariff disadvantage which will go away with the trade agreement. And we already have trade happening in all of these sectors. So the relationships exist, the trade exists, and I expect in all of these sectors the trade will go up first.
So how does this FTA then position India in the global trade landscape, especially amid rising protectionism?
I think it's a very positive move. In particular, we've been negotiating with the EU, and I think in some way we have Trump and the US to thank for this impetus that has been provided, because otherwise trade negotiations can go on for sometimes even decades without showing fruit. But I think this is a very clear signal that the governments of UK and India has sent, that they are open for business, they are open for trade. And I would expect the EU negotiation to also therefore benefit from this. And I think that signaling process should speed things up there as well. So I actually think this is a very positive move, and I think we should see more such happening in the near future. And ideally, even the US trade agreement should get signed at some point.
Right, Rahul Ahluwalia, thank you so much for that perspective. We'll continue tracking the latest on this India-UK FTA and share all of the developments. Moving on, Gensol Engineering's woes are seeing no end. The SAT has declined relief to Gensol Engineering in their appeal against SEBI's interim order. So for a little context, SEBI had barred Gensol Engineering and its promoters from markets on April the 15th, if you remember, because of fund diversion and governance concerns. To tell us more, my colleague Charu now joining us. Charu, you've been tracking the story very closely. Give us a sense of what the tribunal proceedings actually now imply for Gensol Engineering.
Okay, so whenever SEBI comes out with an order, any party has the power to go up to an appellate authority, which is the Securities Appellate Tribunal. But what has happened in this case is that SEBI came out with an interim order. That means it is a temporary order, and also it came out with an order in an ex parte manner in which Gensol did not get an opportunity of being heard. So it went to SAT and said that its demat account should be unfreezed so that it can, sell shares of its subsidiaries, raise some funds, and also pay its dues and, take care of its affairs and operations. However, SAT refused to grant any relief from any of the directions that were given in the April 15, 2025 order of SEBI, and said that they should go back to the regulator, reply to the regulator's order within 2 weeks, and then the regulator was requested to come out with a finalized confirmatory order on the basis of its interim and replies that it has gotten, and then finalize it within 4 weeks. So this is the timeline that SAT has given to both the parties. However, no relief in sight for Gensol from this appellate authority for now.
Right, Charu, thank you so much for bringing us those updates. We'll continue tracking the story and bring you the latest. And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands.
India strikes back. 24 missiles strike 9 terror camps and kill 70 terrorists in Pakistan and Pakistan-occupied Kashmir from 1:05 a.m. to 1:30 a.m. this morning. This was carried out jointly by the Indian Army, Navy and Air Force under the codename Operation Sindoor. Prime Minister Modi visits Rashtrapati Bhavan to update President Murmu on the details of Operation Sindoor, while the Home Minister convenes a strategic meeting with Chief Ministers of border states to discuss related security and coordination measures. Indian markets are cautious and mildly volatile as geopolitical tension flares after India launched the Operation Sindoor, targeting 9 terror camps across Pakistan in response to the deadly April 22nd Pahalgam attack that claimed 26 lives. India's leading export segments, including apparel, auto components, carpets and marine products, are set to benefit the most from the India-UK free trade agreement signed on Tuesday. The pact, which eliminates tariffs on nearly all industrial goods, is expected to unlock new export opportunities in the UK market. The Securities Appellate Tribunal declines interim relief to Gensol Engineering in its appeal against SEBI's order barring Gensol and its promoters from the securities market due to allegations of fund diversion and governance concerns. All eyes will be on the US Federal Reserve's monetary policy announcement, as Fed Chief Powell is most likely to keep rates unchanged at 4.25% to 4.5% in the May 2025 FOMC meeting. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we're going to bring you the latest on markets as well as national and international news. But on to our top focus this evening. Nearly 2 weeks after the tragic attack on tourists in Kashmir's Pahalgam, which claimed 26 lives, India has retaliated with precision. In a decisive response, the Indian Armed Forces launched overnight strikes on 9 key sites in Pakistan and Pakistan-occupied Kashmir under Operation Sindoor. Following the operation, military officials briefed the media, stating that the strikes were a measured and proportionate action aimed at eliminating terror hideouts. Take a look at this special report for a closer analysis. On May 7, 2025, between 1:05 and 1:30 a.m., the Indian Armed Forces executed Operation Sindoor, striking 9 terror camps, 4 in Pakistan and 5 in Pakistan-occupied Kashmir. The operation, a joint effort by the Army, Air Force and Navy, was the first tri-services mission against Pakistan since 1971.
Our intelligence monitoring of Pakistan-based terrorist modules indicated that further attacks against India were impending. There was thus a compulsion both to deter and to preempt. Earlier this morning, as you would be aware, India exercised its right to respond and preempt as well as deter more such cross-border attacks.
The missile strikes targeted facilities in Muzaffarabad, Kotli, Bhawalpur, Rawalkot, Chakswari, Bhimber, Neelam Valley, Jhelum and Chakwal, all areas long suspected by intelligence agencies of harboring terrorist camps. These sites were believed to be affiliated with Lashkar-e-Taiba and Jaish-e-Mohammed, 2 terror groups responsible for multiple attacks in India over the years. Colonel Qureshi said that the operation marked a shift in strategy.
पाकिस्तान में पिछले 3 दशकों से टेरर इंफ्रास्ट्रक्चर का निर्माण हो रहा है। इसमें रिक्रूटमेंट, इंडोक्ट्रिनेशन सेंटर्स, ट्रेनिंग एरियाज व लॉन्च पैड शामिल थे, जो पाकिस्तान और पाक अधिकृत जम्मू कश्मीर POJK दोनों में फैले हैं।
Operation Sindoor was launched by Indian Armed Forces to deliver justice to the victims of Pahalgam terror attack and their families. 9 terrorist camps were targeted and successfully destroyed.
The operation's name, Sindoor, resonates with many as a tribute to those lost in the deadly Pahalgam attack, particularly women. After the strikes, Pakistan claimed attacks on their military posts. India's Press Information Bureau debunked these as fake. On the border, civilians were killed in Jammu and Kashmir due to Pakistan's retaliatory firing along the line of control. India remains on high alert. And joining us now is Lieutenant General Dr. Subrata Saha, former member NSAB and GOC 15 Corps. Thank you so much for your time this evening. We'll cut right to the chase, sir. I know that time is of the essence. Your assessment on the strategic significance of Operation Sindoor in reinforcing India's stance against cross-border terrorism.
I can hear you, but not the anchor.
Okay, sir. My name is Sanjana. I hope you can hear me right now.
Yes, please.
Yes, sir. Thank you so much for your time. I'm going to cut right to the chase. I know time is of the essence. So, your assessment of the strategic significance of Operation Sindoor in reinforcing India's stance when it comes to cross-border terrorism.
Okay, so Operation Sindoor, as you know, has had many fuss. And I think of them, most significant is this is the first time that we have hit targets across the international border into the state of Punjab in Pakistan. This is the first time that we have done it. After the Uri attack, we had for the first time crossed the line of control and hit terrorist launch pads. After the attack in Pulwama, we had gone across and attacked targets like the training camp, and this is the first time that we have chosen to go and attack the terrorist headquarters of Lashkar-e-Taiba, which claimed responsibility because the Resistance Front, or the TRF in short, is nothing else but a mutation, if you will, of the Lashkar-e-Taiba. And so the headquarters of the LET, Lashkar-e-Taiba at Muridke, was hit. And the Jaish-e-Mohammed, which had claimed responsibility for the Pulwama attack, their headquarters in Bhavalpur, I can see on the slide which you have put on your screen, was also attacked. These are both in Pakistan, Punjab. So this was a first, and it was done. Why was this done? Because despite these counteractions that India took in the past, Pakistan had not dismantled its terrorist infrastructure, and it refused to budge from its, concept that it will use terrorists as strategic assets against India. So there was a requirement of doing something, more significant than what was done in the past. Second thing is, both during the Uri and Pulwama, well, it was horrible and it was wrong, but they were attacks against, uniformed personnel. This time it was a horrific, barbaric attack against, individual unarmed civilian people, helpless people, and the manner in which the targets were picked up by the terrorists. We have all seen it on multiple channels, and the way they were, targeted. And just as well, the operation has been named Sindoor. We all understand the significance of Sindoor in India, and it has been so named because of the way the targets were picked up and the way they were, horrifically killed in the presence of the women, in the presence of the women, the wives of the people who were killed. So it is, I think, an appropriate revenge, significant to the name of the Operation Sindoor. So all in all, not only that, if you see the message both during the press briefing as well as the press release at 1:44 a.m., it was brought out very clearly that our response has been very measured, it has been very focused, and it is non-escalatory, with a very clear-cut, message over there that we have not hit military targets. It was more to tell Pakistan that should you retaliate, we will be coming after your military targets, military installations next. And what was not stated in the message is, if you continue to go down that path, the next will be your economic targets. So it's very, very clear that given the state of Pakistan and given its fragile economic condition, given its political condition, if India chooses that path, or if it is compelled to go down that path by Pakistan, there will be a huge price will Pakistan will have to pay. And
sure. So then let's for a second also look at the nationwide mock drills. We're seeing something in Mumbai happening as we speak. How do these nationwide mock drills now complement Operation Sindoor in enhancing India's preparedness against these kind of cross-border threats and terrorist infiltrations?
So that's a very fine question which you are asking, because it just so happens that the mock drills that have been ordered by the Ministry of Home is coinciding with the manner in which, or the timing in which Operation Sindoor has happened, because one can expect a retaliation at any time. And I would urge my countrymen, my fellow countrymen, that it is not just these mock drills alone. We should be prepared for a much wider, kind of response, because these people are capable of anything. And we are aware of the sleeper cells that the ISI tries to maintain in India. So it is quite capable of activating these sleeper cells, at least some of them, to cause some kind of damage to our country. We have seen the way they have caused harm to unarmed civilians, helpless civilians in Pahalgam. All through this morning, early morning onwards, we have seen the way they have intensified the cross line of control firing and caused both fatal and non-fatal casualties across the line of control in the area of Punch and thereabouts since the morning. And all these casualties are civilian casualties. So they are reckless. So they are quite capable of anything. So one should expect, and whether it happens or not, we should be prepared. And it is a time for all the agencies, security agencies, intelligence agencies, whether it is the state police, central agencies, and the citizens together to work besides the mock drill, supplement it with all the other, at the end of the day, if any terrorist attack anywhere in the country, actually the first responder are the citizens themselves. So therefore, it is the mock drill plus any other, measures which are to do with security. For example, if you see an unidentified object, one must be very careful, report to whosoever is the nearest security person to deal with it, and take due precaution so that we are not found wanting, and we should be able to save all possible, and unnecessary casualties to the people at large.
Right, sir. Lieutenant General Dr. Subrata Saha, thank you so much for your perspective and insight. We'll continue to come back to you for more, for anything that we see developing on this story. That is our top focus today, which is Operation Sindoor. And amid all of this, the country is gearing up for a nationwide mock drill. The exercise, aimed at improving national security preparedness, will test first response capabilities in case of any hostile situations. Sources have told NDTV Profit that the Mumbai police have convened a high-level meet in the matter, which will be attended by officials of NDRF, NCC and your armed forces personnel. But I'm now being joined by my colleague Tushar, who is currently at the Cross Maidan in Mumbai, where we are expecting to see a mock drill, or I think it's already underway. But Tushar, let me quickly toss over to you and give us a sense of what's happening on ground.
IPS, Sanchalak Nagri Surakshan Dal.
Good evening, Sanjana. So yeah, we are at Cross Maidan in Mumbai, in South Mumbai, and the mock drill has actually started here. So far, we have seen a fire incident being stopped, about some mock dead bodies getting moved from the location, as well as a person carried from the top of the building behind me down a wire, down a zip line on a stretcher, coming down all the way to the point. If my camera person can actually focus, he'll show you actually behind the building where all the it is happening. There's actually an ambulance which is actually taking away all the injured that are in the place. All the coordination is being done by NCC cadets. You can also see there's a fire at the background which has now stopped, which actually is raining right now. So essentially all of the mock drills is actually in works. We'll actually keep on watching as it happens right now.
Right, Tushar, and give us a sense of what we can expect to see through the day. Has it just started? And also about the involvement of civil defense. Let's remember that this is actually the second time since 1971 that these mock drills are in fact taking place.
So the civil defense mock drill has been, for the first time, was actually framed in 1968. It was first done in 1971, where blackouts happened in Bombay, and then Bombay, now Mumbai. What we can expect now, right now, is preparedness for aerial strikes, land strikes, as well as water-based strikes.
We'll come back to you, but this is the mock drill taking place at the Cross Maidan in Mumbai as we speak. We'll continue tracking the rest of the cities in the country that will be conducting these mock drills and bring you the latest developments. But let's shift focus and take a look at what's happening in the national capital. In the wake of these strikes, the government has been operating at full throttle. Prime Minister Narendra Modi chaired a cabinet meeting hailing Operation Sindoor as a matter of national pride. Meanwhile, Union Home Minister Amit Shah held a high-level meeting with chief ministers of border states to coordinate efforts following India's retaliatory strikes. My colleague Aishwarya Jain bringing us the latest updates. Aishwarya, over to you.
Well, in the morning, it was Prime Minister Narendra Modi who chaired the CCS, which is the Cabinet Committee on Security, the highest body who takes care of the national security, after which Prime Minister also chaired CCEA and a full-fledged cabinet. The sources of the cabinet had told us that it was the cabinet colleagues of Prime Minister Narendra Modi who lauded government's efforts of operationalizing, the entire Operation Sindoor, and how there were successful strikes in Pakistan and the POK region as well. Apart from it, it was later Prime Minister, after chairing those two crucial meetings, arrived at the Rashtrapati Bhavan. Prime Minister Narendra Modi briefed President of India, who is also the Supreme Commander for Indian Armed Forces, and these are some protocols that usually we see whenever Indian Armed Forces conduct any operations, then Prime Minister goes to.
And in the aftermath of India's strike on 9 terrorist facilities, reports around aircraft losses inflicted on both India and the Pakistani side have been filling the news. My colleague Shiv Arur brings you a ground report straight from the village along the LOC in Uri, capturing the information.
We're trying to make our way from Srinagar to the forward areas. Most of the routes are completely cut off from the Shiri road, which leads behind me towards the Uri sector, is completely closed. We've in fact been turned back. We'd like to get as close as possible to be able to report some of that damage on the Indian side and India's response, obviously without any operational details whatsoever. But on NDTV, we also want to put the spotlight on what's happening in the air. There are multiple reports coming in of aircraft losses. We will only, of course, depend on authentic information. The Indian Army statement and others are being looked at as the only pieces of authentic information right now, after a flood of misinformation that has come in from the Pakistan side and continues to be so for many hours and counting. At this point of time, the Indian Army press conference, the statement, the PIB statement, the Ministry of Defence tweet are the only official pieces of information from the Indian side that we can go on. Military losses are normal. They can always be accepted whenever there's any kind of a big escalation, but we will report on those only once there is a confirmation. It seems likely that aircraft losses have been inflicted on both the Indian side as well as the Pakistan side, but we will wait until there is an official confirmation on either before reporting them. Suffice it to say, however, that when India decided to conduct these military strikes into Pakistan, asset losses included including fighter jets being shot down, is procedurally factored into, an acceptable loss scenario because military operations are extremely risky. There is always the possibility, in fact, the certainty of escalation and retaliation, and therefore losses of this kind, are not unforeseen. But we, of course, will depend on authentic information before reporting on any of those.
Thanks, Shiv. We'll continue tracking those stories and the developments coming in from the line of control. And we also spoke with Tara Katkartha, National Security Council Secretariat, regarding this. She said that India acted effectively within their self-defense rights. Let's listen in.
But in terms of the attack, see, you are well within your legal rights. Under any international convention, you have the right of defense against terrorism. You have the right of defense per se, self-defense. But terrorism is frowned upon by all international conventions. So you are very well within your rights. And what you've done, as you pointed out, is you haven't hit civilians. You've hit only a very specific, which we've asked time and again. We've asked Pakistan to close these very sites down. So it's not as if it's a big surprise, or it is. They cannot today turn around and say, oh, that's a civilian site. Sorry, those sites were shared with you. So that is one. Number two is the fact that we've said these are non-escalatory. We don't desire a war. And that is, I think, one of the central messages that we've sent out, that this is everybody, the whole world knew that if you attack us in this terrible attack which occurred, you can't but not retaliate. What kind of a country would you be if you didn't retaliate? So your own, in terms of, since you're an economy channel, your strength as a country is not just economics. It's also what you do to protect your citizens and your business and everything that you stand for. And we've just said we will protect this. We will protect our country, which means you're a much stronger state than you were once. That, I think, is the central message.
And let's shift focus now to how the markets responded today. Indian markets ended cautiously and mildly volatile. The NSE Nifty 50 and BSE Sensex erased losses in the second half to end slightly higher. Harsh joining us with a wrap of all of the action.
So markets had quite a muted move in that sense. Nothing adverse in a big fashion. We were up just about 0.1% on the Nifty. So fairly cautious view, but nothing dramatic. And that's the one key positive that I would take away from a day like this. In terms of stocks and sectors, India-UK FTA was the key piece which dominated the way in which individual stocks and sectors moved. Textiles was one such play, some fabulous moves in counters. The other one was the auto space, which was a top sectoral gainer, but you had some big movers within that. You had a Tata Motors, which moved up 5% plus, and you had something like a Samvardhana Motherson also, which did fairly well for itself. So all export facing, and Tata Motors, of course, the reverse, import facing, and enabling the Indian consumer access to those cars. So that was one pocket. The other one was defense, fairly muted, was the top sectoral loser of the day. Pharma too was muted on the back of commentary coming in from the United States. So those were some sectors which moved. The banking index largely in line with the Nifty, and no major moves here or there with regard to the financials and the banks. So that's how it played out. IT also buzzed a little bit on the back of the India-UK FTA, again one of those beneficiaries. Now let's talk about the mid and the small cap, because the bulk of the action was there. 1.5% plus on both of those indices, so fair bit of traction within the Nifty mid cap and small cap index. So the broader end did fairly well for itself, and therefore overall we've had a solid reaction to everything that's played out, both on geopolitics as well as on trade.
And 14 rounds of negotiations, and 3 years later, India and the UK have signed a landmark free trade agreement, or an FTA, and India's leading export segments, including apparel, auto components, carpets and marine products, are set to benefit the most. Mihika joins us with what this deal means for the sectors that will be impacted.
Now, in terms of what will India get, one is tariff-free access. Labor and tech incentive sectors also benefit the most, and it also gives a boost to exports across key sectors. Now, if you had to just look at how India and UK's import-export data pans up in terms of India's share in UK's imports in FY24, at the top of the list you had hides and skins 7%, textile and clothing at 6.6%, footwear stood at 4.2%, metals at 3.4%. You had fruit and nuts that came in at 2.9%. Other mentions are also chemicals, minerals, machinery and electronics, as well as fuels. In terms of how the free trade agreement has changed the duty scheme, in terms of products, you had animal, vegetable oil and processed foods, which had up to 20% in duties. Now, this has, under the FTA, it's 99% of these tariff lines are at zero duty. In terms of industrial goods, transport and auto, leather, footwear, electric machinery were the top three kind of sectors that had a duty range of 14 to 18%. Now this has become zero trade under the FTA. You also have the headgear space, you have the wood, paper space, minerals, chemicals and mechanical machinery. So if you have to round it up and see which sectors get impacted, in terms of the positives, you have textiles, auto parts, IT services, pharmaceuticals, gems and jewelry, leather, engineering goods, shrimp exports, organic chemicals and defense. In terms of what could see a negative reaction, you do have the auto pack and alcohol beverage manufacturing companies.
And actually talking about auto, this sector may actually face the biggest impact from this trade agreement. And to explain how exactly it will change India's auto sector, Tushar has compiled this report. Tushar, over to you.
One of the key beneficiaries of the India-UK FTA will actually be the auto sector, because the auto tariffs actually been slashed to 10% from over 100%, but with a certain amount of quota. At this point of time, let me make it very clear that we don't know what the quota is. More fine print is has to emerge. But this actually, the duty-free structure will be on the imports of ICE vehicles from the US is limited to a predefined quota. The duty-free quota on EVs is limited only to a few thousands. No out-of-quota duty reduction for EVs. Out-of-quota duty on ICE vehicles will be reduced gradually over a period of time. That will actually insulate India's auto industry from imports that may come from the UK. Likely winners are already emerging. Tata Motors is clearly the winner, because of its JLR factory. Remember, JLR makes the Range Rover range of actually SUVs in the UK. That the prices of those cars will reduce when they come to India, almost reducing by a half. Mahindra is set to have a minimal benefit as far as we can see right now, because Mahindra has already disclosed its plans to actually export its electric vehicles to Europe. The UK may also open. The company has not commented on that fact yet. Minimal impact to negative impact can be seen on Maruti Suzuki as well as Hyundai. They do make cheaper cars under the rupees 20 lakh price bracket, because most of the car imports that become cheaper from the likes of Toyota, Nissan, Mini Cooper, Rolls-Royce and Aston Martin cater to the luxury segment. All these cars are made in the UK, so they may not come below the 20 lakh rupees price bracket where Maruti and Hyundai function, or most of the models are. But the pricier models, which are the SUVs, which are priced above 20 lakh rupees, like the Alcazar and other models that may come in, may see some pressure going ahead. The biggest gainer, so to speak, would be the auto components industry. The company, the space actually was dealing from the impact of from the US tariffs, 25%, which came into effect on 3rd May. They will see a big fillip when the UK FTA deal comes into effect.
And Tushar brought us this other story with Bengaluru-based electric vehicle manufacturer Simple Energy announcing plans to launch its IPO in the 2nd or 3rd quarter of FY27. Now, they're targeting to raise 3,000 crore rupees, and this move marks a key milestone in the company's ambitious roadmap towards positioning itself as India's rapidly growing electric mobility sector. Now, according to the company, the funds raised from this IPO will be used to expand Simple Energy's manufacturing capacity, as well as strengthen its pan-India presence. These plans also align with the government's broader objective of achieving 30% EV penetration in new vehicle sales by 2030. And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hi, thanks so much for joining in. You're watching NDTV Profit's ongoing coverage of everything that you've heard since 1:30 this morning, 1:44 to be precise. And you've heard several updates from the government, from the armed forces. Hiral Dadia is with me. My name is Alex Matthew. And joining us to talk about markets, to talk about India's response, and a lot more is Vallabh Bansali, who's the founder and chairman of Enam Holdings, requires no further introduction. Vallabh bhai, thanks so much for taking the time.
Yes, sir. Thank you for giving me the opportunity.
No, it's our pleasure entirely, sir. Your response, and let me contextualize this a little bit for our viewers. You've seen so much in markets and in this geopolitical tension that has not gone away. It's been bubbling. And it's been under the surface and it keeps coming up. This response in the context of everything that you've seen over the last 3.5, 4 decades?
So India has had very interesting neighbors. So this is our, like a conflict. And we have had to deal with it. It is amazing to see that how China at some point of time chose a way to grow. How Bangladesh after independence chose to grow. And how Pakistan unfortunately got waylaid by its army, militants, etc. And this is something that, you have to live with a cantankerous cousin or a sibling is that kind of situation. And though they got defeated in 1965, in 1971, in 1999, they received very powerful responses to acts of terrorism, particularly in the last 10 years. The memory of 1948, where, we don't want to go back into that. Since you mentioned historical perspective, I'm just raising it. It does not elude them. And it suits them because by keeping some kind of attrition going, army is able to justify, militants are able to justify. And it's unfortunate. And therefore, until the people of Pakistan adopt, embrace, and, are ready to sacrifice to establish thriving democracy in their country, just see their own, East Pakistan, how much it has progressed. Today, its per capita income is on par with India or shade better, depending upon many things, But how much has it progressed? But the people of Pakistan cannot see that. They've been so blinded by or so